ถ้า those are under pressure. We had some headlines crossing as well from President-elect Trump over the weekend. But essentially what he wants is for BRICS companies, or countries rather, to commit to the US dollar. And so that is leading to some of those currencies being under pressure. Changing on, of course, quick look ahead to what we've got with China futures today. Actually, we're looking for some gains. So you've got those PMI readings. We've also had those earnings as well coming through, Dave.
Yeah, out of Meituan, we'll see what reaction will be later today. I mean, it's worth noting that the stock fell quite sharply on Friday in the U.S. session, although it was a truncated session. And of course, we reopened after being shut for Thursday. So split the difference. We did see losses, though, in Hong Kong. So we'll probably see that catch down is my 50-50 guess, but let's see what happens with that. Now, as far as the PMI numbers go, so we have the Taishan numbers coming out this hour. Watch for that very closely. CGBs are very close, if not already in certain cases, but the yield itself in a 10-year is getting very close to record lows. Call it 2% on that. So stocks to watch, we talked about Meituan, New Worlds, of course, new CEO. Intel, watch it very closely. A couple of sectors to track as well. So property numbers, and Min will get to the details of this in a moment here. So the sales for the top 100 developers for November actually fell 7%. Casinos, encouraging set of numbers there on the back. This is a report out of CCTV that China will be tightening scrutiny over today.
Yeah, as you mentioned, though, the PMI readings, one of the key watch points ahead of the private ones that are going to come up later in the hour. We had the official figures on Saturday. They showed that gradual improvement in the economy after, of course, the broad stimulus package as well that sort of helped reverse months of this morning with us. And Min, just break down the numbers for us.
Yeah, so we got a second month of expansion on the manufacturing PMI. It came in at 50.3. The previous month was 50.1. But bear in mind, we typically do get a bounce in November of about 0.2 to 0.3 points because October was a shorter working month. There was a Golden Week holiday. So if you strip away that seasonal fluctuation, you can see that actually the economy is not really gearing up that much on the manufacturing front. And then look at the non-manufacturing. That came in at 50, missing expectations. That's at the threshold between contraction and expansion. Services PMI was largely unchanged, but you look at the construction PMI, that saw an unexpected decline, the first time since February of 2020. Look at the other sub-indices as well. The employment gauge as well, deepening contraction, suggesting that factories are still not very willing to hire workers at this time. And the input and output price gauges as well declining, showing that the deflationary pressure is still at play here.
In terms of the new home prices in particular?
Yeah, so we got the home sales data, preliminary data of sales from the top 100 biggest developers in China, and in November declined by 6.9%. That reversed the gain that we got of around the same magnitude, 7% gain in October. And if we look at the broader time horizon, it does look like we're starting to see that October number could be an outlier, bucking that 16-month end of red bars, the decline, double-digit declines that we've been seeing since June of 2023. Bear in mind the November number, I think the encouraging sign there is that that bar is very short. So it's the first single-digit decline that we have seen since June of 2023. So very modest recovery, a bit of a bumpy road there. And I think it really reflects the big challenge that Beijing has in ensuring that there is a sustainable recovery in the housing sector.
Things were tracking. Here. So at about the opening bell, we're looking at gains across the board. Nikkei's up, Kospi's up. To Belt's point earlier on, Taiwan, Korea were actually the standouts as far as the PMI numbers are concerned. And I think the reason I mentioned that before we get to Meituan is our guest out of State Street in about 10 minutes or so is bullish U.S. equities and also bullish Taiwan is the only market that is overweight as far as Asia goes. Speaking of, and really the clear set of earnings there, Meituan, revenue up more than expected in the third quarter. Another sign of this gradual recovery that is starting to take shape. Let's bring in Charlotte Yang, of course. She's with us here on set to talk us through these numbers. Charlotte, yeah.
Yeah, so the third quarter results from Meituan has come really stronger than expected. And especially, analysts like how we're seeing the resilient demand for the food delivery, and also how the company is showing accelerated monetization efforts. But with that said, the guidance for this quarter, according to analysts, has been weaker than expected, especially in terms of like Insta shopping, which they say could be hurt by medicines because given the high base from flu last year, and also with the food delivery could be slowing due to lower order frequency given the weather. But with that said, the company is known for giving more conservative outlook. And we did see that for the ADR shares in the US, even though it's lightly traded on Friday, the shares did fell 7%. So we could be seeing some profit taking today as well, given the stock has been the best performing Chinese tech stocks listed in Hong Kong this year, for example.
Yeah, and it's now the heaviest weighting on the Hang Seng Index, Meituan. So what do you think that means for broader sentiment today? I mean, we had quite a big drop in the stock at the ADRs. Does that sort of set us up for a bit more weakness, or do you think that today, given we've got those PMI data, that even if you looked under the hood, they're a little bit better, but still, positive or negative outlook, I guess?
I think for investors, if we given Meituan as the last report for the China internet, so far we have seen a lot of reactions. For example, for JD, the results has came pretty. It's not that bad, but investors have decided to take profit, especially for the stocks that are outperforming. So I think what this shows is that it's more about what their guidance is for this quarter, versus even though you have like strong results for September, but investors have moved on, and especially for how consumption recovery will be, and more importantly, I think it's not just about how single company says, but more about what Beijing does in terms of stimulus.
All right, that was Bloomberg's Asia equities reporter Charlotte Yang there. And still ahead, we're discussing, as you said, the markets with State Street and their view at that peak of Taiwan in particular. But of course, interested to hear what they're going to say about chips, given you've got that tariff risk coming into view as well. That conversation, though, is next, and we're going to be breaking down China's latest economic data and what it means for its recovery. We'll have analysis from Maybank Investment Group later this hour as we look ahead to the market open, and we are just seeing futures there a little bit in the green. More ahead. This is the China Show.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. You're watching the China Show. Going into the open today, it's the first trading session of December, and typically this is your Santa Claus rally. Historically speaking, third best month for global equities, 1.62 on average for December. The U.S. futures bottom of your screens. The reason I bring that up is we're now, I think, at 52 record highs this year on the S&P 500. We could get more depending on what we get this week out of some of the jobs numbers coming through. We have November jobs print on Friday. But before we get to that point, just a whole flurry of Fed speakers, including the chairman himself. Jay Powell is set to speak ahead of that rate decision, of course, in about 2 weeks or so. But yes, U.S. exceptionalism, I guess, is very much on the mind of investors right now.
It's going to be a really interesting week of eco data from the US, because I think what Jay Powell says, of course, about the outlook around inflation, the job market as well, is going to certainly be a driver of what happens with the dollar and treasury yields. But then also what the jobless figures actually tell us.
Yeah.
If the market is still looking strong, what does that mean around the outlook for Fed cuts next year? And a further reduction is going to be sort of taken off the table. But let's get more on that now. Bring in Ben Look. He's senior multi-asset strategist at State Street Global Markets. And you've still got actually a long US dollar call. Is that right?
Yes. So for now, we still like the U.S. story as a whole. Very simply, on the growth side, it continues to be basically the best developed market out there. On an earnings front, the earnings season has, I would say, almost passed now, but we're still seeing 70% beats in terms of U.S. equities. And when you actually compare that to, let's say, the rest of the world, which is only at around 50%, you continue to see why there's still this very, very good, strong hype around still buying into U.S. equities. And last but not least, I think in terms of the rate cycle, in terms of inflation, in terms of the jobs numbers, all of which basically asks the question of, does the Fed really need to cut rates aggressively? And we don't think that's the case, which is why we still actually like that dollar story. And really that dollar story is more of an impact, I think, for ex-U.S. equities, whereas I think U.S. equities can still do well.
Yeah, that's one of the biggest changes, I think, to your strategy from the last time we spoke with you was you've really taken some exposure off the table as far as EMFX is concerned.
Yeah, so I think we sort of started to trim, I would say, prior to the U.S. election. But then I think what we are now seeing is right now, I think price actions haven't actually been that detrimental to emerging markets yet. I mean, if you look at how EM bond yields have moved, or even EMFX, I mean, even when we had the days where we actually saw the President Trump announcement of potentially raising tariffs for Mexico and Canada, I mean, there were initial knee-jerk reaction for the MEX to be lower, but after, let's say, a day later, we haven't actually seen that big of a move. So I think a lot of that right now is not really priced in for emerging markets yet. The good news is obviously positioning has been a little bit more unwind now. Valuation is attractive, but I think the outside external risk remains to be this Trump presidency being a very big uncertainty, and obviously how that actually moves U.S. yields, which is another big driver for EM. So we actually trim basically EMFX and EM bonds and also EM equities all back towards neutral now.
And actually over the weekend, we heard from President-elect Trump talking about the BRICS countries, and he wants them to be committing further to dollar use, because there has been that sort of de-dollarization play over a sustained period now, sort of led by China and Russia. But do you see that having any sort of bearing on trading around EM currencies as a whole?
I think it's still part of its negotiation tactics for now. I think it's obviously trying to understand and weighing between what basically EM wants to do, which is they still want to have currency stability at the end of the day, because you need to have stable currency in order to basically have sustainable portfolio flows in the long run. So if there are ways, let me put it this way, that EM can satisfy and actually make the Trump administration be less of a target for them, I think they will do it, because that will actually minimize volatility, allow them to get back on a better route, at least going into the next 4 years. But I think in the near term, the sentiment remains to be quite low. We are, at least from the data that we see as a custody bank, we continue to see that institutional investors continue to be aggressive sellers of every asset class in EM, regardless if it's FX, local currency, sovereign bonds, EM equities. They're basically all selling post the U.S. election.
Right. And when consensus is consensus, that the only game in town is the U.S. market, it's useful to look at the risk. What is the risk to this U.S. bullish story?
I think the biggest risk is positioning. Okay. I think what we see from our data, at least, is that it's been close towards what we consider as a maximum overweight over the years. I mean, it sounds like a broken record every time we talk, right, David? I mean, every time I come in, it's like, oh, we're long US, and that's what most institutional investors are doing. It's paid off, exactly, right? It's something that price actions have justified basically the fundamentals, which is why they still continue to do it. So I think that's obviously a biggest risk in terms of what we see. The other thing right now I still see is really the subdued volatility. Running to the election, we've seen that volatility higher, but post the election, because of obviously the very good traction that everybody is expecting from the new Trump administration, that's actually pushed volatility again much lower. I don't expect that to continue, at least going into next year.
Let's talk about what you are constructive on, though, and that's Indonesian-denominated sovereign bonds and the currency generally, and then also Taiwan over other markets in Asia. But maybe just start off with the Indonesian rupiah then.
Yeah, so what we're doing, at least on the EM side now, is instead of doing direct dollar exposures, we're just going to do relative value trades going into next year. We just think that's an easier way to hedge the volatility. And right now, what we have actually looked at very simply is when we look into Indonesia back in the last decade has been one of the most sensitive bond market when it comes to rising US yields. And that's because they had a very high foreign ownership. Their rates was obviously very much geared and sensitive to US yields movements. This time around, things have improved a lot. The foreign ownership is much less. They're issuing a lot more in local currency as opposed to dollar-denominated debt. So that's obviously helped them a bit. And then last but not least, I think from the flows data that we're seeing is we're still actually seeing decent amount of inflows. Relatively speaking, other parts of EM Asia, we're actually seeing more outflows. So we do see a preference now for investors trying to pick some idiosyncratic stories, and Indonesia seems to be the one that actually people like. Yeah.
And in the equity space, I think Bell alluded to this, it's Taiwan. And why Taiwan? And what does Taiwan have that the rest don't?
Well, very simply, it's still the tech space. As I mentioned, we love the US tech story. It's the most sensitive and correlated towards US tech. It's the biggest overweight in terms of the overall tech sector relative to the rest of the other markets. So that's where we see it. Again, I think valuation is expensive. It's obviously the most expensive one out of many of the other markets. But just from a fundamental perspective, because of how well US earnings are doing, we anticipate that to basically spill over to also the likes of the semis and obviously many other Taiwanese tech to do well as well. So we basically focus on fundamentals, and that's where we actually like in terms of the relative value trades.
And Taiwan as opposed to Korea, I guess Taiwan is more around that AI exposure.
Correct.
Whereas
I think Korea is more of it's a diversified story. There's obviously Korean autos that comes into play. There's also industrials that matters. And that in of itself is also a bit more correlated to the China growth story. So we're not too optimistic on the China growth story yet. So I think if that turns around really next year, then maybe we think the Korea leg will actually do better. But I think to your point, Anna, I think because of the tech space being really AI demand and AI driven, I think Taiwan becomes the natural one for us to focus on.
Right. Ben, fantastic to see you
again.
If we don't see you again, we probably mod. Happy holidays to you, sir, and the team. Ben Look there, of course, senior multi-asset strategist at State Street Global Markets, going into the Monday session. And we're looking at a couple of things in your pre-markets here. So New World resumes trade today, was suspended on Friday. There's a new CEO, Echo Huang, will be succeeding Eric Ma. The announcement coming, of course, on Friday afternoon. Shares are down about 1%. We're also looking at Meituan in the pre-markets today. Should be down and down substantially, down about 5%. There we go. Going into the opening bell. Hang Seng Index, all things equal, this is, of course, the heaviest weighted stock on Hang Seng. As we speak, a 10th of 1%. Despite that, we're still up a 10th of 1% on the Hang Seng Index. Going to the Monday session, which is 8 minutes away. The opening bell. This is the China Show.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Okay, welcome back to shows here. So we're poised to open. Wow, I mean, okay, let's be generous, and it's Monday, and there's a whole week ahead. So we're poised to open higher on the Hang Seng Index. And the reason, by the way, we say that is we'll talk about Meituan in a moment, which reported earnings on Friday. This is, of course, the biggest stock as far as weighting goes in Hang Seng, and it's down 5% in your pre-market. So despite that, we are still, as you can see, still above water on the Hang Seng Index. We did get a stronger fixing, I think, for a 14th or 15th straight day from the PBOC. Dollar China 725.93. We did, I think, finally snap 8 weeks of first weekly loss in the dollar after 8 weeks of gains. So we'll watch it very closely. And of course, dollar yen is a separate story, a related story, which is trading below 150 right now. But we can talk about that later. Analyst actions for you. Flip the boards, please. And what do we have here? So we have Swire Pacific, Horizon Robotics, Luxshare Precision. Those are the calls. And I think we also talked about this, Bell. Not sure you want to add to this, but also the Meituan story on this, or if you want to talk about some of these things too.
Oh, yeah, let's talk about, Horizon Robotics. That's an interesting one because they had their listing back in October, and we've actually seen a series of upgrades, CLSA, Morgan Stanley, Goldman Sachs as well. That is one of the autonomous driving software names to watch, Horizon Robotics. I'm sure we hear a lot more about it. What else we want to talk about? Yeah, Meituan, let's get to that because we actually did get those earnings coming through, and the outlook has really disappointed. So you're seeing that stock trading lower in early trade or pre-trading activity, follows what we had in ADRs, but still we've actually had some analysts coming out and upgrading their price targets. So Goldman Sachs just this morning, they raised it to $200, that's Hong Kong dollars a stock. And then as well, that's a 43% increase. And then ICBC International.
Yeah, raise it to outperform,
but also the new price target, 254. It had been 123.60 previously. So
that's a 30% pop from the current level, if not more. Okay, 160. And this is really, I guess this goes into the PMI story, which we'll get later on as well. And the subcomponents which are starting to show maybe early signs of recovery, early signs. We underscore that point. And Erica Tay will be joining us out of Maybank later on, of course, to talk us through that she's noticed the early signs of a recovery. Some of the live streaming content on the back of this report out of CCTV, not much there. And going into the opening bell today, we're just to mention as well, US 10-year yield is now up 5 basis points. More ahead. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. You're watching the China Show, and we're counting down to the start of trade here, just 40 seconds away. And it's an interesting session that we're looking into because you've still got the Hang Seng that's green, even though the heaviest weighting on it, Meituan, is firmly in negative territory, looking for a drop of 5%. And there's still that sort of tariff risk that's swirling as well. Trump over the weekend talking about that push that BRICS companies or countries need to commit to the US dollar. There has been those efforts around de-dollarization. We've had some earnings or eco data coming through, PMI, for instance, property prices. Got the private survey just ahead, Dave.
Yeah, 15 minutes from now, the Taishan numbers, which I think when you look at the forecast, 50.6, if my memory serves me correct. Anyway, we'll get the number in a moment here. Certainly some early signs of stabilization, but certainly not anywhere near of us being out of the woods. I mean, the reason I bring that up, and Bell was just talking about the property prices, right? So again, the data from the top 100 developers showed a 7% decline in home sales for November. So that story is going to take some time to turn around. As with the inflation story, which if you really dig very deep into it, those are the 2 core issues which we'll get a better sense from Maybank when they join us, when those 2 things actually start to turn. 50-day moving average in focus on the CSI 300, that so far has held as a short-term support level. At these levels, we're still trading right above those levels. Watch it very, very closely. The other thing I'd point out too, apart from that, is your 10-year yield in China. There's now a 2.01% handle on that. So we did hit 2% back in late September. Suffice to say, when you look at futures, you look at this as well. Effectively, we're trading, if not very close to record lows as far as that is concerned. And why not, right? Given expectations of further easing ahead. Let's have a look at the open in Hong Kong, please, if we can. And as Bell was pointing out, right, despite the drop we're seeing in Meituan of about 3.8%, we are still trading slightly below water right now. We should be down as much more, but as you can see, some of the other sort of offsets are trading slightly to the upside right now. 19.4 right now on the Hang Seng Index. Right, a couple of stocks we're tracking apart from Meituan is New World. So new CEO, I believe after just 2 months in the job, they replaced, of course, one with the other, announced on Friday. Stock was suspended on Friday. Going into that announcement, we now have a lot more confirmation on that as well. We're up 0.5%. We were down as much as 1% in the pre-market. Sans China, this seems to be a story which we'll talk more about later on. So a standout so far on the casino front, you did get a beat as far as the sort of the casino intake was concerned relative to estimates. Kuaishou is a CCTV story, and let me just read it to you here. So China is looking to tighten scrutiny over live streaming content, not company specific, to underscore that as well, but I guess something to consider right now when you look at that space. And Sunac China, we talked about the property story. That's really one of the property developer stories as well. So yeah, Bell, apart from that, it's really about all the sort of macro conversations. And this morning, we don't normally talk about it this time of the day, but you know, given the pain that we saw in French government bonds last week, why not, right? We're seeing that come under pressure today still.
You know what's incredible, Dave, is that you've got some French companies out there now that now have lower borrowing costs than the French government. You know, that just really points to the scale of the issues that are facing officials there, given you've got the far-right leader, Marine Le Pen, really agitating for changes from the government to the 2025 budget. They've already made some concessions. She certainly wants more. But we heard from the French Finance Minister, Antoine Armand, and he says that they will not be blackmailed over the budget. Speaking exclusively with Bloomberg, he still says that they're committed to hitting the government's 5% budget deficit target next year, even after there were warnings that any amendments would cost over $10 billion.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-construction. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
And that was a French finance minister speaking with, of course, our colleague Kylan Conan, and that really led to the weakness we're seeing in the currency today. So suffice to say, the French story will continue to give, not just today, throughout the course of this week, as that sort of debt and political overhang looms large. In fact, the question we have right now, is that actually a bigger issue for markets than it is with treasuries right now? Tune in, of course, chime in on the question of the day if you can. For our clients, you know where to find that as well. And send us your thoughts as we get underway, of course, this fresh trading week. Another thing to consider is this Chinese recovery, which is starting to show signs of picking up, but very early signs. That is the qualifier there. So the PMI numbers, which came out over the weekend, yes, decent, and we'll get a confirmation of that in about 8 minutes or so when we get the Taishin manufacturing numbers set to come out as well to maybe underscore that point. For initial context on where we are in this recovery, Erica Tay, she's an economist at Maybank Investment Group, joining us right now to Singapore. Erica, good morning, and thanks for coming on the show. If I could just ask you your initial thoughts on what the PMI numbers signal to you where we are in this early signs of this recovery?
So the manufacturing PMI came in exactly as we have expected. So a slight improvement from October. And this is to be expected because pockets have already been supported by the pivot in the government's policies that started streaming in September and in October. What was surprising, though, was that new export orders continued to be in contractionary mode, but we expect that to dramatically change very soon, possibly at the next two readings. We expect a huge improvement in new export orders for China's manufacturers because we think that foreign firms are likely to massively front load their orders in anticipation of higher tariffs by the US government.
What does that tell you then, Erica, about the sustainability of this recovery? Because if you're saying that they're going to front load in anticipation of tariffs, well, it's only a couple of months until President Trump is back in the White House.
Yes, you're right. So I think you're going to see things get a lot better before they get a lot worse. But that is also where China's government stimulus would come in handy. So everyone is looking at Beijing to announce a larger fiscal deficit, possibly by March next year. So that will probably filter through to the economy and start to prop up GDP growth just when that front loading effect starts to drop off. So we expect, the government's fiscal spending to be ramped up and focused on the second half of next year. And in terms of growth components, we expect a lot more firepower going towards consumption, especially services consumption, because this is going to be supporting jobs.
Okay, well, Erica, I want to ask you and pick up on that because we had a report early this morning, and I'll just read you the headline. That Shanghai will be issuing consumption vouchers in December. Now, granted, the reason I bring that up is I want to get your thoughts of, do you think this time next year, if not earlier, we'll be talking about the need for consumption vouchers there? Or do we get to that point, do you think?
I think consumption vouchers are really a short-term salve to the issue because, quite frankly, giving people consumption vouchers, it's one-off. What really will help lift consumer confidence is an improvement in the job market, and that we see starting to filter through in last month's data. We expect to see the job market to further stabilize if the government's policies to support corporates improve especially. So I think that will be more lasting support for China's consumption growth.
So in terms of where we're at sort of and in any sort of recovery, do you think we've seen the worst now? Is that fully behind us, or do we have more pain to come given you've got that high level of uncertainty, again, with President Trump back in the White House?
Well, to be very honest, I don't know. So anything goes next year when it comes to tariffs. We've heard from President-elect Trump the threat of 10% tariffs on all Chinese goods. But there's a lot of certainty when it comes to the U.S. trade policies when he comes to office. So I think, there's a wide range of what might happen to China's export growth. So far, I think net exports have been the biggest driver of China's economy. But going into next year, I expect Beijing to really ramp up stimulus to support domestic demand, especially consumption.
Erica, final question for you. The two major issues, the housing market and the lack of inflation, when do you think we get an improvement, a sustainable improvement in both those things?
I think, it's a very long journey. What we have seen is the second order improvement, which is the rate of deterioration in property sales have started to narrow. So I think that is a good sign. But for property sales to completely bottom, I think that can still take some time. I think it's very important that, Beijing has come out repeatedly to say that they're going to put an end to the deterioration in the property market. I think that policy pivot, if it's there to that will filter through to a lot of supportive policies at the local government level and bring about a very slow improvement. But then again, the property pain has metastasized to a lot of different parts of the economy, such as local government finances, such as upstream industrial production. So I think it takes quite a while to possibly steady the ship.
If it's going to take a while to steady the ship, and I guess you could sort of say that applies across different aspects of China's economy, and you've got the threat of US tariffs that looms on a lot of different Asian economies, how do you think we're actually setting up for next year around the region?
So I think Southeast Asia, at least, is going to see over the long term some benefits in terms of MNCs, not just Chinese MNCs, but Western MNCs as well, diversifying their manufacturing bases to put their eggs in more baskets. But I think in the short term, Southeast Asian markets might actually see some short-term pain from the global trade tensions, because if China is unable to sell as much goods as it originally hoped to the US markets, they might then direct some of what they're producing to Southeast Asian markets. And we've seen the impact on markets such as Thailand and Indonesia. So that is really squeezing local manufacturers on their home turf.
Erica, it was a pleasure to speak with you. Let's do this again, well, hopefully sooner rather than later. Have a great rest of your week ahead. Erica Tay there, economist, Maybank Investment Banking Group. And wow, just in time. There we go. The Taishin numbers are out like we planned it. Wow, 51.5. It's a sizable beat over the estimates. It's a substantial jump from the previous one of 50.3. And let me just check my statistics for you so that it's obviously well within expansion territory. And relative to estimates, yeah, that coming in above even the highest estimate, which was at 51 flat. So yeah, there we go. November Taishin manufacturing reading 51.5. So decent set of numbers. And I guess, Belle, this underscores the other point you're making as well in the Asia PMIs read.
Yeah, well, we have the Asia PMIs. This is the private surveys that recap really a lot of different Asian countries, North and Southeast. But we had those coming out earlier today. And if there wasn't just a stabilization, we did actually see a pickup in select markets. And I think it's notable to point out South Korea off the back of those better export numbers we had over the weekend. And also Taiwan in particular, you saw that improvement to 51.5 from 50.2. So again, it's sort of that tech story perhaps that plays into it, and that theme around semiconductors, and maybe the worst of that glut in the legacy ones could also be behind us. We'll have plenty more ahead. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe. We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Wayne World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood.
Hong Kong's New World Development is getting a new CEO. Echo Huang will replace Eric Ma, who spent just 2 months on the job. But is the latest in the builder's leadership shakeup after steep losses that were led by the ousting of Adrian Cheng. He's the son of the family's patriarch, Henry. Let's bring in our conglomerates and media reporter, Shirley Zhao. And Shirley, firstly, I want to say congratulations. This was your scoop.
Thank you.
So well done on this. But talk us through this reshuffle, because of course it's quite sudden. Well, to an outsider, maybe not to someone who's very closely connected to these sorts of companies.
It did come as a surprise for a lot of people, including a lot of investors and observers who are watching the development of the New World Zhang family's succession saga. So what happened was that just 2 months ago, Adrian Zhang, one of the Zhang family's third generation scions, resigned as CEO for New World after the company amassed a lot of debt and reported its first annual loss in 2 decades. So Adrian Zhang resigned and he was replaced by Eric Ma as CEO. And last Friday, New World announced that Eric Ma resigned and he will be replaced by Echo Huang as the new CEO. So we're looking at 2 major leadership changes in a relatively short time span. So that was why a lot of people were kind of surprised.
What does Echo Huang bring to the table?
So Echo Huang oversaw New World's mainland property development and investment, and she's also a CPPCC member for Guangdong province, where New World has a lot of investment and property projects. So we could see the reason on choosing her. So she's got political connection and she has experiences in New World's key market, mainland China.
Let's just get a question on this chart here, because you're taking a look at the market cap of New World Development. It was once $18 billion. It's had a dramatic fall down to $2 billion. It's had really expensive refinancing costs and, lots of problems facing it.
Yes.
Do you think that this is a step in the right direction and we can see that company return to something similar to those levels?
It will take quite a while for the company to return to the level that we saw before. So the analysts who we interviewed said that they believe that Echo Huang is unlikely to dramatically change the direction the company is going. So they believe that New World will continue to sell non-core assets and they will continue to focus on residential development to quickly, turn profit and get more capital. So I think that's what they believe that New World will continue to do. And what Echo Huang will bring to the table is that her experience in mainland China, and maybe she can negotiate with the mainland Chinese government on more, property projects. So I think, that's where she comes as, one of her, strengths.
Yeah. Okay. A whole new world 2.0. Oh, 3.0. Sorry. There we go. Shirley Zhao, thank you so much. Our Bloomberg conglomerates and media reported with her scoop, and Smart Stories up 6% on New World Development Monday morning. You can catch, by the way, for those who want to track the Hong Kong story specifically, Insider's Guide to the money and people shaking up Hong Kong in our Hong Kong edition newsletter. It's out every Thursday, so you can sign up via bloomberg.com/newsletters. Plenty more ahead. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Right, welcome back. Right, three big movers to tell you about. Starting things off in Seoul, Korea Zinc up 30% just after this media report talking about the board will be convening a meeting on Tuesday to decide whether to hold this shareholder meeting next month. Suffice to say, hopes are alive. If you are on that side of the conversation, of course, as it pertains to the stock. Shares were up 11%. I think on Friday, we're up a further 27%, 30% this Monday morning. More on this in a moment. Fast retailing, in case you missed it, remarks out of the chairman as it pertains to their supply. They don't source any of their cotton from the Xinjiang province. Shares are down 4%. Yeah, this boycott, if you will, we'll see whether or not this translates to actual sale to the company. And very quickly, Guangzhou Auto shares are up substantially, over 20% after this agreement with Huawei, up 20% as we speak. So we're off highs of the day on that. And just very quickly, I think the PMI numbers, which came out just early on, again, substantial beats on that, beating every single estimate out there on the private survey. Shares are up on the onshore and here in Hong Kong up about 1%.
Yeah, interesting to see, to the point we just made with the guest earlier, how much of this is sustainable, or how much is this also that story of front loading that starts to come through, given these PMI surveys tend to reflect more of those exporting names in particular. But coming up in the next hour, we're going to be taking a deep dive into China's corruption crackdown, one that, of course, we've been tracking has snagged several senior officials in Beijing. We'll be speaking with a lecturer at the University of Chicago just ahead.
I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
in case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative, and it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to the China Show. Taking a look, wow, the Hang Seng up 1.3% half an hour into trade today. It's a very strong showing actually so far for China equities across the board. There's one sector that's really standing out, and that's consumer staples. And actually, the bottled water brand Nongfu Spring is leading the gains up 7.5%. I'm sort of wondering if there's read across from the China eco data over the weekend. At least we saw some stabilization. I'm not sure if that's why consumer staples are standing out so much. Mark Granville might be able to give more context, but regardless of that, we see pretty much every sector except utilities in the green today.
Well, I'm glad you brought it up. I mean, just to connect, I guess, some of the dots, and perhaps we might be bordering in speculation here, but the data that's come through over the weekend, so we know property is going to take time to turn around. So that's still weak and soft. But things like the Macau casino revenues, which came in above estimates, this Taishin manufacturing numbers, which came in above every single estimate, that's topping. That's also fairly encouraging as well. And on top of that, the Meituan story, while you did get an initial weakness coming through in the stock, it actually beat on revenues too, right? So most things put together do, I think, underscore that this first full month, October and maybe November, that they've managed to put a floor underneath growth, I think, is at least consumption and high frequency numbers. It might be a key take with it. But again, we might just be overthinking things as well. But as you can see, the data's come through quite nicely. And I think going into this week as well, it's really been largely U.S. exceptionalism. So there might be a rotation out of some of the big winners going into really Chinese markets. We'll get more context from Mark Cranfield in a moment. The other story we want to call your attention to is really an extension from last week, right? And as you can see, oat futures that are trading right now in Asia hours are still coming under pressure after borrowing costs in France actually spiked last week. And Bell made a very good observation earlier on that some French companies and some European countries, like Greece, for example, are now having to pay less interest on their debt than the French government. Right, Stoxx 50 futures down about 0.7 to 1%. The other one too is a big macro week as far as the U.S. conversation goes. Ton of data. You have the job report coming through end of the week, and Jay Powell is set to speak midweek. So just watch that very, very closely as we try and form an understanding whether or not the Fed can and will cut interest rates this month. We're off to a good start for the month, 0.6 to 1% to the upside on Asian equity markets.
Good in Tokyo for us this week, Mark. Actually, you've been traveling around a little bit between there and Thailand. But let's start off with what's top of mind for you, because I personally feel like there's a lot of idiosyncratic stories. You've got the French government risk story. You've got the US eco outlook. You've got that China stocks that's doing pretty well. Eco data in this part of the world as well. What's most important for you this morning?
Well, being here in Tokyo, of course, we're very excited by the interview with Mr. Ueda, Governor Ueda, over the weekend. He's really set a fire under this Bank of Japan meeting for later this month. All of the things you just said are all definitely in play as well. But it looks as though Japanese authorities are getting serious about the chance for a rate hike even before year end. There were a number of people thinking it would be in the first quarter of next year. But if you look at the pricing, rates traders are now up to something like 66% odds that they see a hike coming in December, which is very significant. He's really thrown down the gauntlet. So it's now up to other people to challenge and say, this is not the time to go ahead and raise interest rates again. So very significant development. Although dollar yen is a bit higher today, that's really got a lot more to do with the move off the euro. We've seen this knee-jerk reaction, as you were saying about the French budget. It looks like it's going to go to the wire. That's been negative for the euro, positive for the dollar. On the flip side, that's helped to lift all the currencies. As the day plays out, you'll probably see that the nuances of that start to come through, where the euro crosses more come into play than the euro dollar situation. So there is a lot going on, and as you say, also China as well. So what's next?
Well, yeah, Mark, I was going to ask. I mean, I'm not sure when you arrived in Japan, but you probably know that the airport's been busier and busier there, and as the world, hordes of tourists descend in Japan going into the holiday season, the question many people are asking is, do they exchange their money now or do they wait a couple of weeks? How much more strength do you think short term we have in the Japanese currency?
I think it's a medium-term story. I think what you're going to see is a gradual strengthening of the yen over the months ahead, because the Bank of Japan has been relatively slow in raising interest rates. They've only done it twice this year. Looks like it could be a third time. They probably want to get the short-term rate up to something like 1%, which is very high by recent standards in Japan, but it's not globally. It's not a high interest rate, but it does narrow the gap with the other major currencies around the world. So that helps to give the yen a bit of a boost, but it's not probably enough to make the yen become the kind of currency it was 10, 20 years ago. It's going to be relatively stronger, but not outstanding as some currencies have been. So that's a relatively slow burn situation. I think people are getting more comfortable with the idea that the worst of the yen weakness is probably over for now. They probably see, what they want to see is Japanese companies start to change their forecast so that they see the average rate for the yen, dollar yen rate in particular, probably into the 130s rather than the 140s as we had this year. That's all going to play out over a period of time. Of course, in the background, you have the things like the French budget dislocating the euro. Now, immediately, weak euro, because the euro is so strong, such a big part of baskets around the world, it does have a dollar impact. But also the yen crosses and the euro crosses are very heavily traded. So euro Swissy, euro yen, euro sterling, all of those will come into play. As the week develops, we'll probably see more traders emphasizing that the euro should be softer against the other G10 currencies, less so than the US dollar. And that will give the yen the chance to appreciate off the back of that and some of the other currencies. It's a very interesting time because people now need to be much more choosy in how they play the dollar story. It's not simply a question of, I like the US dollar, I can buy everything. It is no longer like that. You really have to be selective. In the short term, it looks like the euro is one of the currencies that will probably lose the most within the G10 space. And then you look at the emerging market world. India just had disappointing growth numbers over the weekend. It could be that the rupee becomes the leader in the terms of the weakness within the EM currencies rather than the yuan, which again is a change and something people have to adjust their strategies to start to take account of that.
You just mentioned the yuan moves there. What do you make of what we're seeing in equities this morning? Because it's really that focus on consumer stocks so far.
Well, I think David nailed it. It's Macau. People love it when the casino story is going well. Every time you see a boost in the casino revenues, the outlook improves for gaming across China, then you immediately usually see a knee-jerk reaction in Hong Kong stocks. If you look at the index that Bloomberg Intelligence runs, it's up something like 6% over the past two trading sessions. That's a pretty good move in the Macau space. So yes, it definitely, the data is important. We still a data beat there. People are optimistic there will be more stimulus coming out of China. But when you see hard numbers in terms of more people spending money in a place like Macau, that translates very quickly into a positive story for Hong Kong equities.
Mark, thanks for the shout out. Mark Cranfield there in Tokyo for us out of our MLive team. Coming up here on the show, we're taking a deeper dive into China's widening anti-corruption crackdown that's really snagged several very senior officials. Analysis coming up next from the University of Chicago's Juan Chen in a couple of minutes. This is The China Show.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Ways on the heartbeat of the tech sector across global markets.
Real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market weakness we saw in the summer was a head fake.
It raises this question. Basically, has the narrative been set?
We are still in the throes of a strong labor market.
The November Jobs Report, Friday on Bloomberg.
Welcome back. You're watching Bloomberg, The China Show. We're taking a deeper dive now into China's anti-corruption campaign. It's ensnared a record number of senior officials this year. It's actually showing no signs of relenting. Min Lo, our China correspondent, is here with more on this. Yeah, and Min, the anti-graft agency has been very busy.
Yes. Well, last week it was very busy. We had the defense minister, for example, confirming that they are suspending Miao Hua, who is the 5th ranking officer in the Central Military Commission, which is the apex, the decision-making body of the PLA. And that came just a day or two after the FT reported that the defense minister, Dong Jun, could be under investigation as well, but Beijing had denied that. And that really shows how sweeping this corruption probe is. What appears to be pretty systemic corruption in the military, given that you had 2 other former defense ministers who were also charged with corruption. That's Wei Fenghe and Li Shangfu, of course, who was ousted just after 7 months in office. And if you broaden out to the wider economy, President Xi has vowed to crack down on a broad swathe of sectors, including pharmaceuticals, energy, financials, the state-owned enterprises. The provincial leaders have not been spared either. And it's particularly pronounced in the financial sector, where we have seen more than 100, financial executives and officials being targeted. If you name all the big banks, the PBOC, the BOC, the Bank of Agriculture, CITIC Bank, China Merchants Bank, all of these companies, they have their big executives being targeted. Some of them being sentenced to death with reprieve. So pretty widespread corruption probe after presidency vowed to catch these tigers and flies, as he put it, more than 10 years ago.
That was Bloomberg's China correspondent Min Min Lo there. Really great roundup or summary of what's been going on. But let's get more on the situation. Bring in Juan Chan. He's political science lecturer at the University of Chicago, and he joins us from Boston. Juan, I wanted to go back to a graphic we just showed there with Min Min talking about or showing the rise that we've seen really steadily each year, more cadres or high-ranking officials essentially being investigated in China. Why do you think we're seeing this increase year on year?
Right. This is not surprising. There is a growing trend, as you can see from this chart, starting in 2018 and 2019. And I think the best prediction, because there are a lot of lack of transparency, going on. So what we can do is to make speculations about what is going on next year. I would say that the anti-corruption campaign is going to be an overarching, crackdown on corruption across different sectors, across different industries. So it's going to show no signs of mitigation in next year, and I think it shows a genuine intention from Mr. Xi and the central leadership to get rid of corruption and also strengthen political control over important government sectors. So I can follow up on that and explain more.
Yeah, no, please go ahead. Yeah, I was going to ask you about that, in fact.
Right. So I would say that there are two objectives of the current anti-corruption campaign. One is, there is corruption. So, Mr. Xi and the central leadership is going to get rid of corruption, especially in those areas and aspects of bureaucracy like the military or the healthcare sector or the ongoing financial sector. It is trying to get rid of corruption and strengthen the centralized control over those areas. But also, anti-corruption campaign has a policy aspect. It has this aim of carrying out certain policy objectives. For example, the reason why you can see there are high-ranking removals of military officers is because right now the center wanted to, given this rising U.S.-China tensions and the growing, the complicating situation in South China Sea and Taiwan, the center want to tighten its grip of power over the military. So it has, policy implications. And if you look at the financial sector, right now, if you look at the financial work meetings, you can see that one of the key objectives is to stabilize the financial sector, and the removal of those high-ranking financial sector officials, state-owned banks, and so on and so forth, is actually trying to strengthen the regulation over the finance and banking industry. For example, when it comes to the issuance of loans, the issue of insolvency and so on and so forth. So sometimes anti-corruption campaign goes hand in hand with certain policy objectives in those sectors.
What's interesting is that it seems like the anti-corruption drive we've had so far hasn't been enough to deter ongoing issues, because if you're seeing more people that are being charged each year, there's clearly a question around deterrence and how much people are being put off by that risk that they could be imprisoned.
In terms of deterrence, we have to define deterrence very carefully. So it's deterrence of what? Sometimes anti-corruption campaign is a way to, let's just take the financial sector as an example. The public announcements of, the indictments of those officials from banking sector. One issue that is included in their allegations is their, issuance of loans to disqualified borrowers and business. This is obviously a response to this very unstable situation that, there are a lot of bad loans that cannot be repaid or refinanced. So that is going to incentivize, bankers, especially state-owned bankers and officials, to be more careful when it comes to issue or refinance the loans with infrastructure projects, or those giving loans to businesses that has a high level of risk.
I guess the flip side of what I'm making that point there around the increasing rise of investigations, you could have also a broader scope of what's investigated as well, or the investigations could be more effective. But what's the risk of having such a high watch on anti-corruption in China? Does it also create a situation where people are afraid of upsetting the status quo?
Right, absolutely. You're exactly on point. So one of the negative consequences of anti-corruption campaign is exactly that local officials lying flat. Those bureaucrats are lying flat, the so-called 懒政 or lazy governance. Because if you do more, you can make more mistakes. If you do less, you're less likely to make mistakes. And also, there are some gray areas, especially when it comes to local governance. Sometimes corruption is a way to grease the wheel. I'm not saying corruption is a good thing, but when it comes to state business relations, when local officials want to attract investment, they want to have appeal to those infrastructure investors and businesses. There are some things in the area right now because they're very afraid of where's the red line drawn? It could be very blurred. So they would rather do something, do less, and do something safer instead of being more proactive when dealing with investors and dealing with businesses. For example, what about having a luxury banquet with a business person? Does that count as some kind of corruption or stuff? So one of the negative consequences, especially when it comes to economy, is that it disincentivizes local officials from taking proactive, albeit questionable measures to grow the economy. And that is a big concern. And I think the central leadership realizes that. And this is a question that needs to be addressed.
Has it made the cost of doing business cheaper for the private sector, let's say?
I think the answer is yes and no. It does make the transactions less costly because there are less kickbacks. Bribery is being strictly banned and being enforced and stuff. So to what extent? To a certain extent, it makes the transaction cost of doing business cheaper. But it on the flip side, it also makes things more complicated because it takes years to develop a strong relationship with a local official. Right now, local officials are facing strong scrutiny and uncertainty. So more cost, who you're trying to dealing with tomorrow, right? So I think it's a yes and no answer.
And so what's I guess there might, to your point, might not be a black and white answer to this, but building relationships is important, if not at the very core of how you do business in China. And to your point, is eating out an extra bottle of Mao Tai. I'm just using this as an example. For foreign businesses that do business in China, for example, or local businesses that have to deal with
investors, the line is pretty blurred, and sometimes because it has such a deterrence effect on the part of local officials, they would rather err on the side of caution, and they're trying whenever it's trying to attract more new businesses, it is going to be very cautious, and a lot of gray area things in the gray area that they risk. And also there is an aspect that because anti-corruption campaign is retrospective, that can go back to your personal history 15 years ago, 20 years ago. So when they're trying to when local officials are trying to advance their career path, they they have to have a clear up their past. They're concerned that they have to avoid any potential risk that is going to hamper their future career advancement. So what happened is that because the lines blurred, and then they are trying to be very careful, that could deter or prevent them from establishing relationship with business people, or especially those people developing new relationship with people they are not familiar with enough. So that's part of the negative consequences we observed empirically at local level.
Juan, thank you for the time. Juan Chen there, political science lecturer at the University of Chicago. Right, plenty more ahead here on the China Show. Lots of big movers in these equity markets as we get warmed up this Monday morning. This is Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells. We can edit the genome. We can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Trading so far for mainland China and Hong Kong equities, and there's really a standout. Well, there's a couple of different standout sectors, but we had high praise for Dave, really, from Mark Cranford at the top of this hour, because he said that you accurately picked why we're seeing such a strong day for Hong Kong equities, and he was putting it down to those Macau gaming.
That was a lucky guess at best.
Don't downplay it. Don't
starved
downplay
of
it.
news, and that was one of the few headlines that came out this morning.
Anyway, point is, gaming revenue beat estimates in the latest reading. So gross gaming revenue reaching $2.3 billion for the past month. So good result, of course. It's a strong signal, and that's possibly why we are getting a strong read across to some of the movers today as well.
Yeah. This next story is actually more black and white, I guess. So this agreement that was signed over the weekend between Guangzhou Auto and Huawei to jointly establish this high-end smart EV brand is really leading to not just, so this is almost unbridled optimism, let's put it that way, undisputed gains as far as that is 21%. BYD Electronics also seeing some gains. In fact, this is a story which we'll unpack later on in the show. Stay tuned for that and more. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Taking a look at what's happening with Japanese equities, because we're just about to go into the lunch break this morning, and actually we're sitting fairly flat right now. The topics, though, gains of 0.7%. One of the stocks or movers to be noting today is Shiseido. We've actually got shares falling by the most or to their lowest level since November 2016. This is a company that's been really challenged, particularly by the outlook in China and the challenges that it faces there. They are actually counting on non-China growth for a profit recovery in 2026, but still they have put out their action plan for the coming 2 years, and they've had to revise their operating profit margin target lower, and so that stock is under pressure today. Question, of course, of how the Japanese yen dynamic plays into also company earnings, and we are keeping a watch on that today. We did see it strengthening. It's given up some of that today with that King Dollar story that's really come through over the weekend, but still the Japanese yen are focused because we had an interview with Ueda over the weekend and signaled that hikes, again, they're still in focus.
Yeah, I think the point of Mark Cranfield, who joined us earlier on in the show from Tokyo, is that the the medium-term outlook for the yen is probably one that is largely stronger than weaker at this point in time, to paraphrase a very complex story. Asia Pacific, we're off to a very good start to the first trading session of December, which is typically very good for risk assets and equities. Third best month historically for global stocks, about just under 2% gains typically on the MSCI All Country Index. That's according to 30 years of data. So as you can see, most sectors are up. And of course, we talked about the consumer, the gains in the consumer space today, consumer staples and consumer discretion, and not so much reflected here, but certainly when you look at the China story, that's really more down to the data coming through out of Macau. So yeah, that takes us straight into the China story, which is, again, more encouraging set of numbers here, I think.
Yeah, well, we had the private PMI reading following the official gauge over the weekend, and it was a strong result, really. We saw manufacturing PMI expanding above the 50 line, and that is gains across the board, because actually the Asian equities picture is really being led by what we see in mainland China and in Hong Kong today. But let's get more on those readings, bring in Eric Ju from our Bloomberg economics team. And Eric, both private and official, what do you make of the numbers?
Yeah, we read number this morning. Actually, it's kind of puzzled. So why Caixin is up so strongly, and it looks like it's not totally in line with what official or high frequency data shows, right? So one explanation which I can think of is probably the exporters. They're trying to front load something, before the tariff impact. So that's I think the most plausible explanation. But otherwise, if you look at official PMI reading the weekend, it's not that strong. I think it's more or less similar to what you expect from the seasonal factors in November. So it's saying, okay, it's still recovering, but it's not repeating the strong, kind of strong rebound in October. So it's saying, probably the initial, sentiment lift.
button topic a couple of years ago, but the fact that he's saying they don't use it, it's sort of, maybe people had already assumed that's to date anyway. So is it really such a significant problem for the company, do you think?
Well, one thing that's really interesting about the sort of public remarks, I think, is that over the last few months, we have seen Beijing become much more reactive or proactive when it comes to these sort of issues. So, for example, in September, we saw Beijing say that they were going to launch this probe into the owner of Tommy Hilfiger and Calvin Klein because they had made similar. And so what we've seen is for the first time, really, Beijing trying to actually use these sort of regulatory probes as part of its toolkit when it's pushing back against this sort of criticism and pushing back against the tariffs and the threats that it's receiving from the US. So perhaps less of an issue about the Chinese consumer and the existential question of survival, but more of a question of whether Beijing increasingly uses this tool to target companies that are sort of commenting in this way and weighing in this way, and those sort of companies risk getting caught in the crosshairs here.
Rebecca, thank you. Rebecca Chung-Wilkins there on the latest here on around fast retailing, right? From one big corporate story to another, and the latest here on the Adani story, and the first public remarks since being indicted here by U.S. prosecutors do show, of course, a fairly combative stance here. Allegedly, of course, $250 million bribery scheme. Asia's second richest man says he expects his empire to bounce back stronger despite those allegations.
This is not the first time we have faced such challenges. What I can tell you is that every attack makes us stronger. And every obstacle becomes a stepping stone for a more resilient Adani Group.
Let's bring in our conglomerates reporter PR Sanjay, who joins us right now out of Mumbai. Sanjay, good morning. And I had to look at the response, and first, I guess, unsurprising that we did hear not just the text but the tone as well coming from the billionaire. I think he mentioned as well, just give us some context here, that this is not the first time they've faced these types of challenges.
Good morning. In fact, that was a very bold statement, and his body language was also very confident. And this is the first time public appearance and remark by Asia's second richest man, Gautam Adani. He was telling that this is not the first time where he faced challenges, and he was clearly referring to two instances in his long speech. One was the protest he faced from green groups in Australia while he was building in the Carmichael mine. That was one, and he was clearly referring that how much he have to pay entirely by the promoters, not from the banks. And second instance was about January 2023, at a brutal attack by Hindenburg Research, and he said how strong the conglomerate has become after the attack, and he could manage to raise for 5 to 6 billion from other investors as well. And he also very boldly made a statement that he could repay the entire money from FPO what he managed to raise at that point of time. And then he slowly referred to very confidently moved to the third important point, which is the US prosecutors' allegations. And he said he would be complying to the all world regulatory guidelines. And he was also telling that they means the persons who was named in those allegations are preparing some legal process which did not elaborate what he's doing. And he's also telling that there are a lot of negative publicity against his group, but he said any obstacle, any these kind of challenges have made the conglomerate more stronger. And he told the audience, who cheering audience, that he will make a strong comeback.
Does this change the trajectory in any way? I mean, I'm sure you do want to, or they do want to sort of push back on these allegations, but at the same time, US prosecutors are probably going to proceed. Is that right?
Not really. This is a developing story, and this is the third instance where the company or the representatives from the conglomerate is telling. If you recall, last week Adani Green Energy has made a detailed statement saying that none of the companies have been named in those allegations, and there's no bribery charges against these companies. And very interestingly, on Friday, last Friday, the CFO of Adani Group, the group CFO, has also made a similar comment. There's no person's name for bribery charges, and they would would be seeking legal recourse. And they also clearly said that they had to scrap $600 million both dollars of Adani Green, but they would be now reviving by mid of 2025, which means they want to send out more confidence towards investors and giving positive sentiments. And we understand that there will be like series of meetings led by Group CFO himself to restore the confidence among investors. So the story remains same and it's developing story, and we have to wait and watch what are the kind of legal recourse the Adani officials, Adani Group executives will be resorting to.
Right, that was Bloomberg conglomerates reporter PR Sanjay there in Mumbai with all of the details of Gautam Adani making his first public remarks since being indicted in that $250 million bribery scheme. But we'll have plenty more ahead. Chinese equities are moving higher, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
We're taking a look at shares of Guangzhou Auto. That is a significant spike there, nearly 20% to the upside at points of the session so far. Would be nearly 24% in the green, which would be the biggest move we've seen on record for the company. But it has sealed a deal with Huawei to co-create a new premium EV brand. Let's get more with our transport reporter, Danny Lee, joining us. And Danny, it's quite interesting. We're seeing this sort of, okay, there's Xiaomi and now Huawei, but smartphone businesses entering the EV space at a time when there's still a lot of consolidation and price pressures. So is this a good move? I mean, it seems like investors think it is for Guangzhou Auto.
Yeah, I think for Huawei, this is their way of having exposure to China's hot EV market. And so for Guangzhou Auto, the investors have responded in kind, up as much as 23% during the morning session here in Hong Kong. But this is Huawei partnering with yet another state-owned automaker in China in order to have that exposure. So this is like one of like 5 or so now that Huawei has partnered with. So, you know, given its tech and given what it is capable of, this is a real boon to someone like GAC, who doesn't do too badly itself with some of its standalone brands, but this is quite exciting for investors, and we have seen the shares respond in kind.
Speaking of a big shift, Stellantis and a departure because of this tussle around strategy there.
Yeah, the turnaround king, Carlos Tavares, someone people who thought could turn around failing automakers, leading Stellantis, which has struggled now for quite some time. He cannot turn around his own company. The board of Stellantis deciding to dump Tavares because of their falling sales, a slumping share price. And so we have seen now that Stellantis pushing out Tavares early. And so therefore, now it sums up just a challenge for some of the big legacy automakers out there. And, you know, given Tavares had presided over a revision of the financial outlook, challenges in US sales, wrong and missteps over strategy. This is a response from the board, losing patience basically over some of the difficult challenges that Stellantis has been enduring.
Yeah, I was going to ask you about Nissan, but I think we can put that in the same boat almost as this losing patience there. Anyway, that's a struggling car makers there. Nissan shares are down a fifth straight day over in Tokyo in the morning session. Danny Lee there in All Things Autos for us right now. As we were talking with Danny there, the big move we're seeing in these markets right now is the 10-year yield in China has fallen now to a record low of 2%. So this is something we've been tracking. And yes, we're here again, touching levels I think last we saw back in September. And unsurprising given the expectations are around how much policy and how long that policy will remain in place here.
Yeah, I mean, it seems like investors really think that there needs to be more on the fiscal front and also possible more monetary policy easing to come in the months ahead, and really about how China can try and withstand that tariff risk. And that's something else that's sort of been coming through the morning session. Yes, we had those headline numbers, and particularly the private PMI reading that came in better than expected. How much is that a story of businesses that are front loading in anticipation of those extra duties coming in when President Trump is back in the White House in January? Chinese solar stocks, one to note as well today. We have actually seen moves in those. That again is around policy, because we have US hiking their tariffs on Southeast Asian exports. So we are seeing those under pressure. Meituan, another stock in the red today. Actually, the third quarter reading was better than expected, but the fourth quarter outlook disappointed investors. That stock actually has been paring some of its losses, but still down nearly 4%.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter, because then I got left alone. And actually, I think out of that period, we started to create better art, because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality, because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Any of us in the room could have a stroke or develop MS or develop ALS, a condition that stops your body from working. We're all at risk of that. And neurology, I'm a neurologist. Traditionally, it's been the field in medicine where there hasn't been many treatment options. And so neurotechnology is having this moment now in medicine where it's becoming kind of the final frontier of medicine, and a lot of excitement, but The challenge with cracking the skull and delivering technologies that way is that the infrastructure is not set up for scale for applications of that technology. Cardiology has shown over decades that you can now deliver millions of stents or pacemakers a year. But so we're translating what's known from cardiac into neuro. And I think we're entering a period where the treatment opportunities for neuro delivered through a catheter into the brain are going to become vast.
DOJ or other authorities
Could face bigger challenges next.
that was going to keep Great World Cup. This is a story
As the economic picture
covering the intersections of Hollywood.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper in the stories that matter with crucial context and sharp analysis. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government.
We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Meanwhile, Trump warns BRICS nations not to replace the US dollar, threatening 100% tariffs if they do. But critics argue this is a confusing stance as the US looks to reduce the trade deficit. The US bribery indictment roils the Adani Group, but founder Gautam Adani says what hurts them makes them stronger. We get more insights on his first public comment since the charges. And while Chinese consumers tighten their purse strings, LVMH's Bulgari brand is looking to India to ease the pain. We hear from CEO Jean-Christophe Babon on those plans. Our top story, French Finance Minister Antoine Armand tells us exclusively the government will not accept artificial budget deadlines from far-right leader Marine Le Pen. That's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. We'll still be open, but not to blackmail.
A defiant French Finance Minister Antoine Armand speaking exclusively with Bloomberg's Caroline Conan. Let's take a look at how European assets are shaping up on the back of that potential crisis in France. Of course, we saw how French yields surged to as high as those of Greece on the back of what's happening in the country. Taking a look at where the euro is standing right now, currently it is down by 0.5% versus the USD. Of course, it is a USD strength story. Not surprising that euro is also under a lot of pressure on those developments. In terms of the futures, the euro futures currently down about 0.1%. Now, France's political crisis could take a dramatic and decisive turn today, with the potential for seismic effects on the country's financial stability and that of the Eurozone. Let's assess the implications with my guest, Ekaterina Bigos, ex-investment manager, CIO for Asia, who joins me from Hong Kong. Ekaterina, good to have you with us. How are you assessing the risk of potential collapse of the government in France?
Look, I think there's, as we see in just the release just early on, I think the government is pretty confident. And the part that gives them confidence is certainly the Article 49.3, which allows the government to bypass the parliamentary approval. The vote of not confidence, it requires, of course, NFP, but also RN to both of them to be against that plan and both be pro changing the government. So I think there's a fair share of confidence that the bill will be passed to some degrees. I think, and if you look at where the spreads are pricing, yes, the spreads have widened, but in fact, it's been driven by the rally in bonds rather than absolute increase in the yields for the French government bonds. If you look at the increase on yields, I think it's been about only 10 basis points, which broadly, I think what matters to markets and to France is the borrowing cost increasing, and ultimately it hasn't been significant. Again, the spreads have widened again because of the bonds rally, not because of the widening spreads.
What could go wrong, though? Because people say the messaging is what's important. And when you take a look at the messaging from the government, there's a lot of pushback. There could be a potential crisis.
I think there's certainly a political instability, and I would say the securities or the French government bonds are pricing that political instability. But ultimately, the trajectory for France and what is important is for France to have a plan to bring the deficit down from 6.1, which is the forecasted deficit, to about 4.4, which is the ambition. And certainly the income they're receiving at the moment, it's not sufficient to achieve that target. And ultimately, what the investors are going to pay for and the positiveness or how the investors are going to receive that is having that plan in place, having that implemented, and certainly being on a trajectory to reduce that deficit. So political instability creates uncertainty, but what is more important, what is France going to do to bring that deficit down, which ultimately impacts the borrowing costs?
So there's still a lot of uncertainty, and you got to wonder how this might just play out in the Eurozone. We already have a Germany that is struggling with its economy. So much uncertainty when it comes to growth potential in all of the region.
Yeah, and I think you have to just look at the broader picture in terms of where the signs of positiveness for Eurozone more broadly is certainly if you look at the fiscal space. Apart from Germany, many of the countries don't have the fiscal space. But we've seen just the news that Chancellor for Germany has proposed about 100 billion investment in German modernization. And this is a positive sign. Again, Germany has been lagging the broader Eurozone, partly because, of course, they've been impacted by energy shortages, but also the competitive industrial sector has become less competitive. So that package being pushed through, and the fact that Germany has the space to continue with that fiscal stimulus is very important for the Eurozone. I think the broader Eurozone, as I said, has less room. But what is important for the Eurozone and where the stance is the ECB needs to do a lot more in 2025, and they have scope to do so. If you look at growth, is much weaker than US. If you look at the inflation, that's decelerating, and in fact is on headline level, is already below the target. So certainly ECB coming in and helping and normalizing the monetary policy a lot faster than relative to where US is going to be able to do in 2025 is going to drive some positive outcome for risk assets in Eurozone.
You talked about how the ECB has the scope to do more. What do you see the ECB doing, and how might this play out in terms of the impact on the euro?
Well, again, I think the euro is coming a little bit into the broader spectrum of where the ECB, on how much can the ECB move. But ultimately, the point is the euro does help the exporters, and we shouldn't forget that about 60% of the corporate revenues are actually from the outside of Eurozone. So weakness in euro is not necessarily negative for the corporate sector. But again, we have to be cognizant not to be too weak. So the Eurozone will pay attention to that. But more important, as I said, they need to look at the growth, which is subdued and is expected to subdue in 2025. And important, the inflation is already below target. They have room to do more. And relative to US, where the inflation is not a target and so the growth is still more resilient, Eurozone and ECB, I think, has scope to stay a lot more dovish. And we do expect that they will cut till mid of, in every meeting till mid of 2025.
Ekaterina, there seems to be a theme developing, and that is one of fiscal troubles. It's the US, it is France, it is in the extended Eurozone. I'm just wondering how this might be the theme in 2025, and how do you play the bond market in Europe and elsewhere in the world, given this developing theme?
Yeah, and I would say fiscal is going to stay the center focus for 2025, purely because, again, not just in Eurozone, but also in emerging markets, there's a few countries that have actually fiscal room. We've gone through a period where fiscal stimulus has been the center focus of helping the economy get out of COVID, but now those limits are pretty high. When it comes to US, I think there's a level of tolerance in which that deficit can go, because, again, of that preference of treasuries by global investors. But ultimately, again, if the US government continue on significant fiscal support in 2025, we do think in some part of 2025 or 2026, investors will show the desire to have a higher risk premium for US treasuries.
Might all these developments make Asia a more attractive destination?
Yeah, Asia, I think in the spectrum, I think what we'll have to look at Asia, they have quite a desynchronized trajectory going forward. If you might look at 2024-23, a large part of the drive from central bank was to curb down the inflation, and that by and large has been achieved. Now, when you look at individual economies in Asia, we need to account for where the inflation is in that trajectory, where the growth is, and importantly, I think this is a third overhang, is what is tariffs going to do to each of the individual economies, and then we expect the policy to react accordingly, but those need to be known, and I think that divergence between the monetary policy will be a lot more pronounced in 2025 versus what we've seen up till now.
You know what's interesting is the high yield market. When it comes to high yield in Asia, it's gone beyond China. In fact, India has been playing a bigger and bigger role. How might your bond holdings in this part of the world look like in 2025 and beyond?
No, I think broadly, and I would say we'll talk a little bit about the high yield and later part, but I think broadly credit for Asia, we have a way into assessing we look at 4 different parts, and when we assess kind of the attractiveness on asset class, we look at macro, we look at valuations of fundamentals, we look at sentiment and technicals. And as I said, from the macro perspective, I think there's a little bit of a divergence across the economies, but broadly, I would say relatively constructive, not as strong as we've seen in 2024. Now, if you look at fundamentals, I think fundamentals are staying fairly resilient, but we need to be cognizant what are the potential risks of the tariffs. The part that is supportive for the Asian credit specifically is that a lot of the issuance are quasi-sovereign, which are expected to be stay kind of fairly constructive with that fundamental lens. And then we have the sentimental and technicals. The technicals are driven by the fact of where the demand and supply is. And as much as we say that demand has been relatively flat, the supply has been actually trending downwards. So we've seen less issuance in Asian markets and less issuance in high yield markets. So broadly, I think the search for yield, and this is not just a story for Asia, is going to drive technicals in 2025, so where again, search for yield will support asset classes that are yield generating or carry generating.
Ekaterina, hang tight. Ekaterina Bigos, CIO for Asia ex-Japan Core Investments at AXA Investment Managers. Now, still ahead this hour, we're talking luxury spending in an exclusive interview with Bulgari CEO Jean-Christophe Babin, who's looking to India to ease the pain of the slowdown in China. Keep it here with us. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo. And I'm Hadi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with that.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Well, we're showing you live pictures of President Biden departing Joint Base Andrews en route to sell Cabo Verde for a brief refueling stop. Of course, on Monday, he will meet with Prime Minister Ulysses Correa is Silva of Cabo Verde. Then he'll travel to sell Cabo Verde to Angola. This would be the first trip by a president of the U.S. to Angola for that trip. Of course, we're showing you shots of President Biden departing Joint Base Andrews en route to sell Cabo Verde. Now, speaking of the dollar got a boost after U.S. President-elect Donald Trump warned BRICS nations he would require commitments that they would not move to create a new currency. He also repeated threats to impose 100% tariffs. Let's get the insights from Avril Hong, who's been tracking developments. What's Trump saying now?
Yeah, I mean, I think he's essentially reiterating the messaging that he's had on the campaign trail for countries to use the US dollar, otherwise face penalties of sorts. In this case, it's the 100% tariffs. And some of these sources that have been speaking to Bloomberg suggesting that that could extend beyond levies. So could also include export controls, currency manipulation charges. And the message more recently by the president-elect is focused really squarely at the BRICS nations, Brazil, Russia, India, China, South Africa, to name a few. So ultimately, what he wants is for them to use the greenback, continue showing their commitment to doing so, otherwise face harsher penalties of sorts. But what's really interesting is also how analysts have already pointed out that the Trump agenda on this is diametrically opposed. You cannot call for the reduction of trade deficit at the same time the growing dominance of the US dollar just doesn't work like that.
That's right. It's pretty conflicting. But the question really is whether there is a real alternative to the dollar. We've been talking about, for example, yuan internationalization, but is it really gaining traction? That's a big question mark.
Yeah, I think that's why, even though you've been seeing China making inroads of sorts in getting the use of its local currency up there, this is something that's coming at the expense of other local currencies. It's not coming at the expense of the greenback. And I think one of the really interesting anecdotes we've heard recently at a BRICS meeting in Russia is how organizers have been telling or had been telling some of the attendees, bring euros, bring US dollar, because your non-Russia cards are just not going to work here. So that was really interesting to see. And I think that kind of speaks volumes as well. And also we see how the international system is really this cross-border payment system that would give the greenback, the US dollar, an edge for decades to come. So I hope that answers your question,
Avril Hong, thank you so much for that. We have to keep monitoring, right? I mean, we talk about alternatives to the dollar for a very long time. We've yet to see that. Speaking of currencies, especially in this part of the world, let's take a look at how the yuan is doing right now. The yuan dropping to its weakest since July, heading towards a one-year low. Of course, it is a strong dollar story. We're taking a look where the dollar is trading. It is up by almost 0.5% right now as we speak. So it is not surprising that Asian currencies, in particular for the yuan, is feeling that impact. Of course, this is also an economy where the recovery is pretty much a lackluster, awaiting that massive stimulus. But we've been waiting for that stimulus for a very long time. Now, taking a look at where we are in terms of the other Asian benchmarks at this point in time, taking a look where we are trading for the Asia Pac Index, it is in positive territory. MSCI Asia Pac Index up by 0.4%, tracking the gains which we saw in the U.S. on Friday. The Hang Seng up by 0.2%. The TAIEX currently up by more than 2%. Let's get back to, I guess, Ekaterina Begos joins us now from Hong Kong. Ekaterina, we talked about how, the Trump administration, Trump himself has been, dispensing with a lot of headlines. How are you reacting to the latest that we've seen so far about the BRICS nation needing to use that dollar?
Yeah, and I think this that we move from this uncertainty of political uncertainty to policy uncertainty. Obviously, we didn't know who was the incoming administration. Now that we know it, I think there's a lot of emphasis around what are the policies. Again, we know the policies, what they're going to be. What is the scope and the scale of those policies? And certainly, a lot has been voiced pre-elections and pre-outcome of the elections. But now we've seen some indications of where that direction of travel is going to be, and certainly an implication where the US wants to stay at a center focus of benefiting from obviously higher tax and trying to fill some of the fiscal gap that we just talked about through the tariff policies. And we know that some of the voicing of those tariffs have been focused on China, but most recently, again, the emphasis has shifted on Mexico and even Canada. So the implications are not just for Asia, but I think more broadly. In terms of dollar, I think the presence of dollar and the dominance of dollar across the global markets is unlikely to shift. This again, there's no alternative or liquid alternative at this stage that can replace the dollar.
Katerina, it's a very challenging backdrop. How do you position? What's the right strategy to adopt? You say carry on with carry. Explain that.
Yeah, and I think that when we look at 2025, we are entering, as I said, an environment where policy is going to drive a lot of that uncertainty. So what investors need to think is which asset classes give me an inherited carry or inherited, let's say, downside cushion. And credit is in that position where you have a natural yield, which we haven't seen for the last really attractive. So staying invested with that carry, harnessing that carry, I think, is a theme for 2025. And the important part is in an environment where growth is expected to stay resilient, particularly in the US, but more broadly because of that US resilience, credit will stay constructive, credit will stay. And the biggest risk for credit is downside to growth. And at this stage, that is not in the horizon. So staying constructive on that, I think, is very important.
And of course, when it comes to Trump, we're expecting policy changes. How do you play the ongoing themes of perhaps, diversification of supply chains and tariffs?
Yeah, the diversification ultimately, when it comes to tariffs, and we've seen in a previous trade war, caution and understanding where some of the sensitivities are, because a lot of these supply chains are quite hard to shift, particularly in places like Taiwan. The fact that Taiwan is still the dominant manufacturers for chip, as much as the ambitions of the CHIP Act is to reshore some of those back to US, we've seen TSMC opening factory in Japan to diversify those supply chains. The matter of fact is that for high performance chips, Taiwan is still going to stay the main provider. So again, that diversification and how we deal with those will be very strategic. And I think more broadly, any parts that are expected to harm the consumer in the US, and we've seen in the previous measures or tariffs that have been imposed, some were dealt with exception, again, not to harm the consumer too significantly. There was particularly on consumer electronics that were exempt from those tariffs. So as much as, again, the headline numbers and some of the messaging has been quite harsh, I think broadly the expectations are that there will be some room to negotiate, and some of them will be used to drive outcomes in favor for the US.
Katerina, thank you so much for your insights today. Katerina Biggers, AXA Investment Manager, CIO for Asia. Now, we've been talking about that strong dollar environment. The dollar is up about 0.4 to 1% as we speak, putting a lot of pressure on Asian currencies. The yen is currently 150.72 and the Chinese yuan at 727.66. Of course, bear in mind that Trump did warn the BRICS nations about keeping to the dollar. Do not look for an alternative or you'll be slapped with 100% tariffs. Up next, my exclusive interview with Bulgari CEO Jean-Christophe Babin will discuss the outlook for luxury spending in key markets like Japan as well as China. Keep it here with us. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. Welcome back. You're watching Inside. China's factory activity readings for November have come in better than anticipated. Both private and official PMIs expanded for a second straight month, is adding to signs of a steadying economy. But investors want to see more sustained improvement. We're keeping Avril Hong very busy this morning. This is pretty encouraging data.
Yeah, but I think as you alluded to, investors want to see even more. That's why you're seeing on the 10-year yield in China today at that 2% level, the expectation of PBOC easing. But on the data front, yes, there are signs that things are stabilizing. Private, official numbers, they're showing you expansion after months of contraction. So it shows you how, that stimulus blitz in September, where we saw a package of measures, including rate cuts, are kind of working their way through the economy, through sentiment as well. But if you look at some of the other parts, such as non-manufacturing on the official front, it actually showed a slowing. And this is all data that's not accounting yet for the challenges that might arise from Trump. So it certainly speaks to the case for more to be done. Certainly that's what Bloomberg Intelligence is calling for. And I think that is what investors are expecting as well, given how policymakers, they have meetings underway this month as well.
And of course, if you're looking for proof, they say proof is in the pudding. And you're seeing that certainly in Meituan's numbers.
Yeah, I think that was interesting if we try to extrapolate some of what China's economy is doing from the earnings scorecard of one of these food delivery giants in the country, right? Because it was already expected to sort of outperform after the disappointments of the past couple of weeks from Tencent and Alibaba. And that's because it's food delivery business, kind of benefiting from food vouchers. So in a way, it shows you how there are segments of the Chinese economy where consumers are willing to spend. And that's showing up in the online commerce, in the travel sectors as well. So signs of improvement on that front.
But it does feel like Meituan's looking for other growth areas. It is looking beyond the mainland China market.
Yeah, it has been trying to kind of make inroads in Hong Kong. So we see how its Kita app is making, quite early signs that it's showing success. I think it's like the number 2 app there in the city. It has also been looking at Saudi Arabia as a key market. I think in September, there were trial operations that started on the Kita app. So there are these signs that Chinese companies are looking overseas to expand when there are all these troubles on the mainland. But of course, when you look at this, not every company can do this. It comes with costs as well. For Meituan, in this case, it seems to be taking quite a careful, calibrated approach, maybe allaying some of the investor concerns about what this would mean for cost, because we did hear from the executives as well. They talked about how they're, going to do this quite cautiously. They're not going to rush into things. So it gives you a sense of what their approach is here as well.
All right, Avril Hong, we thank you so much for your insights. Avril Hong there. Now, speaking of consumption, Bulgari CEO Jean-Christophe Abant says 2025 probably won't be a huge growth year for the luxury sector, as he expects China's economic struggles to take years to resolve. He also spoke with us exclusively on how the industry is responding to U.S. President-elect Donald Trump's tariff threats.
Well, it's very difficult to project in the future what will be the politics of a newly elected president. Also, because often between what you say to be elected and what you do once you're elected, there can be some differences. So assuming that import duties will increase, in America, probably the Chinese government will also increase duties from American goods. But I have to say that this shouldn't impact so much luxury, in the sense that Chinese doesn't export much luxury to America, and I would say that America doesn't export much luxury to China. As you know, luxury is mostly a Franco-Italian business. I exaggerate a bit because I'm Italian, but most of fashion and high luxury is Franco-Italian, and insofar, those two markets, those two countries, have maintained a good relationship with China, and I see no reason why. We would be penalized next year to export to China, or why we would prevent China to export to our countries. Again, we have to be very careful in our statements. And what may happen in America might not necessarily, impact the Western or European luxury.
So in terms of demand growth, what are you anticipating? How do you think sales will be for 2025 for China?
China, I think, when you have a crisis which is based partially on real estate, but more, I would say, exactly on oversupply, not only of real estate, but of many manufactured goods, which are too many to be absorbed, not only by the local Chinese living in China, but also internationally by Western consumers or Asian consumers. Obviously, this cannot be resolved overnight, because oversupply is also related to a certain infrastructure, to certain kind of investments, which have to be reshifted towards different industries, probably more services and a bit less of traditional industry production. So we can anticipate that the crisis in China may continue next year, as the country will need, I think, a couple of years at least to absorb that oversupply of manufactured goods and real estate, and to evolve quickly towards an economy which is more a service-oriented economy, rather than an economy also much more in some advanced technologies, which they are already, but they can do for sure more, in order, to reestablish a balance between supply and demand, which today is challenging.
Jean-Christophe, are you then looking at opening more stores in mainland China in 2025, 2026? What's your expansion plan?
In Greater China, generally speaking, we have about 50 stores. So I would say it's quite a solid network covering the main cities, the main malls in a rather good location, I have to say. So our first priority for this year and for next year is not necessarily, to open new stores, because I think that our network is still covering quite well mainland China, but to get more productivity from those stores on the one hand, and on the other hand, to further develop an area where we've been pioneering the market, that is e-commerce, not only the e-commerce we do from our website, but the e-commerce we do in concession with the likes of Tmall, with the likes of JD. And this is obviously reaching cities where we don't have stores and where we don't necessarily need to establish stores because they are not having the proper mall for luxury. On the other hand, they have the proper clients for luxury. And so obviously e-commerce is a smart way to reach those clients, to make them enjoy the Bulgari experience without necessarily having a boutique in each and every city of China above 5 million people.
In terms of the other markets in Asia, like India, like Japan, where do you see sales headed? How optimistic are you that these markets will continue to grow?
Well, those markets have grown a lot this year and last year. I think India, for sure, is not yet, the new China. It's a long way to go, but at least the fundamentals in India are extremely strong. The GDP growth is very positive. The demographics in India are very favorable compared to Western countries or China, where population is aging. And there are a lot of investors now in India understanding that luxury can be as a landlord. So with an outlook with more luxury malls to come in the coming months or years, which will propel India, if not in the top 3, but probably in the top 5 or top 8 markets worldwide. So there will be for sure a lot to get from India, and a company like Bulgari has opened already a new flagship in Mumbai this year. We're expanding our footprint on the Indian market in secondary cities with watch retailers, and we have been the first luxury brand to go directly in concession with Tata Click. Tata Click is a bit the Tmall of India, with a very broad reach of secondary Indian cities, thus allowing us to reach again Indian clients desiring our jewelry, our watches, even though in those cities we have no short-term plan to establish a boutique, just because there's no mall really yet in those boutiques. So we see India actually positively, all the more that we are working together with Priyanka Chopra. She's probably the most aspirational and famous actress in India nowadays, not only, but she's also a jewelry lover, advising us to provide our jewelry with a twist of India, which resonates very strongly with the Indian client emotionally. And for Japan, we have on the one hand, a growth on the Japanese locally. I think the new generation is really today somehow rebelling against a sluggish destiny, which was more or less the history of Japan up to 5 years ago. You can see again in Tokyo now cranes all over the city, a lot of real estate projects. We are just opening soon, a store in the new district, Abu Zaidai, which is very promising. Right. So Japan is entering, I think, a new cycle together with a new generation where people really are more bullish somehow and more willing to enjoy life at its fullest compared to the previous generation. So we see a surge of Japan, combined obviously with a lot of tourism in Japan, and not only Chinese tourism, but also, a lot of American tourism, of European tourism. So Japan is kind of the place to go nowadays for most of the world population. And it's not only yen related. The yen we know is quite weak, but also because it's a wonderful country. I mean, in terms of hospitality, you even have a Bulgarian hotel, so it says long about how good it is to go there. But you have a lot of history, you have a lot of arts, of culture, of gastronomy.
Which of your products are seeing the best growth? I mean, you're in everything from jewelry to watches to handbags. Which products are selling the best for you in terms of the luxury goods that you're selling?
Well, for Bulgari, it has been a year, I would say, of high jewelry and high-end watches in terms of growth category with the highest growth rate. And we still have some events, I mean, till the end of the year, so it makes me optimistic. Then it has been a year, I would say, also very much driven by Serpenti, which is one of our icons. From regular jewelry to high jewelry, it's becoming really more and more, I mean, a key symbol of Bulgari, and it is globally attractive to clients, which is rare because often some icons can be very popular in one geography and a bit less in another one. So Serpenti has been driving our business, but not only in jewelry, but also in watches, recording their best year ever, and in handbags, which you were mentioning. So those have been key drivers.
From your perspective, what then would be the biggest risk for the luxury market for Bulgari in 2025?
The main risk is to be pessimistic, because if you are pessimistic, you start to slow down your creative and innovation process. You start to lower your investments, and then you create yourself, I mean, your own erosion. So I think we have to continue to be optimistic because 24, again, I repeat, has been and will be negative for several brands, and we know which ones already because what's announced at the third quarter won't be necessarily very different as the fourth quarters. But I can tell you that others, and not, I mean, the smallest one, are growing or are stable versus last year, which again, I repeat, being last year the best ever year for the luxury, is not bad at all. So 25 probably won't be a huge growth year because we still have to absorb some further economic Chinese slowdown before Chinese bounces back. On the other hand, as we did in 24, there's no reason why we don't continue to grow in most of the other geographies.
Bulgari CEO Jean-Christophe Babin speaking with us exclusively, and he talks about how he's betting big on India, the Indian market, to counter the slowdown in China. Speaking of India, we're counting down to the Indian market open coming up in just under 1 minute. Of course, this is a trading day on the back of that slowdown in growth that we saw in India. GDP coming in much lower than anticipated. It came in about 5.4% versus the RBI's own target of 7%. So we're seeing that slowdown in India's economy. It is the slowest pace in almost 2 years, and it's led to expectations in the market that we'll see perhaps a rate cut by the RBI sooner than anticipated. The data prompting economists to downgrade their GDP growth forecast for the year, some predicting growth as low as 6.4%. Of course, this is an economy that's gone, has exceeded growth expectations, initially going as high as 8% at one point, but now we're seeing growth slowing down somewhat. And of course, we're seeing some impact in the market already. India trading in negative territory. Sensex down by 0.4%. The other benchmarks in India also in negative territory. India's rupee trading at 84.5988. It is a strong dollar story with the Indian rupee down about 0.1% in line with the rest of Asian currencies. Again, we're tracking the Indian market. We're also tracking the Adani stocks. Gautam Adani speaking for the first time since his first public comment since being indicted in a $250 million bribery scheme. Saying that he's denied that anyone in his conglomerate faces U.S. charges and that his company will come back stronger on the back of that indictment. Adani Enterprises currently up by 0.9%. Still to come, we'll have more details on Gautam Adani's first public comments addressing the U.S. charges against him. Will be live from India. Keep it here with us. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 100 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Hadi Stradwatz here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back. Indian billionaire Gautam Adani is taking a combative tone in his first public remarks since being indicted by U.S. prosecutors for an alleged $250 million bribery scheme. Asia's second richest man says he expects his empire to bounce back stronger despite the allegations.
This is not the first time we have faced such challenges. What I can tell you is that every attack makes us stronger. And every obstacle becomes a stepping stone for a more resilient Adani.
For more, let's bring in Bloomberg Conglomerates reporter Pierre Sanjay. He joins us now from Mumbai. Sanjay, this is quite interesting. When compared to those Hindenburg allegations years back, I mean, Adani actually is responding. He didn't keep quiet like he did before.
Exactly. I think this is the first public appearance, first public remark, and third instance for when it comes to Adani Group. If you recall, last week Adani Green has made a public statement, the public filing to stock exchanges, saying that none from Adani's side has been charged with corruption charges, and they are going to seek a legal recourse. And we saw on Friday Adani Group CFO coming and addressing media, saying that none from Adani Group has been charged with bribery charges, and they would be contesting legally. And they said the finances are intact. And he said the scrapped deal of $600 million of bond, it could resurface by mid 2005. And on Saturday, Asia's second richest man, Gautam Adani, very boldly, very confidently made a public appearance and made a public remark saying that he would be complying with all world regulatory requirements, number one. And he said none from Adani's side, not from Adani companies, but none from Adani's side has been charged with bribery charges. And he said we are in legal process, finalizing legal process. And they said every challenges this like make the conglomerate more stronger. He has made a long speech. He referred to the challenges he faced while building the coal mine in Carmichael in Australia, and he also mentioned a brief mention on Hindenburg attack in 2023 January, and now he has boldly made a clear-cut statement on. And he said the individuals named are now working in a legal process, legal recourse rather.
Sanjay, you got to wonder if that's enough for investors to reverse the kind of confidence for them.
Not really. So, on Friday, Group CFO had clearly said in 10 days they will be filing a detailed replies to those allegations made by U.S. prosecutors, number one. And now they will have stepped up their efforts to meet investors and allay fears. And what Bloomberg is picking him is they would be now arranging a series of meetings with investors, domestic investors, as well as international investors in coming days. That's what we are picking up from Adani Group.
Sanjay, thank you so much for that. Bloomberg conglomerate supporter Pierre Sanjay for us in Mumbai. And here are some corporate stories we're following. Stellantis CEO Carlos Tavares is quitting sooner than expected as the automaker grapples with slumping profit and weaker U.S. sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by Chairman John Elkann. A new CEO will be named in the first half of next year. A number of industry executives have come under pressure as car makers confront a slumping market, struggling with slowing demand in China as well as Europe and the threat of tariffs from Donald Trump's return to power. Bloomberg has learned Nissan Motors CFO Stephen Ma is set to step down. The change comes 17 months after Ashwani Gupta left as Nissan's chief operating officer and leaves CEO Makoto Uchida as the sole remaining top-level C-suite executive. It is a challenging time for the Japanese automaker as it faces declining performance and the attention of Afisimo Capital Management, one of the most influential activist investors in Japan. And DiDi has posted its second straight quarterly profit as it mulls the potential relisting in Hong Kong. The company swung to a net income of $128 million September quarter versus a loss a year ago. Revenue rose 5%, boosted by a jump in gross transactions from its international business. In the market, we're tracking the equity markets in positive territory on the back of the gains which we saw in the U.S. on Wall Street on Friday. MSCI HBEC index up by 0.5% right now. Hang Seng also in positive territory. Of course, we're keeping an eye on U.S. non-farm payrolls due this week. That could push yields higher. 200,000 is the number we're watching. In terms of S&P futures, it is in negative territory, down by 0.2%. We're keeping an eye in particular, of course, on the dollar. It is inching higher as we speak, up by about 0.4%, putting a lot of pressure on Asian currencies. We talk about how the rupee is under pressure from that weak GDP data which we saw, of course, it came in at about 5.4% versus estimates of more than 7% for coming from the RBI. And before we go, here's a look at our guests for tomorrow. We'll get the latest market calls with Ashwan Damodaran, NYU Stern School of Business professor. We'll get his take, including on the Max 7 and other top global stocks. Plus, Penta Group's Brian DeAngelis will be joining us as well. Keep it here with us. This is Bloomberg.
Where do you think the tech world is going? Is artificial intelligence going to eat up the rest of the tech world? And where do you think the future of technology is going in Silicon Valley and elsewhere over the next 5 or 10 years?
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things? And where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry. And it's actually going to increase productivity and actually make our lives better.
So you think technology is still going to be centered in the United States, largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that now you can start an app anywhere in the world. You can live anywhere. You can have AWS, and you can set up and not have to have a system administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring
bringing you up to the minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. But geopolitical uncertainty, the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg is around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
The Asia trade.
You're watching the close. Welcome to the balance of power.
This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures heading lower. US President Joe Biden arrives in Angola later today, making good on a promise to visit the continent before his term ends. Plus, Stellantis CEO Carlos Tavares quits early over a strategy dispute. We'll look into headwinds facing the automaker. It's just gone 8 a.m. across the Emirates. It's 3 p.m. Monday afternoon here in Sydney. I'm Paul Allens. Standing in for Jemina Besetchi. Let's take a look at how some of the key assets are tracking at the moment. We've got US futures currently a little bit in the red ahead of that market's return from the break for Thanksgiving. Keeping an eye on Japan bonds as well. We've seen the 2-year yield rising. It's now at its highest level since 2008. And of course, we have heard from BOJ Governor Ueda talking about the chances of tightening. The interest rate rise is nearing, he says. Swaps now pricing in a 67% chance of a December move, 90% in January. Take a look at the oil price as well. Brent crude just ticking up ever so slightly, up 0.5%. Of course, OPEC Plus did push back its weekend meeting to Thursday. All those problems are still there, though. That decision on the production increase is still very much in the balance, as are, the security situation in the Middle East at the moment. But anyway, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, as we see the resurgence in the US dollar that typically experiences a bit of softness in December. It's really starting the month on the front foot, and that's putting pressure on all Asia currencies, including the Japanese yen and the yuan, which is sliding to the weakest level since July. And this is despite data over the weekend and this morning showing a bit of stability returning to the Chinese economy. It's the factory activity indicators on the official and the private numbers that showed expansion for a second straight month. This follows on from months of contraction. The Tyson numbers were interesting because they were a lot better than expected, but may not be wise to read too much into this because you get the sense there was a bit of front loading ahead of Trump next year. And it's interesting to see on a day like this how Chinese equities have mostly pulled away from some of the earlier gains, even though they are clocking some green, Paul.
All right, Avril Hong there in Singapore. Thank you. Let's talk a bit more about the markets with Paul Gamble's co-founder and managing partner at MBMG Group. Paul, thanks so much for joining us. I just want to pick up on one of those points that Avril was making there about the China PMIs. An encouraging set of numbers there at first glance, but how much of this do you think is front-loading ahead of the incoming Trump administration?
Yeah, look, good morning. That's a great question. It seems like, we want to talk about Japan, we want to talk about China, we still end up talking about Trump somehow. I think that there's obviously an element. I think we're going to see more of that as we go into December as well, because the last chance saloon is rearing its head. But we're not going to see tariffs on the 20th of January, on the day that Trump takes over. It's going to be a process introducing them. So if there is front running, I think we could sort of overstate the effect of that if we're not careful. And I think that it's actually, if anything, it's kind of convenient timing. If we get 6 months of people front running exports, well, that's obviously going to create a bit of a temporal dislocation. It means that there will be a softer patch whenever that front running eventually comes to an end. But I think that's okay, because a lot of the stimulus that we've seen introduced by Chinese policymakers isn't necessarily just focused on fixing today, and that's why when you look at the numbers coming out of China, we do have such a discrepancy between, say, the Caixin, which is obviously contains a significant export element and the smaller companies element, and the official numbers. So I think this is actually, if there is any front running, I think it's actually buying time for some of the more structural aspects of the reforms and the stimulus that we've seen to take effect. So I wouldn't be worried about it. I wouldn't discount the Chinese opportunity because of any concerns about an element of front running being involved in the Caixin blowout numbers that we've seen.
Yeah, I want to talk about opportunities more specifically in a moment, but in terms of the stimulus that we have seen, the market's been somewhat underwhelmed so far. Do you think there is a potential that once the Trump administration has its feet under the desk and things start to get real, we might see Chinese policymakers become a bit more enthusiastic about which buttons they're willing to push?
Yeah, look, I think that's exactly right. None of us know, what's going to happen between now and January 20th, and none of us know what's going to happen after January 20th, and that includes Chinese policymakers. So I think, they are keeping dry powder. But I think the other thing is, that there's often disappointment in Western, capital market perceptions of Chinese stimulus, because in Western markets, we tend to look at them in a different way. We tend to assume stimulus is actually going to buoy asset prices. It's designed to help markets, and the Chinese view of stimulus is very much it's meant to be, much more integral than that. It's meant to be much more about the economy rather than the markets. And so, the effects of Chinese stimulus will typically take longer to feed through anyway than sort of Western quick fixes. So I think there's a sort of cultural gap or misunderstanding of the intent and the impact of the stimulus from a lot of Western market observers, and I also think that there is a lot more to come, and particularly when the Chinese policymakers have got a better handle on what's going on. And again, we have to remember a lot of the Trump talk. One of the big differences I think between Trump and Biden is Trump says some of the craziest things, but it doesn't always follow. In fact, quite often doesn't follow through. Whereas Biden says crazy things and then often goes and does them, or says sensible things and then goes and does the opposite. So I think we've got to be careful about ascribing too much weight to Trump introducing some of the tariffs that he's actually threatening. I think a lot of that is just rhetoric.
Mm-hmm. Well, let's talk a little bit about opportunities in China, because it's certainly cheap at the moment if you're willing to jump in. And I know that you've got some enthusiasm around or an optimism around consumer plays. But if we take a look at this chart, we can see that China home sales again dropped after a brief rebound. And of course, confidence in the housing market is very closely tied to confidence from the consumer. Why is it that you're so optimistic about Chinese consumer plays?
I think that a lot of the stimulus focus that we have seen, and even more of what we're going to see, is going to be directed at consumption. And I see this divergence between broader consumption and the property market. There's a very clear intent to cool the excesses of the property market. I think Chinese policymakers have taken heed of what happened in the States in 2007, 2008, when we saw subprime, and I think they're very conscious that they don't want to repeat those mistakes, and they're trying something that hasn't been tried in America, which is to reflate the consumer whilst keeping a lid on property, and that's a challenge, but it is going to create that divergence.
Paul, just before we let you go, I would like to get your views on some of the key currency moves we're seeing. We've got a much stronger US dollar today. The yen hanging in there, perhaps on those comments that we've heard from Governor Ueda about strengthening, hiking, I beg your pardon, getting very close now. Where do you see the next level of resistance for the yen?
So yen still looks ridiculously cheap. I mean, we said when we saw yen come back down to 140 that we thought we'd see 150 again. We saw that we pushed towards 160, but 140 is a key level, 130 is a key level. We're still expecting to be sub 120 at some time in the next 12 to 18 months. So that makes yen ridiculously cheap, and as other currencies are shooting themselves in the foot, as other majors are shooting themselves. We see what's happening in France today. We see the Trump tweets about BRICS, which probably aren't good for the dollar long term. So with all of that stuff, the yen by default is becoming the most attractive looking currency left in the room.
All right, Paul Gambles, we're out of time, but thank you so much for joining us with your insights. Paul Gambles is co-founder and managing partner at MBMG Group. Up next, US President Joe Biden becomes the first sitting US president to visit Africa in almost a decade. We'll discuss his trip to Angola this week next. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Iliad is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Green World Cup.
This is a 3 as the economic picture.
Covering the intersections of Hollywood.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. US President Joe Biden will arrive in Angola later today, making good on his pledge to visit the African continent just weeks before leaving office. Biden will be the first sitting US president to visit Africa since 2015. For more, Bloomberg's Ondera Oganga joins us now. So, Ondera, what's on the agenda? What can we expect from President Biden's visit to Angola?
Good morning, Paul. So what we can expect is an announcement of 12 deals that the U.S. has closed with Angola worth about $6.9 billion. They're also expected to announce new partnerships in terms of global health security in the wake of infectious diseases. President Biden is also expected to tout the role of U.S. companies in championing food security on the African continent. Key to this visit is the Lobito Corridor. This is touted as one of the U.S. mega infrastructure flagship projects on the African continent, and it's a 1,300-kilometer railway line linking the copper mines in DRC, the cobalt mines in DRC, and also some of the fields in Zambia to the port in Lobito in Angola. And this is to open up these minerals and make it easy to get them to international markets. You know, the U.S. is trying to counter Chinese dominance on the continent, particularly in terms of the copper and cobalt mines, because they're very key in the EV industry. They go a long way in producing smartphone batteries and also other parts in the technology sector. So that is what we're expecting President Biden to be focusing on. But also important to note that this visit comes at a time when President Biden is almost leaving office. And so there are questions here and there on what will be the U.S. policy on Africa moving forward. Trump, during his campaign, Africa did not majorly focus in the Make America Great Again agenda, and his re-election throws a spanner in the wheel.
Yes, considering President Biden's a lame duck president and he'll be gone in a few weeks, what weight does this visit carry on the continent?
Paul, to some extent, it carries a little bit of weight. It goes ahead to solidify ratify the pledges that he had made to the African continent. In 2022, he held the U.S.-Africa Leaders Summit. $55 billion was pledged. Officials say about 80% of these pledges have been honored. You also have, during his administration, we've seen several visits from high-ranking state officials. Secretary of State Antony Blinken was on the continent. He visited West Africa in the wake of Islamic insurgencies, military coups, and also in the wake of things like growing Russian presence. We also saw Vice President Kamala Harris visit. And so his visit is almost like the cherry on top of the cake. But the question is, will they be able to counter Chinese dominance on the continent? China has invested nearly $26 billion in FDI receipts just last year. So the US cannot outspend them and they cannot compete. They're offering a new way of partnering with Africa. In the wake of Africa crashing under the debt of China, the US wants to offer alternative investment that is paced but good for the continent.
All right, Bloomberg's Ondero Ogonga in Kigali for us. Thank you. Well, Stellantis CEO Carlos Tavares is quitting sooner than expected as the automaker grapples with slumping profit and weaker US sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by Chairman John Elkann. A new CEO will be named in the first half of next year. For more, Danny Lee, our transport reporter, joins us from Hong Kong. So, Danny, give us the details about exactly why Tavares is out.
Yeah, Stellantis board and Carlos Tavares disagreed on exactly how to address the weakening sales and a share price slump that has fallen 40% this year. And as you said, Tavares was meant to leave by early 2026 with an orderly transition to new management. But clearly the challenges for Stellantis has become increasingly fraught in recent months, capped off by a revision of sharply lower earnings outlook. And under Tavares, management changes afoot constantly, and particularly more recently, the CFO leaving. So they need fresh blood and a fresh pair of eyes. And clearly having a new management to take the reins on and trying to turn around Stellantis will become even more urgent by next year.
So we've got VW and Nissan also facing challenges. What's happening there, and what's the common thread between the car makers?
So Volkswagen, today we're going to see potentially thousands, tens of thousands of workers in Germany walk out on the job. The union and Volkswagen has failed to come to an agreement on how to potentially cut jobs and cut costs. Volkswagen wants to close German factories, free German factories, cut tens of thousands of jobs and also cut pay. And the union is trying to resist that. So given the impact of potentially a walkout, this is the last thing that Volkswagen really needs. And to try and up the ante now on how to get an agreement before this becomes really financially damaging. The same for Nissan, also revising its outlook, cutting jobs and cutting output as well. It is potentially going to see its CFO leave, according to Bloomberg, who reported this at the weekend. So common thread between all of these really is challenging a difficult EV transition, weaker sales globally, and also trying to confront the rise of Chinese EV makers.
Just in terms of Tavares, he was a controversial person. How has his departure been received by investors, suppliers, and employees as well?
I think the departure of Tavares can really be summed up by the US's main auto union, who was delighted that someone who they felt had trampled all over the workers' rights, squeezing suppliers. For Tavares, he was a very polarizing figure, and his playbook over the years of trying to continually cut costs, given his track record as a turnaround guru, this hasn't really worked for Stellantis, and therefore the distress it has caused amongst workers and suppliers alike. Certainly some that has come from this news.
All right, Danny Lee, our transport reporter in Hong Kong. Thank you. Still to come, France's finance minister pushes back against far-right leader Marine Le Pen's budget demands. Our exclusive interview next. This is Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Middle East and Africa. I'm Paul Allen in Sydney. French Finance Minister Antoine Armand tells us exclusively that the government will not accept artificial budget deadlines from far-right leader Marine Le Pen. And that's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before?
18% for the far-right Alliance for the Unity of Romanians. The NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. BlackRock is said to be nearing an agreement to buy HPS Investment Partners for about $12 billion. That's a purchase that would vault the world's biggest asset manager into the top ranks of private credit as it seeks to become a major force in alternative assets. Sources say BlackRock will pay for HPS with a mix of cash and stock. And cruise lines are shifting their focus from Europe to the Caribbean as companies face a growing backlash from locals in destinations like Barcelona, Venice, and Dubrovnik. Stops in the Mediterranean declined for a third straight year in 2024, while Caribbean ports have so far seen a 16% increase in ship arrivals this year. All right, let's take a look at U.S. equity futures as the U.S. prepares to return after the Thanksgiving holiday. A little bit of softness in the market there. If we take a look at Euro stocks futures as well, we're expecting some declines there. And of course, we just heard that there is some consternation about the fate of the French budget. Got an oil price which is showing gains as OPEC pushes back its meeting to Thursday. More to come in a moment. This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way. And I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about hearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade. Live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Horizons Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. The greenback strengthens after Trump warns BRICS nations not to replace the US dollar, threatening 100% tariffs if they do. Plus, US President Biden signs a sweeping pardon for his son Hunter, reversing his previous stance on not using his executive powers to do so. It's just gone 8:30 a.m. Monday morning across the Emirates, 3:30 Monday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking at the moment. Just mentioned the dollar there, and yes, we're seeing the dollar strengthen. Some of that news flow, of course, incoming President Trump issuing that threat against the BRICS countries. We've also got that interrupting the yen rally as well. The yen's had its best week since the carry trade unwinded back in early August. And of course, we've heard from Governor Ueda talking about how an interest rate rise is nearing in Japan. Swaps pricing in a 67% chance of a move in December, 90% in January. And we've seen yields rise on the Japanese 2-year as well. That's now at its highest since 2008. Well, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, the story today is really about how geopolitics is playing out in the FX space and how the US dollar is back marching higher and reversing some of the softness from a week ago. It's certainly starting December with a sort of bang, and that is really what's playing out across currencies in the region today, despite some of these factors domestically, which typically would support local currencies. You think about Japan, you talked about how Ueda is saying a rate hike is nearing. We also got data out of Japan today that supports the view of such. Capital expenditure seeing a boost. And then you think about how China, second month of expansion on some of this factory activity indicator, whether you're looking at the official or the private numbers, although some have pointed out that a bit of this on the Tyson manufacturing is because of front loading by companies ahead of Trump, but it's an improvement nonetheless. Yet, look at the yuan, renminbi sliding to the weakest level since July against the greenback. So it was really a dollar story across Asia today. Paul.
All right, thanks, Avril. Avril Hong there in Singapore. US President Joe Biden has signed a sweeping pardon for his son Hunter, reversing his previous stance that he would not use his executive powers to do so. President-elect Donald Trump, meanwhile, has appointed Massad Boulos as senior advisor on Arab and Middle Eastern affairs. Boulos is the father-in-law of his daughter Tiffany. More on this, we're joined by Bloomberg's Jill Desis in Hong Kong. Jill, what are we to make of these latest appointments?
Yes, well, I think, that first development there, obviously, coming from outgoing President Joe Biden pardoning his son Hunter Biden on pretty much anything that was ultimately facing him, either those federal gun charges that he was convicted of already, also some potential charges awaiting him. Just want to start with that, pointing out that this is really a case where it marks a pretty stunning reversal from the White House, given that it was just up until very recently that the White House had said Joe Biden would not pardon his son. However, what Biden said in the statement was essentially that he thinks that the case against his son was politically motivated, that it was intended to break him and his son Hunter Biden. This is one thing that he said that he doesn't believe that his son would actually be facing this level of scrutiny, these kinds of charges, were it not for the fact that he is the son of the president. So I think pretty astounding turnaround from Joe Biden there. You've got that obviously against this broader backdrop of watching more for incoming President Donald Trump's transition team. Trump is obviously in the middle of all of these different things. Trump has really made going after Hunter Biden a cornerstone of his campaign. He spoke about it at length when he was running against Joe Biden about 4 years ago. So that's been I think a really interesting development there to watch there when Joe Biden really only has a few more weeks left in his term here.
Jill, I also want to talk a little bit about the Bloomberg Big Take, which discusses the roadmap through some of the potential dramas that we might see with some of the bold tariffs being promised by the incoming Trump administration. Can you walk us through some of the scenarios that have been gamed out?
Sure, of course. Well, I think that in the context, Paul, of all of these different appointments that Trump has been making, or nominations for Senate confirmed positions that he's been making, the big question here is how exactly is this incoming administration, should a lot of them be confirmed, going to enact a lot of Trump's big policies, specifically some of these marquee tariff policies that he's instituted. Obviously, during the course of his campaign, Trump promised to, enact tariffs of upwards of 60% on China. Just in the past week, he's, offered, this idea that he would have tariffs not just on China, but also on Canada and Mexico. That's all connected to a lot of what Trump says are his concerns about the fentanyl trade and border security. What Bloomberg Economics is really laying out in the big take today is that, to a certain extent, it is possible for Trump to enact these things, although bureaucracies being what they are, and a lot of these concerns about economics being what they are, it's likely that BECs, this is taking place in three phases there. So you see this chart on your screen right now, kind of taking you through those three different possible, it seems, for Trump to enact tariffs in some form or another. Of course, what that would ultimately mean is that the amount of U.S. Goods in global trade certainly decreases somewhat. You do see some increased prices somewhere, but the way that Bloomberg Economics sees this is this could be a way to potentially pay for some of those pretty massive tax cuts that Trump either wants to renew or consider going forward. So this all kind of plays into a certain economic vision for Donald Trump if he were to get, a lot of the appointments that he's trying to get into office, whether that be at Treasury, at Commerce, at the Trade Representative's office, sort of all in place going into his second term in office.
Tariffs, though, aren't always as simple as they seem. And if, for example, we consider car parts, they'll often crisscross a border a number of times on their way to actually becoming a car. What are the potential knock-on impacts of this? And is the administration perhaps pragmatic to walk back if things aren't working out the way they were planned to?
Certainly, Paul. Well, look, as is the case with anything, when you're dealing with these very complex supply chains, as you said, yes, Mexico, for example, has warned that if Trump were to enact some of the tariffs that he's promised just over the past week, that would have a really, really significant impacts on the U.S. autos trade and on those autos prices. And so that's just, one example of something that ultimately, could come back to the American consumer, depending on how some of these things go, depending on how exactly these tariffs get, specific and targeted. We saw a lot of this conversation unfold during Trump's first term in office. Certain, components that were either being sectioned off because of sanctions, whether that would be from China or elsewhere, or tariffs that were in effect, and how that would, potentially trickle onto consumer goods. So all of that is a very, very messy part of the equation. I think the other thing to keep in mind here, though, Paul, is that it also kind of depends on some of the personalities that Trump is bringing into his administration. You've got Scott Bessent, who he wants to run, the Treasury Department here. Somebody seen on Wall Street as very pragmatic in the grand scheme of things. But at the same time, you've got some other picks that Trump has made across other departments that seem, much more sort of aggressive and boisterous in terms of really enforcing Trump's vision. I think at this point, for Trump, it's sort of balancing this desire to have people that are very loyal to him in office and that want to enact some of these really, really big swings, with also trying to placate markets, because as we know, Trump really likes seeing, those, green lines go up in the stock market. So it's kind of balancing all of that together here.
All right, Bloomberg's geodesis in Hong Kong. Thank you. Let's bring in Rachel Ziemba. Rachel Ziemba, founder of Ziemba Insights, which focuses on economic and political risk. Rachel, I imagine you're going to have plenty to do over the next 4 years. Let's start with some of the uncertainty that some of the policies of the incoming administration might have on the oil price, for example. How do you see tariffs impacting things on the demand side and this pledge to drill in the U.S. on the supply side? Where does the oil price find a way forward here?
Sure. I think in general, what Jill sort of laid out is an environment where if tariffs are steadily going up and costs are going up, that it's not great for demand, particularly as you'll see countries like China, for example, looking to come up with retaliatory tariffs. Now, you bring up the important point, which is what's going to happen domestically, right? And I think the Trump administration is going to do what they can very quickly to reduce environmental regulations and regulatory reviews on things like natural gas and across the energy sector. But at the end of the day, whether companies drill is going to depend on their long-term oil price outlook. The natural gas one probably looks a little more bullish for more activity. A lot more is coming online. But U.S. producers, like their OPEC plus peers, are going to be facing this challenge of how strong demand is going to be in the coming years, right? We're seeing OPEC plus sit with record amounts of surplus capacity on the sidelines, and they're kicking the can to sort of try to avoid putting more supplies on the market for maybe at least one more month. I think this is an environment we won't see a lot of new U.S. oil and oil products coming on the market in the short term.
Yeah, OPEC Plus, of course, kicked the can on the weekend's meeting as well. It's happening on Thursday now, but all these questions are obviously still there. What's the challenge for OPEC Plus, though, in terms of maintaining discipline among its members in this environment?
Yeah, that's definitely growing. What we've seen in the last couple of months is OPEC Plus put pressure on the couple of countries that had really not been sticking to their targets: Kazakhstan, Iraq, even Russia, right? And in Russia's case, it was helped to meet its targets by the fact that Ukraine was using drones to attack its refineries. So not something that Russia particularly wanted to reduce production on. But, we have seen Kazakhstan in particular come closer to these compensation cuts. But, the thing that's looming is both a dynamic where a number of producers would like to bring back more in the market, but also a competition and tension between the UAE and Saudi Arabia, right? The UAE stands out as one of the few OPEC members that's been investing to increase its capacity in the last few years. And they've not been able to bring any of that to the market. And so one of the things we were looking for in the first quarter was for the UAE to be allowed to raise its quota. And I would imagine that that's on the agenda for MBS and MBZ in their meeting today, as well as celebrating the UAE National Day. So I think, Q1 is often a time of sluggish oil demand. Chinese demand is I think, going to continue to be a challenge. And so at a certain point, the market is really waiting to see whether OPEC just puts off and cast forward its current projections, or whether they look at 2025 in a more bearish stance.
Rachel, we're almost out of time, but I do quickly want to get your thoughts on the security situation in the Middle East, which remains in flux. The Israel-Hezbollah ceasefire seems to be holding, but the civil war in Syria is flaring up. Do you expect this to have any meaningful impact on oil prices?
I don't expect it will have a lot of material impact on oil prices. I'm really watching, what moves the oil markets tends to be concerns about major flows. So we can have a lot of lives lost and a lot of turmoil happening without there being major oil market impacts. But so what I'm really watching here is, what does this new front, in a sense, mean for Iran's role in the region? Does this make a Trump administration return to maximum pressure sanctions more likely? It probably does. Are they effective in doing so? The biggest risks to the oil market would be major outages that impact Saudi Arabia and GCC countries adding oil to the markets. That's sort of a extreme tail risk scenario. But in the biggest risks I see are of direct Iran Israel attacks that could bring in regional tanker wars and the like. So, watching very much stability in the region is important, not only for the oil markets, but also for what countries in the region have to spend their money on, reconstruction and the like. And this all is coming at a time when countries like Saudi Arabia are trying to pivot and invest more at home. And so it would be easier to do so under peaceful conditions.
Rachel Ziemba, thank you for joining us. That is Rachel Ziemba, founder of Ziemba Insights in New York. Still to come, how President-elect Donald Trump's policy agenda complicates South Africa's mission at the G20 as the nation assumes the presidency of the bloc. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of the century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. South Africa officially takes over the helm of the G20, becoming the first African nation to lead the multilateral forum. President Cyril Ramaphosa wants to use his country's leadership to ease the plight of heavily indebted African nations, but Trump's proposed tariffs may complicate that mission. Bloomberg's Ntando Tukwanda joins us from Johannesburg now. So, Ntando, what's likely to be South Africa's key messages to the G20 during its presidency?
Good morning, Paul. So the key messaging that Ramaphosa has really been bringing forth is that he'll be really driving the message of greater global economic growth that is both inclusive and sustainable. And it's important to note that South Africa's presidency over the G20 is the first from an African nation, and he envisions it being Africa-focused, and he wants to bring the priorities of developments of the African continents and of the global South to the agenda of the G20. And a key issue there is the high indebtedness of African nations that have had to actually forego critical spending programs of their countries because they have such a huge bill for debt service costs. So that is one of the issues that Cyril Ramaphosa will want to bring to the fore. But that could be complicated by, President Donald Trump's likely tariffs or likely economic policies that could drive interest rates higher and the dollar higher, and just continue placing these African countries in a rotation of indebtedness.
So how tough is the task that lies ahead of President Cyril Ramaphosa in pushing the G20's agenda, given global political instability?
Well, South Africa assumes the G20 presidency in a moment that is both difficult but unique. He'll probably be put to task to manage, tensions between the U.S. and China in relation to tariffs and these economic policies that we don't know how they will shape up. But he will also have to manage peace talks and differing views, dissenting views regarding fighting in Gaza, as well as the invasion in Ukraine by Russia.
All right, Bloomberg's Ntando Tukwana in Johannesburg. Thank you. Coming up, Turkey's economy has entered a technical recession, fueling the case for rate cuts. We're live to Ankara next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflation pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When you have a crisis which is based partially on real estate, but more, I would say, on oversupply, not only of real estate, but of many manufactured goods, which are too many to be absorbed, not only by the local Chinese living in China, but also internationally by Western consumers or Asian consumers. Obviously, this cannot be resolved overnight because oversupply is also related to a certain infrastructure, to certain kind of investments which have to be reshifted towards different industries, probably more services and a bit less of traditional industry production. So we can anticipate that the crisis in China may continue next year, as the country will need, I think, a couple of years at least to absorb that oversupply of manufactured goods and real estate, and to evolve quickly towards an economy which is more a service-oriented economy, rather than an economy also much more in some advanced technologies, which are already, but they can do for sure more, in order, to reestablish a balance between supply and demand, which today is challenging.
Jean-Christophe, are you then looking at opening more stores in mainland China in 2025, 2026? What's your expansion plan?
Yeah, in Greater China, generally speaking, we have about 50 stores. So I would say it's quite a solid network covering the main cities, the main malls in rather good location, I have to say. So our first priority for this year and for next year is not necessarily, to open new stores, because I think that our network is so covering quite well mainland China, but to get more productivity from those stores on the one hand, and on the other hand, to further develop an area where we've been pioneering the market, that is e-commerce, not only the e-commerce we do from our website, but the e-commerce we do in concession with the likes of Tmall, with the likes of JD, and this is obviously reaching cities where we don't have stores and where we don't necessarily need to establish stores because they are not having the proper mall for luxury. On the other hand, they have the proper clients for luxury. And so obviously e-commerce is a smart way to reach those clients, to make them enjoy the Bulgari experience without necessarily having a boutique in each and every city of China above 5 million people.
The thing is, what kind of growth can be anticipated for markets like China in anticipation, for instance, of that Trump tariffs, which would weigh on the confidence of consumers?
It's very difficult to project in the future what will be the politics of a newly elected president. Also because often between what you say to be elected and what you do once you're elected, there can be some differences. So assuming that import duties will increase, in America, probably the Chinese government will also increase duties from American goods. But I have to say that this shouldn't impact so much luxury, in the sense that Chinese doesn't export much luxury to America, and I would say that America doesn't export much luxury to China.
That's Bulgari CEO Jean-Christophe Babin speaking exclusively with Inside Anchor Haslinda Amin. Here's a look at some of the assets we're tracking as we head to the second hour of Horizons Middle East and Africa.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first one is like too much waste. I think this is also how I grow up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally? Definitely. Is it happening enough?
I think it's happening. It's gradually happening. All the designers doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve?
I think some of them are just like they're They're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. US President Joe Biden arrives in Angola later today, making good on a promise to visit the continent before his term ends. Plus, the Stellantis CEO Carlos Tavares quits early over a strategy dispute. We'll look into the headwinds facing automakers. Well, a very good morning. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basecci. Welcome to the second hour of Horizons Middle East and Africa, and welcome to December. This is typically a pretty good month for stocks. You usually see a bit of a Santa rally. It's typically the third best month of the year, in fact, for equities. But you're looking at futures pointing lower, both in Europe and the US this morning, flat on the FTSE 100 futures. And if we flip over to the cross-asset picture, you can see the Bloomberg Dollar Spot Index is higher. This is after comments from President-elect Donald Trump threatening tariffs of 100% on BRICS nations if they use their own new currency. We also have seen off the back of that weakness in euro dollar trading at a 105 handle currently, but also factor in there French Finance Minister Antoine Armand saying that France won't accept these artificial budget deadlines from Marine Le Pen. Of course, as I mentioned, we look ahead to oats trading, French bonds looking a little bit more like an emerging market bond at this point. The spread of German bonds widening to its highest level since 2012, and will factor in the various European PMI numbers when they come out later today. But on that dollar strength, you've got gold weaker. Keep an eye later on the Fed speak from Williams and Waller. And you've got Brent trading at 70.5% on the signs of a slow recovery in China's economy. We'll get more on that in just a moment. Let's in fact go to Avril Hong now. She's on standby for us in Singapore with an update on how Asia markets are faring. Avril.
Yeah, Lizzie, we're seeing Asia's stock gauge at roughly the highest in about 3 weeks, and this is led by gains in the tech sector, tracking some of the similar moves on Wall Street last Friday, and there's a bit of relief there because US-China chip curbs seem softer than expected. So it's a bit of a continuation from last week, but we are also keeping a close watch on some of these sectors, specifically in Japan, as we hear from the likes of the BOJ governor and how he's saying interest rates are nearing. That's typically something that is supportive for Japanese banks' profitability. So they're the ones among the sectors that are the top performers today. Despite that, we are seeing declines in the yen as well as the renminbi. And this is really a dollar story, which you just alluded to, those threat of tariffs by the president-elect in the US and his warning to those BRICS nations. That's even putting pressure on the yuan, and that's despite encouraging signs for China's factory activity. Lizzie?
All right, Avril Hong in Singapore, we thank you. Let's continue this markets conversation. We can join now June Bei-Liu, who's portfolio manager at Tribeca Investment Partners. Good morning. Let's pick up on that currency story then. We've seen the dollar stronger against all its major peers off the back of these comments from President-elect Trump. I wonder how you see the euro faring as we head towards the end of 2025. Do you actually see euro-dollar parity?
Look, I do think the euro is still going to remain weaker relative to the US dollars. I think it just a Trump presidency is going to put upward pressure on the US dollars, given some of the policy stands, the tariff and others that he's been talking about, the flow-on effect on as well, on the long end yields. We expect the euro to be continue to be weak. Also partly because it gets into that crossfire in terms of the trade negotiation at the same time when the US potentially long end interest rate is going to remain higher for longer. So it's that's going to be they're going to be put pressure on the euro dollar.
I wonder if you see that weakness, where you see it going before 2025 begins, and how you kind of weigh these factors. Of course, you've got the tariff story, but you've also got European weakness, and we might see more of that in the PMIs today.
Yeah, that's right. Look, we do think from equity market perspective, we actually think that the equity market fundamental itself is pretty strong. So, if you look at the US market, you look at around the world, fundamentally economic environment is not too bad. Even in terms of Eurospace, we do expect the activity to pick up somewhat with the rate cuts all happening around the world. I do think that will underpin for the next 12 months, for those cyclical sectors and economic activity to pick up. Meanwhile, I think the strength in the US dollar is going to impact quite a lot of areas. As an investor perspective, knowing fundamentally strong, and should there be any dip, it's buy the dip.
I mean, this is about that kind of time of the year where we start talking about the Santa rally. Where do you see the S&P 500 at the end of the year?
Yeah, I do think that the market is going to head higher. I know it didn't start on the positive day, but we did have a very, very strong year, strong month now heading into December. Look, I think at the moment we are seeing investor sentiment is reasonably positive. As we mentioned, the economic activity is reasonably strong. Also, we are in the middle of an important retail point, which is the Cyber Weekend is getting more and more, getting more and more traction for the retail, for the retail businesses as well as to get a gauge on consumer and smaller businesses. So, so far it seems it's doing pretty well, this calendar event. And so we do think that we will get more positivity heading into the sort of Christmas period, key shopping period. With a lot of cyclicals doing the heavy lifting, John was confident.
Okay, that's interesting. So it'll continue into Q1, even as maybe that seasonality wears off. I also want to ask you about the French story, which is, of course, top of mind this morning. At what point does the market say France is just uninvestable?
Look, it is getting more and more challenging. I think, across different geographies, the way you look at the investment opportunities, investors clearly crowding into the low risk option, which is the US market. I do think that European Eurozone has been quite difficult for investors for some time. And now with some of the uncertainties on the horizon, I think that the required adjusted rate of return is going to be higher for those markets. And we do think hence why there will be stronger US dollars as well as the US market continuing its leadership.
I mean, you kind of have to wonder what's worse, a collapsed French government or one that, keeps giving concessions and stays in power with a growing fiscal hole.
Absolutely. Look, I think that's a challenge, right? So for investors, it's very difficult to actually assess it's almost a regulatory risk, the government premium that you need to, or government discount that you have to put on those markets. We know many corporates, when they do business in those markets in France, but especially, many of them have been penalized by changes in some of those policies and tightened regulations and redistribution of some of their income. So, it's been difficult market, and I think many investors will rethink where they allocate their capital.
All right, June Bailey, Portfolio Manager at Tribeca Investment Partners. Good to talk to you this morning as we look towards the end of the year and the outlook for 2025. Coming up, Joe Biden is set to fulfill his pledge to visit Africa just weeks before leaving office. More on the US president's trip to Angola next. This is Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix. This is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep winning World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the Stellantis CEO, Carlos Tavares, is quitting sooner than expected as the automaker grapples with slumping profit and weaker US sales. The maker of Jeep SUVs and Fiat cars will be run by an interim committee headed by the chairman, John Elkann. And we can get more now from our transport reporter, Danny Lee, who joins us from Hong Kong. Danny, just give us the details here about why exactly Tavares, the CEO, is out.
Yeah, the Stellantis board and Tavares can't come to an agreement on how to arrest slumping sales and a slumping share price, a share price that's fallen 40% this year. So Tavares is out, and this really comes as there's been many management changes under Tavares to try and stop this falling sales, particularly out of one of his biggest markets, the US. And so we had seen, for example, the CFO leave recently. And so more recently, on top of that, there has been warnings on the financial outlook, which they've had to revise because of the challenges with weaker sales. And so to see Tavares go, not too much of a surprise here. And the urgency that now comes into place in order to find someone who can save Stellantis from this decline that it's facing, the systemic decline in its business.
I mean, of course, Stellantis isn't alone in struggling with weak demand. I think about the struggles at VW, the walkout that's going to start today at Volkswagen. When you're trying to find a common thread between the car makers, how do you think about it?
Yeah, I mean, first of all, the fact that Volkswagen, its workers, tens of thousands of workers potentially walking out in Germany. There's been clear disagreement between its union and the company on how to potentially cut costs and maybe not cut output and not cut jobs in the process. And so therefore, this walkout really symbolizes the challenges and also the risk for Volkswagen trying to come to agreement and not hemorrhage more cash at the same time. increasingly for Nissan, also facing similar challenges as well. But when you look at Nissan, Volkswagen, and also Stellantis, they're all facing weaker sales. They struggle to pivot to electric vehicles, and then also the risk from Chinese car makers in China and abroad.
I enjoyed your piece about Nissan's woes continuing even 5 years after the departure of Carlos Ghosn. Thank you so much, Danny, our transport reporter, with the latest on Stellantis there. Let's get back to Joe Biden's trip to Angola. The president has signed a sweeping pardon as well for his son Hunter, reversing his previous stance that he would not use his executive powers to do so. It comes as he arrives in Africa, honouring his pledge to visit the continent just weeks before leaving office. The trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the US commitment to the continent. On the ground, we can speak to Bloomberg's Jennifer Zabasaja. She is in Luanda in Angola. Jennifer, good to see you. I mean, we have this piece on the terminal from Andreas Kluth, our opinion columnist. He puts it well, if harshly. He says, greeting a lame duck from Washington is better than hosting no duck at all. I wonder what's on the agenda for the president's trip.
Yeah, Lizzie, that's an interesting point that you make, because when you talk to people here in Angola, there's a lot of excitement. Even when you get to the airport, you see a picture of the president, both presidents shaking their hands when they met just a few years ago. But yes, as you mentioned, this is highly anticipated. Joe Biden, President Biden, will be the first sitting U.S. president to visit the country of Angola. He's also the first sitting U.S. president to visit sub-Saharan Africa since 2015. So this is significant. And I think when you talk about what the purpose of this trip is, it is as much about the past as it is about the hopeful future, right? As you mentioned, he is a lame duck president, but still, we have seen this administration pledge over $55 billion to the continent. And they've told us that they've actually fulfilled about 80% of that. And Angola is a very important part of the U.S.'s continued push to be strategically partnered with the sub-Saharan African region. But of course, this is not just about partnerships and diplomacy. This is also economically, this is a symbol of what the strategy is for the U.S. And I mean that by saying the Lobito corridor, which is a very critical railway line that connects Angola, Zambia, and also a few other countries through the Copper Belt. It is important for the future for EVs. And so President Biden and the Biden administration has talked about how the U.S. wants to get ahead of the need for critical minerals and invest into this railway line so that, in fact, there can be an option for the U.S. to be a partner in this for Angola. Now, for Angola, this could be very strategically important. They are very close, of course, with China. They are indebted to China, as we have known in the past. And so, you know, we've heard from President Lourenço that this is not an either or. He has talked about how even with the next President-elect Trump, he will work with him because his focus, he says, is on creating stability and economic prosperity for the country. And so the U.S. is a strategic partner and is a massive player, of course, in the space.
Okay, that's interesting, given that Trump never visited Africa, and we need not mention on air the word he used to refer to these nations. But I wonder, in the case of the current president, Joe Biden, is the fact that he's pardoned his son going to overshadow this trip, Jan?
Well, the timing of it is quite interesting, Lizzie. I mean, we should also talk about the timing of this trip. This was supposed to happen a few months ago, and it was derailed because of hurricane response back in the U.S. Of course, it was clearly of importance as the president has just about, I think, 50 or so days left in office for him to fulfill that promise. And it seems like we potentially could get more and more final decisions by the president as he prepares to leave office. The interesting part about this pardoning is that just a few weeks ago, the White House and the president were saying that they were not going to make a certain action like this. Clearly, there was a decision or discussion amongst family members that this was something that he wanted to do just because of the unknowns that we could potentially see in the next administration. Now, President Biden is on the Air Force One, on his way over here to Angola. He did not take questions from reporters as he was boarding the flight, from our understanding. But we've heard a number of leaders speaking out about this. I'm sure you've seen social media, the likes of President-elect Trump, Rudy Giuliani, also President Biden, and a number of other people commenting on what this could potentially mean. But surely he'll get questions when he gets on the ground here. I can imagine, though, that the Angolan people are hoping that it doesn't overshadow what they believe is a very strategic relationship for this country, for sub-Saharan Africa, and for the people.
All right, Bloomberg's Jennifer Sabasaja on the ground for us in Luanda, Angola. We thank you. I look forward to your coverage of that trip over the coming days. Now, for a look at some of the other stories we're following this morning, early results from Namibia's elections show that the ruling party is on track to maintain its almost 35-year grip on power. So far, the candidate of the Southwest African People's Organization has some 56% of the vote, with its nearest opponent on 18%. SWAPO had faced a backlash over high levels of unemployment, graft and inequality. In other news, Chad has cancelled an agreement that allows French troops to operate in the Central African nation, one of the few remaining countries that Western military forces have used to fight Islamist insurgents in the Sahel region. The announcement by Chad's military government follows decisions by the juntas of Mali, Niger and Burkina Faso to sever security ties with Western allies. Well, those are some of our top stories this morning. Coming up, France's finance minister pushes back against far-right leader Marine Le Pen's budget demands. We'll bring you our exclusive interview. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the French Finance Minister Antoine Armand tells us exclusively that the government will not accept artificial budget deadlines from the far-right leader Marine Le Pen. That's after Le Pen gave her strongest indications yet that she'll topple the administration as soon as this week.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
So that was the French Finance Minister Antoine Armand speaking exclusively with Bloomberg's Caroline Gonin. Of course, on Friday, we had S&P continuing its rating on French debt, keeping it on hold, something of a reprieve for Prime Minister Michel Barnier. But if you take a look at this chart, you can see French oats trading pretty much like an emerging market bond here. The spread against German bunds widening to its highest level since the 2012 debt crisis. Is it a red herring? How significant is this marker? Something that we continue to discuss with analysts. But you're looking at euro dollar weaker. It's also a story of dollar strength. If we flip over to the cross asset picture, you can see the Bloomberg dollar spot index is stronger, 0.5%. It's meant gold's weaker on the dollar strength because you've had President-elect Donald Trump warning that BRICS nations shouldn't create their new currency. Otherwise, he's going to whack them with 100% tariff. But you've seen Brent stronger as well on the signs of a slow recovery in China's economy. Futures, though, if we flip over, pointing weaker on both sides of the pond. S&P E-minis lower 0.2% and Euro Stoxx 50 futures weaker 0.8%. Coming up on the programme, South Africa officially takes over leadership at the G20. We'll discuss the key messages that the country wants to put across next. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models. Our typical investment memo is 86 pages. So we could refine it on very, very seamlessly two pieces. The people aspect to it, to make a judgment call on, do I believe this do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Horizons Middle East and Africa. Our top stories this morning. The French finance minister refuses to accept Marine Le Pen's demands for budget changes despite her threat to topple the government. The euro and French bond futures slide lower. The greenback strengthens after Trump warns BRICS nations not to replace the US dollar, threatening 100% tariffs if they do. Plus, US President Biden signs a sweeping pardon for his son Hunter, reversing his previous stance on not using his executive powers to do so. Well, a very good morning. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. in London. I'm Lizzie Burden in for Jemana Basecci. Welcome to Horizons Middle East and Africa. Welcome to a new week and welcome to December. It's typically the third best month of the year for stocks. We usually get a bit of a Santa rally after the Thanksgiving holiday, but you're looking at futures pointing lower stateside as well as in Europe. FTSE 100 futures flat to the upside currently. But if we flip the board over to the cross-asset picture, as I say, Donald Trump has warned BRICS nations against creating a new currency. That has pushed the Bloomberg Dollar Spot Index higher 0.5%. That is translating into euro-dollar weakness. 105 is where we trade currently, but that's also a bit of a story. France, as I say, the finance minister saying he will not accept artificial budget deadlines from Marine Le Pen. Gold also weaker on dollar strength by 0.7%. We'll keep an eye later on the Fed speak from Williams and Waller. And you've got Brent trading at $72 a barrel, stronger, nearly 0.5% on signs of a slow recovery in China. Let's get more on that now with Avril Hong. She's on standby for us in Singapore. Avril, how are Asia markets doing?
Yeah, Asia stocks are seeing a bit of a bright spot today, but I thought I'd highlight what we're seeing in currencies. As you know, Lizzie, it's really a story of dollar strength, and that's putting pressure on all these Asia FX, including the yen. And in the past week, it's had quite a journey from roughly the 155 level about a week ago. The Japanese currency has strengthened to where it is now. And it's worth highlighting that traders have been upping their bets of a December move by the Bank of Japan from roughly 50-50 to about 60%. I think it went as high as 70% earlier in the swaps market. And this also got a further tailwind in terms of expectations from the BOJ governor, speaking in a Nikkei interview that was released over the weekend, saying that those interest rate hikes are nearing. So it's just adding to the case for the BOJ to hike, because we had hotter than expected Tokyo CPI data on Friday, capital expenditure today that came in strong. But it's worth highlighting what we're seeing in the yen. It's kind of getting its wings clipped against the backdrop of a really strong dollar. What is Trump's tariff threats going to mean for the domestic economies, but also its own economy, inflation, the Fed expectations as well? So this is what we're seeing in the Asia Pacific today, Lizzie.
All right, Avril Hong in Singapore, we thank you as always. And I want to zoom in now on Turkey, which entered a recession in the third quarter as industrial production plunged, giving more evidence to the central bank as it ponders whether to start cutting rates next month. The $1.3 trillion economy shrank by 0.2% quarter on quarter, which is the second consecutive decline. We can speak now to Selva Demiralp, who's Professor of Economics at Poch University. She joins us now. Good morning, Selva. I'm kind of scratching my head as to how this could happen. How can Turkey be both in technical recession and have inflation of 49%?
Yes, I think that is a question that we have to try to find answers to, because despite cumulative rate hikes of more than 40 percentage points, the growth data came at minus 0.2%. So there's a mild recession, that's true. However, the question that we have to address is, despite these rate hikes, how come we have insufficient progress in inflation and growth rate is not slowing down sufficiently? I think the answer has two dimensions. One is fiscal policy has been relatively accommodative, and the central bank has been kind of alone in its fight with inflation. So despite the tightening on the monetary side, fiscal policy has been providing generous spending. And the second issue, to me, that's more important because I'm a central banker by heart, is the weak central bank credibility and the fact that even though the current economic team and the current central bank is implementing correct policies, what they have inherited from the past, where before the general elections, when there was a new economic team and a new central bank, an old central bank, they had significant policy mistakes and tried to disinflate the economy by cutting interest rates. And as a result, Turkey had a run of inflation which peaked 85.5%. So in this world, what we observe is that once the central bank credibility is weakened, even though you do a U-turn and try to implement the right policies, the past mistakes haunt you. And as a result, inflation expectations don't come down. When people expect more inflation in the future, despite signals that central bank is going to do the right things, people bring their demand forward, assuming that inflation rate is going to increase. As a result, when demand is strong, what we see in the growth data is a very mild, despite high interest rates in the economy. So what we have to see, what we have to achieve is to regain confidence. Our research at Koç University, we do a survey to consumers, and as an answer to one question where people say, do you think central bank with its rate hikes is going to be successful in lowering inflation rate? 73% of the participants that represent Turkish population say no. And when there's no confidence, unfortunately, inflation expectations won't come down, and the central bank has to keep rates higher for longer.
Yeah. I mean, you touched on the fiscal side. Are we about to see a kind of pivot from President Erdogan when it comes to going back to pro-growth policies?
It looks like it, because after staying silent, remaining silent for a long time and not commenting on monetary policy, very recently Erdogan did mention that inflation is going to come down. And it will come down due to low interest rates because of his belief that interest rate is the cost of borrowing, and therefore by lowering interest rates, inflation is going to come down. Now, as orthodox economists, we also acknowledge that interest rate is the cost of borrowing. However, by cutting rates, you would trigger demand pressures and inflationary expectations, which would dominate and increase inflation in the end. However, to answer your question, yes, I do think that central bank is going to cut rates soon, despite the fact that inflation remains far above central bank's year-end targets, not for this year, but also next year. Like tomorrow, we will see inflation data for November. Right now, the inflation rate is 48.5%. And if the inflation numbers come along with consistent with expectations, it's going to come down to 46%. However, the indicators, especially the data for Istanbul inflation, is around 3%, which is usually a good indicator for general inflation trends. If that happens, then central banks' time of a rate cut is going to, it will have a hard time justifying a rate cut because when the inflation rate is higher, even from the data, the target that you released last month, then clearly you are not on the right track to consider easings.
Yeah, well, indeed, the central bank sees 44% inflation at the end of the year. Our economists at Bloomberg Economics do see that December rate cut. We'll keep an eye out on it. But Selva Demirel, Professor of Economics at Koç University, good to speak to you with your outlook for the economy there as well. Thank you. Now, South Africa has officially taken over the leadership of the G20, the first African nation to lead the multilateral forum. President Cyril Ramaphosa says he wants to use his country's presidency to ease the plight of heavily indebted African nations, but Donald Trump's proposed tariffs may likely complicate his mission. Bloomberg's Ntando Tukwana joins us now from Johannesburg with more. Good morning. What is likely to be South Africa's key message to the G20 during this presidency?
Good morning, Lizzie. So as South Africa takes over the presidency of the G20, President Cyril Ramaphosa's overall messaging has been one of greater global economic growth, but one that is inclusive and sustainable. It's also the first time an African country is presiding over G20, and he wants to use this as an opportunity to take Africa's developmental priorities, as well as of the global South, to the agenda of the G20. And a critical issue is really addressing the high levels of debt facing African nations. A lot of African nations are really being crippled by a lot of debt, and they've actually had to forego spending, on productive areas of the economy, and instead they have these exorbitant debt servicing costs that they have to, or that they are faced with. Other issues that Cyril Ramaphosa would want to, bring to the forth are climate change issues and climate financing issues, as well as food insecurity. But we will get more details throughout the week and tomorrow as he officially launches, the country's takeover of the G20.
I mean, we've been talking about Trump's tariff threats. We know how much uncertainty hangs over 2025. How tough is the task that lies ahead of President Ramaphosa pushing this agenda for the G20 against that backdrop of global political instability?
Well, he definitely does have his work cut out. He takes over this presidency of the G20 at a time of wars and increasing trade protectionism. I mean, just this weekend, U.S. President-elect Donald Trump saying that he will slap, or threatening to slap BRICS nations with 100% tariffs. And, South Africa is part of that bloc. So there's that to manage. But there's also these growing tensions between the US and China in terms of trade tariffs and, these likely economic policies that Donald Trump may try to push forward. We don't know how those are going to pan out, but certainly that is one area that he will have to watch closely for. But aside from the trade issues, there's also, peace and security issues that Cyril Ramaphosa will have to manage. He has to bring together member states who hold dissenting views around, issues like the fighting that's happening in Gaza, as well as Russia's or Russia's invasion of Ukraine. Those are some of the issues that are going to, make this a very complex G20 presidency.
Certainly a difficult moment for that summit. Bloomberg's Ntando Tukwana in Johannesburg, we thank you as always. Now, let's get to some of the other top stories that we're following for you this morning. Total Energies may greenlight a $750 million gas project in Nigeria next year, potentially signalling progress in the West African nation's efforts to revive hydrocarbon investment. Earlier this year, the French energy giant approved an investment in a joint venture with state-owned Nigerian National Petroleum Company to develop the Ubeta onshore field. In other news, Ireland is heading for the return of a coalition government led by the party of Prime Minister Simon Harris, Fine Gael, along with Fianna Fáil party as well. With 2/3 of the results announced, the two parties are on track to get more than 80 seats, meaning that they'll need the support of a smaller party to get to the 88 needed for a majority. And in Romania, the ruling Social Democrats are on course to win parliamentary elections there. According to preliminary results, the incumbents have about 24% of the vote against about 18% for the far-right alliance for the unity of Romanians. The NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. Well, those are some of our top stories this morning. Coming up on Horizons, the French finance minister tells Bloomberg that he will not accept artificial budget deadlines from the National Rally leader Marine Le Pen. We'll get more on that political turmoil live from Paris next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the French finance minister refuses to accept Marine Le Pen's demands for budget changes, despite her threat to topple the government. Take a listen.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Now, the political standoff has led to market jitters, with the euro slipping and France's borrowing costs rising. We can get more now from Bloomberg's Caroline Conan, the lady behind that interview. Caroline, what else did the finance minister tell you about the concessions and how they're going to impact the deficit?
Clearly, in this interview, the goal of the French finance minister, Antoine Armand, was not to give extra concessions to Marine Le Pen. It was to reassure investors without looking like he's giving more concessions. In fact, the Prime Minister, Michel Barnier, has already given some concessions last week that are going to cost about 10 billion euros, including taxes on electricity. They were supposed to go up in this budget. They will not. In fact, prices of electricity will go down. And also the reduction of some social contributions of companies was supposed to be abandoned. And in fact, Michel Barnier will keep those reductions for the lowest income. And even despite all this, Antoine Armand, the finance minister, told me he's actually sticking to the deficit target of 5% for next year.
Responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity.
Clearly, if the French political turmoil keeps pushing up French borrowing costs, that's also going to impact the debt burden of France. That's supposed to be around 50 billion euros for this year. Michel Barnier had a small reprieve on Friday night with Standard & Poor's actually maintaining the credit rating of France to AA-, which is 7 levels above junk. But we'll see, obviously, if the situation changes this week with a possible vote of no confidence.
Yeah, and as we know, markets are the guardrails on democracy. I wonder if you could just talk us through the choreography here. If there is going to be a no confidence vote, how would it play out?
Today, Lizzie, we're going to have a vote probably on the social security part of the budget. And if Michel Barnier thinks he's not going to pass it, then he's going to have to use a 49.3 article in the Constitution himself, provoking a no confidence vote as soon as Wednesday. So it all depends on Marine Le Pen, whether she accepts the concessions already made. She said she wanted more on pensions, more on drug reimbursement. So that's all part of the social security budget. And then there's another deadline, which is probably towards the end of this week, on the finances of the year that's already past 2024. And even if Michel Barnier and his government manages to pass all these votes of no confidence and survives, then there will probably be another vote of no confidence on the overall budget just the week before Christmas. So that's how this is going to play out over the next few days. On Sunday morning, it seemed like Marine Le Pen was perhaps open to a more debate, more compromise. But then on Sunday night, last night, she actually argued that the government had himself put an end to the discussions.
All right, Bloomberg's Caroline Gonin in Paris. We thank you for that excellent interview. And in the Middle East, we have Emmanuel Macron on his visit to Riyadh as well. But coming up on Horizons, Syria's largest city, Aleppo, has been seized by rebel forces as President al-Assad looks to his country's two biggest backers, Russia and Iran, for support. We'll get more on that next. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Turkish-backed rebel forces have captured Aleppo, Syria's second largest city, over the weekend, and they're now pushing south. Syria's President Bashar al-Assad reportedly flew to Moscow, despite concerns that he may not be able to rely on his 2 biggest backers, Russia and Iran, for support. Let's go now to Bloomberg's Sam Dagger for more. Sam, I thought the war in Syria was supposed to have ended 5 years ago. The country divided into 4, and this seems to have come out of nowhere. How has this happened?
Yeah, not really. I mean, we just haven't been paying attention. I mean, obviously, the conflict was sort of frozen. Yes, I mean, the only reason Bashar al-Assad has been able to hold on to power is because he was being backed by Russia and Iran. Iran providing mainly, the manpower on the ground, the forces, because his army had collapsed, when he had faced a popular uprising in 2011, and that then morphed into a civil war. He hasn't been able to rebuild his army, so he was relying on Iran and its proxies, mainly Hezbollah and the militias from Iraq, as the manpower. And Russia obviously was providing the political support, and Russia has an air base, but Russia has been busy in Ukraine, and Iran obviously has sustained major blows from Israel, and Hezbollah's hands are now effectively tied in Lebanon.
So how much assistance can Russia actually give Assad now, given the war in Ukraine?
Well, I mean, I think at the moment, everybody, the Russians mainly, and maybe to some extent the Iranians, I mean, yesterday Iran's foreign minister himself flew to Damascus to meet with Bashar al-Assad, and he said the situation was very difficult. I mean, that's a direct quote from him. And obviously the Russians are watching this very closely. They did step in with some airstrikes, but very limited. I think what both Moscow and Tehran would be looking at this point is maybe some sort of negotiations with the rebels and the opposition, which are backed primarily by Turkey.
Yeah, I mean, interesting to see as well, Saudi trying to strengthen ties with both the US and Iran. Is it actually possible to hedge those bets, and especially when you've got Donald Trump coming into the White House?
Absolutely. I mean, when you talk to Saudi leaders and officials, they tell you this makes perfect sense because we are pursuing what they call Saudi first policy, foreign policy. They're basically looking at their alliances that serve their own strategic interests, primarily what's going to serve their major economic transformation project known as Vision 2030. So they're reaching out to, obviously, Iran. They had this rapprochement last year that was guaranteed by the Chinese. They're also obviously very interested in deepening their ties with their traditional ally, the United States.
All right, Sam Dagger, thank you as always for your insights on all these pretty tricky geopolitical tensions and relations. But that does it for Horizons Middle East and Africa. I've been Lizzie Burden in London. I hope you'll stick with us for Daybreak Europe. Tom Mackenzie's coming up next as we look at futures pointing lower. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The Euro and French bond futures fall as the finance minister tells us exclusively the government will not accept ultimatums over its budget.
We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
President Joe Biden signs a sweeping pardon for his son Hunter, reversing his previous stance just weeks before leaving office. And Carlos Tavares quits Stellantis in a dispute with the board over how to steer the troubled car maker away from weak sales and a stock slump. Happy Monday. European futures pointing lower. There could be a further drag coming through from France and equities there on the politics and the brinkmanship over that budget. European futures pointing lower by 0.9% after a week of gains last week. The FTSE 100 futures currently flat. S&P futures pointing lower by 0.2%. NASDAQ 100 futures also looking to drop 42 points. Non-farm payrolls is the data point of the week, arguably, when it comes to the US, dropping on Friday. Let's flip the board and look cross-asset. You're seeing quite significant selling pressure across US Treasuries right now, with yields up, price down, 421 right now on the US 10-year. And you can see what's happening in terms of euro dollar as well. Currently 105, the weakness coming through for the euro. And you can tie that, of course, to France, but also strong dollar. 150 right now on the Japanese yen. Gains of around 3% last week for the Japanese currency. Today, giving up some of those gains, down 0.6%. The governor, Ueda, of the BOJ, giving some commentary in a newspaper over the weekend, suggesting that he is still open to the prospect of another hike in December on the 18th. Brent trading at 72.26, currently up 0.6%. Now, France's finance minister has told us he refuses to accept Marine Le Pen's demands for budget changes, saying the government won't be blackmailed. The political standoff has led to market jitters, with the euro slipping and France's borrowing costs rising amid concerns, of course, over a potential government collapse in France. Antoine Armand spoke to us exclusively.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5 or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
That was our exclusive interview, of course, with the French Finance Minister, Antoine Armand. Let's bring in Caroline Connat, who conducted that exclusive for us, joining us out of Paris. Caroline, they have made concessions. The National Rally, Marine Le Pen, Jordan Bardella, they want further concessions. What did Armand tell you about whether or not further concessions are coming?
It seems like the government has already done some concessions and doesn't want to do more. And in fact, Antoine Armand repeated several times that they don't be blackmailed and they will not accept ultimatums from Marine Le Pen. As you know, Marine Le Pen has set a deadline of today, Monday, probably mid-afternoon, to see if she's actually going to back or not a vote of no confidence, which could potentially lead to a government collapse as soon as Wednesday. We'll see how this pans out. Clearly, Michel Barnier has repeatedly said that he's already done lots of concessions, for example, on prices of electricity, on the reduction of social contributions, and even on pensions. He's already done some effort with the lowest pensions actually that are going to rise as soon as January. Marine Le Pen wants more, but they don't want to have more concessions because what they've already done is already going to cost 10 billion euros, and they were planning to save 60 billion euros in this budget. So clearly the savings need to come from somewhere.
So Caroline, what are you and the team watching for next? How does this unfold from here?
Today, there's going to be probably a vote on the social security part of the budget, which includes everything on pensions and also on drug reimbursement, which is something that Marine Le Pen also wants to change. And if obviously there is no majority, then Michel Barnier, the Prime Minister, will have to use his 49.3 article in the Constitution to provoke himself a vote of no confidence that could happen as soon as Wednesday. So we'll see whether the National Rally actually accepts some compromise later today. They're going to have a meeting with their National Rally lawmakers. There are 120 lawmakers from the National Rally in the National Assembly, probably around 2 p.m. French time, and then we'll find out exactly what they're going to vote. But you know, for this motion of no confidence to actually make the government collapse, you also need the support of the socialists, because the socialists, they have 70 lawmakers as well. So if they do not support this no confidence, in fact, Barnier will stay in place. And what's interesting in this interview with Antoine Armand as well is that he also opened the door to perhaps the socialists, rather than just discussing with Marine Le Pen, which they said they don't want to do anymore. Perhaps the socialists could be the way out here for Michel Barnier in order to avoid a government collapse this week.
Bloomberg's Caroline Connat, excellent. With that exclusive, of course, the French finance minister on what could be a make or break week for this French government. Let's bring in Bloomberg's MLive strategist right now for the market analysis and moves around this, Mark Cranfield, for the detail and reaction. Mark, we got to our 90 basis point spread of French over German debt last week. Where do we get to this week? What do you expect the market reaction to be to the developments we've seen over the last 48 hours out of Paris?
Oh, bond traders think it's an early Christmas present for them. They love volatility when it's created by the French bond market. And it's not just about the spread with Germany. What's really interesting now for them is that French yields are already above Spanish and Portuguese yields, and they're pretty neck and neck with Greek yields now. So it's an all-round play here. French bonds are underperforming against several of their peers in Europe. It's no longer just about what's happening with Germany. And that gives added fuel to any downside bets on French bonds. So traders are pretty excited here. It's the beginning of the month. They got fresh P&Ls. They see some negative news coming out of France. It looks like it's going to be taken. This could be volatility that lasts for a few days. Plenty of chances for them to come in and use the futures market, which is typically at this time of year, maybe a little bit less liquid than usual, could push the market around quite a bit. So we will be looking towards that 100 basis points threshold against Germany. Haven't seen that since the European debt crisis more than a decade ago. Everything is in play here, and bond traders pretty happy about it.
Okay, looking for 100 basis points at the next level, potentially an early Christmas present for these bond traders. Briefly, Mark, do traders care more about the jobs data or central banks this week?
It's really more about the central banks. The jobs data obviously will have distortions because of the hurricanes that were on and off. So that's pretty much in the market already. It's more about, is the Fed going to go ahead with 25 basis points? It looks as though the market is getting close to pricing that in. But we've got the Bank of Japan as well. The Bank of Japan now, after what Ueda had to say in the press, looks as though people are getting pretty convinced there could be a rate hike there as well. Within 24 hours, we could have a rate cut from the Fed and a hike from the Bank of Japan. That sets up next week as being pretty exciting as well. That's good for the currency and the bond markets as well. So really, central banks is the big deal. Jobs, of course, it's always volatile, but really keep your eye on what the Fed people have to say. Jerome Powell speaks this week.
Okay, excellent analysis for us on what's happening in France and looking ahead to the rest of this week. Our MLive strategist, Mark Cranfield. Mark, thank you. Let's see how Asian markets are faring, then check in with Avril Hong in Singapore. Some optimism, expectations building again in China, it seems. Avril.
Yeah, I mean, if you look at the factory activity indicators, they do seem pretty encouraging. If you're looking at the currency reaction, though, it seems like a bit of a negative reaction given the dollar strength. And this is against the backdrop of Asia currencies really all coming on the back foot today, given the resurgence in the dollar, even though there are factors that typically support these local currencies. You just talked about this with Mark, how the BOJ governor Ueda has been talking about how they're nearing rate hikes. Look at how the yen is faring. The yuan is sliding to the weakest level against the greenback since July, despite the expansion in factory activity for a second month and those encouraging signs in the Chinese economy. Some are saying that the big beat on the ties in the private numbers were because of the front loading by companies ahead of Trump. So keep that in mind as well. Flip the board, take a look at what we're seeing in Asia stocks as we have the tech names doing well. Japan banks are also the ones that are supporting the gauges. Chinese stocks have paired some of the earlier gains. You do get the sense that for there to be a convincing turnaround, more government action is required. Tom.
Avril Hong in Singapore with a market reaction. Thank you. Now to a major corporate story that has broken over the weekend. Stellantis CEO Carlos Tavares is resigning following a dispute with the board over how to arrest weakening sales and a stock slump. For more, let's bring in our transport reporter, Danny Lee. Danny, why is Tavares out?
Yeah, I think there's just going to be no love lost between the unions and the suppliers who will be cheering the fact that Carlos Tavares is gone, and the fact that the Stellantis board decided they're fed up now of the challenges that Stellantis is facing, and particularly how to grapple with the slumping sales and a share price which has fallen 40% this year, and the warning signs that had been coming through from Stellantis, its revised earnings of late, and all the management upheaval happening around Tavares, and more recently, the loss of its chief financial officer. So the board and Tavares, the meeting has come to a head with Tavares leaving, and finding a replacement will be quite critical as Stellantis faces quite a dire outlook in the coming months. And so it needs someone who can help right this ship. And for Tavares, seen as a turnaround maestro, they need someone else who can really help lead them forward.
Okay, Stellantis looking for a new maestro, new leadership at the top of that automaker. Transport reporter Daniel Lee with the details. Thank you. Here's what else to be thinking about this week then. On Wednesday, talking of the central banks, and this week, arguably, the non-farm payrolls. We're going to get the page book on Wednesday, so building out a picture, of course, of that US economy as we lead up to the non-farm payrolls print. On Thursday, it is the OPEC Plus meeting. Don't forget that was delayed by 5 days. We'll see to what extent there is alignment or, of course, fractures amidst that grouping around where to go next with oil supplies into the market, and clearly demand out of China will be a picture there as well and a consideration. And on Friday, it is the big one when it comes to the data front then, the non-farm payrolls print dropping on Friday and could well tie into expectations around where the Fed goes next. Markets do expect now a probability that they will cut again later this month. About a 60% chance being priced in by the markets of that cap. We'll see if the job data adjusts that. Coming up, Joe Biden plans to visit Angola, the first US president to set foot on the continent since 2015. We head to Luanda to bring you all of the details next. This is Bloomberg.
government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction.
Kevin Florzet, member of the investment committee at Carmignac, steering clear of French debt for now, but finding opportunities in European and French equities on the valuation story. Kevin, thank you. Now to some other stories making news this Monday. French President Emmanuel Macron will be in Saudi Arabia today as part of a two-day visit where fighter jet sales and geopolitical tensions will feature high on his itinerary. This is Macron's first state visit to the kingdom since the killing of journalist Jamal Khashoggi in 2018 at the Saudi consulate in Istanbul. Volkswagen workers across Germany plan to stage walkouts starting today. That's after Labour leaders and management failed to reach an agreement over how to slash costs at the car maker's namesake brand. VW's management says the company needs to shut down 3 German factories and lay off thousands of workers, but union representatives are pushing to keep the plants open. Coming up, we're going to bring you an exclusive interview with the co-founder and CEO of Robin AI on how artificial intelligence is set to shake up the legal industry. That is next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young Black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Welcome back. Now, one industry that artificial intelligence is set to transform is the legal profession. Startup Robin AI is initially focusing on contracts, the core instruments, of course, of legal services. Very pleased to say I'm joined now by Richard Robinson, the founder and CEO of Robin AI. It's a business that is backed by the likes of PayPal Ventures, Cambridge University, Temasek, to name just a few of the investors. Richard, thanks for your time. How much demand are you seeing for your products, for your services across the legal space? What's the outlook for next year?
We're seeing a lot, I have to say. I mean, before ChatGPT, we were seeing growth, but since ChatGPT, we're seeing a lot more. So the outlook for next year is that we expect to grow faster next year than we have this year, which is pretty remarkable, even for a company in the fast growth space like we are.
What is that, Richard? Are you able to give us a kind of dollar number on that, an estimate in terms of what you're targeting for revenues for the business?
Yeah, well, we crossed the $10 million mark this month, and we expect next year to at least triple that number, which again, historically, it's impressive if a company at our scale can double. It puts yourself in the top decile of growth companies, but we're seeing a lot more demand than that, and we think we can grow even faster.
Which parts of the legal kind of ecosystem are you targeting? What company? Talk to us about some of your clients, what their needs are, and how they are creating efficiencies.
Yeah, we really work with the world's biggest companies. And the reason is that they spend the most on legal services. That in private equity, where we do a lot of work, they spend something like 1% of all assets under management on legal services. So that's a huge growth sector for us. And we have customers in that space and got a bunch of enterprise customers as well. People like PwC, KPMG, General Electric. These are all customers of ours who are spending billions globally on legal services. And that's where we're expecting to see even more demand, highly regulated industries.
Yeah, it's highly regulated, and you're expanding globally as well. I know you've got a footprint in Singapore. Richard, which parts of the legal system are you expecting to expand into? What does Robin AI look like in 5 years' time?
Yeah, well, eventually we want to be able to tackle every single legal problem. We're building an AI legal assistant that really anyone in the world should be able to use. But we've started with contracts, as you've noted, because it's the biggest segment of all legal services spend. But over time, we'll graduate to tackle things like litigation, things like consumer legal issues like buying and selling your house. Eventually, AI is going to take on all of the heavy lifting in the industry.
Okay, so we might get our own kind of AI legal assistants at some point, which sounds quite useful. Look, Richard, you worked at Clifford Chance. You did the hard graft. You moved up the ranks. Your product, the critique would be your product is going to undermine all of that and have pretty detrimental effects on the labour force as people try to move up in terms of the legal work. They have to do that grunt work to move up and get to partner.
Well, look, I think lawyers around the world are going to celebrate what I'm doing because, like you say, Tom, I did a lot of that grunt work, and I can tell you I don't miss it. But the work we're automating is the kind of work that, frankly, doesn't teach you that much, in my opinion, and it's the kind of work people shouldn't really be doing. I think there's going to be a more exciting future for the next generation of lawyers where they're doing more complex work, they're doing global work. We can take the world's laws and we can help encode them in AI. And so the job becomes more human. I think it's very exciting.
But Richard, we're going to have fewer lawyers as a result of this, right?
I think that's right. Yeah, I think we won't need as many people to do the job. But the economy keeps growing. I think the pie is going to keep bigger. And so we're still going to need lawyers and we'll still need to hire them fresh out of university. So there's still a career there for people.
Okay, Richard, thanks so much for your time. Richard Robinson, the founder and CEO of Robin AI. Let's get back to the story in France. We've got some breaking lines coming through from Marine Le Pen, the party chief, saying that she will and they will topple Barnier, the Prime Minister, of course, of France, unless there is, quote, a miracle. So again, Le Pen's party chief saying that they will topple Barnier, the Prime Minister, unless there is a miracle. This is the party chief, Jordan Bardella, speaking on RTL. Checking the euro for you right now, trading at 105. It comes after Marine Le Pen suggested and hinted strongly that she is firming her stance on this negotiation. And after the finance minister of France, of course, reporting to Michel Barnier, spoke to us exclusively and said that they would not be over this budget. Concessions have already been made, but the finance minister suggesting to us that there would be no further concessions. And we saw the reaction from Marine Le Pen to that over the weekend, putting a time frame around Monday, today, to get some movement on that budget. So we continue to monitor this story for you. Now, according to data from MasterCard, switching focus, Spending Plus Black Friday sales in the US grew at a faster pace this year. Let's bring in Bloomberg's Stasha Afanasieva for the details. What have we been seeing about the data, what it tells us about the health of the consumer and where they've been spending their money over this spending period?
Yeah, well, Black Friday sales are up 3.4%, but once you strip out inflation, say 2.6%, it's actually not that impressive. So I think the consumers are very perhaps resilient, but very cautious, and that tallies with what retailers have been telling the market at quarterly results. If we zoom in to a company like Best Buy, which sells electronics, or Ulta, which is cosmetics, then they were seeing more foot traffic on the big day, but because they've been that's not necessarily going to translate into much higher sales.
Okay, so a resilient but a cautious consumer. And we'll see what plays out for Cyber Monday today, of course, and whether that theme continues today. Dasha, thank you very much indeed on, of course, Black Friday and what it told us about where the consumer is putting that money to play. Dasha Afanasieva with the details. There's plenty more coming up. Stay with us. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Happy Monday to everyone. We continue to keep an eye on what's happening with France, of course, and we've had some lines crossing just in the last few minutes from Jordan Bardella of the National Rally, suggesting, quote, it will be a miracle if Michel Barnier manages to get that budget through without further concessions. So it seems like we are reaching a crisis point, at least when it comes to that contentious issue of how to prioritize spending. So we focus, of course, on OATs, sovereign debt of France. We saw the yield spread versus the German counterpart of increasing by about 90 basis points. But we also, of course, keep an eye on the impacts for some of those major French corporates. So we're going to be looking at the likes of Airbus, L'Oréal and Total Energies. You're seeing the euro already under pressure as a result of what is passed over the last 24 to 48 hours when it comes to the question of France. It is the key story for these markets at this point. Let's flip the board, though, and look ahead to what will become an important story actually towards the end of this week, and that's on non-farm payrolls.
Story? Is this a European story? Clearly, this must have European implications. The euro now is beginning to react to what is happening in France.
And to what extent does it factor in, to your point, an ECB that will have to do more to address some of these growth concerns on the back of the stasis that we're seeing, not just in France, but also arguably in Germany as we head towards that election? And should we be pricing in more ECB cuts, given some of these challenges? In terms of what else we're looking at as well, slightly different It's just worth noting in terms of Chinese bonds, where yields have dropped below 2% on expectations that you're going to get more stimulus coming through. We're looking, I know, one major corporate story, which you have an eye on, which is Stellantis, and change at the top there. And you have to wonder whether this is or at least giving a steer as to whether or not similar stories can be unfolding for other car makers as these executives come under challenge.
So this is the company that is the OEM that has performed worst in Europe. This is Stellantis. This was a company that was basically created by Carlos Tavares. He has put this business together. Jeep, Fiat, Peugeot, etc., all being brought together into this business. It's had an absolutely shocking year in terms of its performance. He was expected to remain in place until 2026. He is now not going to do that, and we're going to have some sort of interim before we get a new CEO coming in at some point next year. Clearly, huge tension with the board. But what does this company now need to do? What does this leadership now need to do in terms of the turnaround plan? What does that look like?
Still got the same problems that it's been facing last week. We had a profit warning from the company in September. No change in guidance over these events, but the market will still be jittery and nervous around a change in CEO. But still, EVs in Europe, it's a sluggish market. The Chinese market looks sluggish. And they're still dealing with the tariff story, of course, out of the United States. The stock price has been under pressure. So still some of the same issues that we saw under Tavares will have to be faced down by a temporary leadership.
Yeah, so to what extent you're getting a melding of the stories that are kind of impacting the broader sector, but also the idiosyncratic stories around Tavares, because the reporting seems to suggest that not only the unions, the board, but also the dealers as well, particularly in the US,
America,
when it comes to the Dodge, the Ram and the Jeep. And one analyst saying, look, there's going to be no love lost in terms of the dealers.
They won't miss him, apparently.
They were not going to miss him as a result of this move. So whether or not this is just more of a Stellantis problem versus, but he was known as the turnaround wizard. That's the other.
Well, he was known as a cost cutter.
And that doesn't always make you friends. And that seems to be what
Generally,
the reporting is bringing out.
And he clearly wanted to resurrect his reputation, and maybe putting short-term needs ahead of the long-term needs of the business. Maybe that's what the board ultimately decided it didn't want to do. So we've dealt with the politics, and you do feel at the moment we're in a very sort of politically driven, headline-driven kind of a market. We've obviously got some of the corporate stories which are worth monitoring. Do we focus back this week and the rest of the month on some of the big central bank stories? We've got payrolls out on Friday. Powell, I think, speaks midweek as well. BOJ's coming up.
So Mark Cranfield from our MLive team telling me in the last hour, for him, it is more about the central banks this week. No decisions this week, from the major central banks. But what we hear from central bank officials, that he says is more important than non-farm payrolls data. You may take issue with that. That's dropping, of course, non-farm payrolls data on Friday. You're probably going to get a revision up for the October numbers because, of course, all those factors at the time around hurricanes and around strikes in Boeing. So those numbers could be revised up to 50,000. That's the view from Bloomberg Economics. 200,000 is the broad print for November that's expected from Bloomberg Economics. They actually see the unemployment rate edging higher to around 4.2, 4.3%. So they're arguing that this number is not going to be telling a particularly strong story about the labour market of the US, as some of those factors are washed out, like the hurricane and Boeing workers coming back to work.
Yeah, it will be interesting to get that sort of cleaner read on the US economy because of the one-offs coming out of the data, as you suggest. But I'm actually looking ahead a little bit further. So yes, we've got Powell speaking midweek and we've got payrolls on Friday. But as some of the movement overnight with the Chinese PMI data, both formal and the Caixin, all of that, and the UADA comments, reminding me that we still have from the Asian geography a lot of things to find out in December. Will we get more stimulus from China? Will we get triple-R cuts, further triple-R cuts? And will we see a hike from the BOJ? That seems to be what some of the communication over the weekend from UADA has been
we've got a really
planting the seed of.
We've got a really busy 2 weeks in terms of the central bank story. I think the BOJ is going to be absolutely fascinating. It feels like the Fed's still an absolute coin toss at the moment. Are we going to have to see a change in tone, a much more aggressive tone? The Doves appear to be winning at the ECB. Does that continue and become a stronger narrative that we need to factor into the euro as well? So it's a really busy 2 weeks coming up from a central bank point of view. But then you've got politics as well on the other side of it. I note that the CAC 40 is down by 1.3%. Other European benchmarks this morning sort of fairly flat. Yeah, the futures calling us down fairly flat. The number at the moment looks very grim for France first thing this morning. We'll come on to that in just a moment. We'll talk about it with Fabrizio Veloci. He is the CEO of Process. We'll get his tech take. Jose Manuel Camper, chairman of the European Banking Authority, is going to be joining us. And we're back to those European equities with Sharon Bell, senior European equity strategist at Goldman Sachs, Tom.
Okay, here's what else to watch for this week then. Today, Biden will be visiting Angola, so he's on the ground for us, as is Jen Zapasaja, who's on the ground for us. Biden is on the ground for his own reasons. On Tuesday, NATO foreign ministers will be meeting in Brussels. Wednesday, it's the Fed Beige Book, so giving us some more detail and colour in terms of the health of that US economy. Of course, there's also the 2024 Monetary Policy Symposium. And on Thursday, it's the OPEC Plus meeting, which is going to be important as well. They kicked that further down the line, of course. They moved that back by 5 days. Will they come to a consensus on whether or not to put more barrels on the market or to hold off on that? And on Friday, it is the non-farm payrolls print out of the US with an estimate of around 200,000.
Let's update you on what else you need to know this Monday morning. With just weeks left in office, the US President Joe Biden has signed a sweeping pardon for his son, Hunter. This reversing his previous stance that he would not use his executive powers to aid his son. The pardon covers criminal acts that Hunter Biden has been convicted of and any other potential legal challenges that may await him. Ireland is heading for a return of the existing coalition government led by the party of Taoiseach Simon Harris, Fine Gael, along with Fianna Fáil. With 2/3 of the results now announced, the two parties are on track to get more than 80 seats, meaning that they will still need the support of a smaller party to get the 88 seats they need for a majority in the Dáil. There has been a fourth night of violent protests in the Georgian capital, Tbilisi. This as the government sought to suspend membership talks with the EU. The country's pro-Western president is defying plans to replace her and calling for the country's constitutional court to annul October's election, which was won by Georgian Dream, a pro-Russian party.
Coming up on the programme, Black Friday sales accelerate in the United States with online shopping a bright spot, it would seem. We will dive into the numbers as retailers prepare for Cyber Monday. Plus, President Biden heads to Angola, fulfilling a promise to visit Africa just weeks before leaving office. We'll be live in Angola ahead of the meeting with the country's president. Up next, we will talk markets. We will be joined by Robert Dishner, Senior Portfolio Manager at Neuberger Berman, and a great voice to talk about the international perspective on French debt. We will talk about that. We will work through the latest news lines and what that means for French debt investors and for the Eurozone more broadly. If you have any questions, if you'd like to get involved in any of these guest conversations, then this morning, as every morning, you can get in touch with us. IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Monday morning, good morning. I'm looking at my fair value calculation on my Bloomberg terminal. CAC 40 expected to open down by now 1.5%. Other European equity benchmarks look like they're going to open fairly flat this morning. This as France's finance minister has rejected Marine Le Pen's ultimatum over a new budget law, even as the far-right leader continues to threaten to push a vote of no confidence against the current government. Bloomberg's Caroline Conan spoke exclusively with the French finance minister, Antoine Armand.
We respect each and every MP, and we respect each and every people in France, whatever they decided to vote or not to vote, of course. But what's my responsibility as a finance minister is to commit to the 5% target that we decided to have at the beginning of our mandate, not only for France or for the government, because it's now needed in order that Europe still remain a country, a continent of prosperity. That's what we aim at. And for that, we need all political leaders to be responsible.
With these concessions that we've seen in the budget, they're going to cost about 10 billion euros. Does that mean you can actually keep this 5% deficit target? Or do you believe perhaps it will be slightly higher, like 5.5 or perhaps higher?
As I told you, our commitment to reduce the budget deficit towards 5% in 2025 and towards 3% in 2029 is not an option. It is something we are very carefully looking at. What does that mean?
But can you actually fulfill this?
Yes, it means that at every time that we made adjustments on our budget, we compensated it with saving, with new measures. It's clearly an important point to underline here. We are committed to this 5% target in 2025.
The French finance minister speaking over the weekend to Bloomberg's Caroline Conan, who joins us now from Paris. Caroline, now what?
Now we're going to see today, Marine Le Pen, as you know, has said this Monday, 3 p.m. French time, 2 p.m. UK time, as a deadline to decide whether she will support or not a vote of no confidence and make the government of Michel Barnier collapse as soon as this week. We heard actually from the president of the National Rally on the radio just before this show saying it would take a miracle for Marine Le Pen to change her mind. So clearly, is she bluffing? Is she not bluffing? You heard from Antoine Armand, the French finance minister. He doesn't want to have any blackmail. He doesn't want to have any ultimatums from the National Rally. He's also perhaps opening the door to the socialists, which I thought was quite interesting because they also have 70 lawmakers in parliament. They can also move the needle because you need the socialists to join forces with the National Rally in order to make this government collapse this week. So we'll have to wait, I guess, for a few hours in order to see if there is a miracle, if there is a bluff from any side, or if there is a compromise that is found.
Caroline, thank you very much. Bloomberg's Caroline Conan, more from her later in the programme. Joining us now, Robert Dishner, Senior Portfolio Manager for Multi-Sector Fixed Income and Head of Trading for London, and Neuberger Berman. Very nice to have you with us, Robert. Let's start with France. We'll pivot the conversation. We'll get your take on the Fed a little bit later, as it's a big week there as well. But let's start with France. The Finance Minister saying we won't be blackmailed. The RN now saying that they will bring down the government unless there is a miracle. Do we expect a miracle by 3 p.m.? And if the government falls, what difference does it make to you?
Look, whether the government falls or not, France's issues are bigger than that, right? They have the large deficit. They need to get that fixed. Growth is slowing across the Eurozone. So a lot of the issues that whether we get a solve or not, it just matters whether we get a relief rally before we see further issues in French spreads. It does not appear like it's going to come from the rating side. S&P actually gave France a pretty long leash on Friday, talked about a protracted period of growth declines. So again, the risk is that you do get something and it snap rallies. But again, the direction of travel does feel like we're going to be moving wider on French spreads here.
So we move wider. So we've repriced, and you think that we've repriced to sort of 80 basis points from where we were pre this crisis, of course. There's talk of whether we go to 100, whether we go to 125 from some banks. But that doesn't matter necessarily. It's just the fact that we are a little bit wider than we were and we stay there.
Yeah, exactly. So my guess is we're going to find a new equilibrium level for French spreads, whether that's 80, 100 or 120. Will have to remain to be seen. But again, this is a French issue. France also has an issue where 50% of its debt matures in the next 5 years, right? So how do they refinance that and at what rates? That compounds the problem in terms of some of the overall fiscal as well.
French problem or European problem?
French problem for now. I mean, we've seen obviously good performance out of Greece. They're repaying some debt early, good performance out of Spain. But really, the next risk is frankly the German elections, right? And do we get some fiscal out of Germany, which is a little bit of the concern, because if you look at some of the statements we've gotten from mayors, there is some chance that they do some fiscal there.
Time for a big insurance cut from the ECB, 50 basis points.
That's not now, but especially given the comments from Schnabel last week, although we're a little confused at the neutral rate being as high as 3%, if I'm being honest. So probably at 25, but again, they do cut 5 times next year, get down to that 1.75 or 2%.
Do you see any value in European sovereigns at this point?
Yeah, absolutely. So in particular, look at a place like Spain, right, where you've got good growth numbers, you've got good relative value. I mean, granted, it's now trading, at tights to France or inside of France by the most since like 2008 or something like that. So, there are value across, a number of the countries within the Eurozone. So there's a lot of relative value opportunities there.
When it comes to the US, we've got Jay Powell speaking later this week. We've got non-farm payrolls on Friday. Markets seem to be expecting that there is a greater chance now that they go again later this month with another cut. Where do you land on that, and how do you look into 2025?
Sure. So, for right now, our call is that they do cut this month, but they're likely going to be done after that. And so remember, we get projections this month as well. But it is a big week. Powell is either going to cement the rate cut, my guess is Wednesday, or he's going to push back against it. So he wants to either go into this meeting either priced at 20 basis points or priced at 8 to 9 basis points, depending on the data. And so, but it's a big week. We get ISMs today. We get services ISMs. We have jobs on Friday, as you've noted. So there's just a lot. And the Fed will also get inflation next week as well as retail sales before their meeting. So there's a lot this month.
There is a lot. And how do we interpret the Fed then, Robert, when it comes to the politics? Because the Fed doesn't want to talk about the politics. The Fed doesn't want to talk about things that Powell might or might not do, doesn't want to speculate. But the market, on the balance of everything, is assuming that we will get some more tariffs. And therefore, to have these conversations that don't reflect any of that or any of the likely policies of President Trump seems a little sort of removed from reality. So how do we interpret the Fed in that environment?
Sure. So the Fed will bring stuff in when it becomes likely that it will happen, right? It's tough for the Fed to speculate, but they are looking at the fiscal. The U.S. fiscal is on a poor trajectory. We will take that into account in terms of how they're looking at policy. But again, given the underlying strength of the U.S. economy or resilience of the U.S. economy, I think they're at 3% consumption right now for the fourth quarter. The Fed doesn't need to do much more to continue to support the economy. And as you've noted, we're looking to get a recovery of jobs this Friday, as well as a restatement of the October results.
It's interesting. We're talking a lot about data. Are we back on the data? Are we back on the Fed? Are we back on the ECB? Or are we still trading politics? In terms of the kind of dominant themes for the markets going forward from here, is the Fed now playing second fiddle to the White House? Does the ECB play second fiddle to what is happening in Paris? Which is the dominant theme that markets are now latched onto?
No, it's a great point. The market can only look around one corner at a time,
Precisely.
right? Exactly. Yeah. So I think that's going to be interchangeable depending on the day. And what we're likely to see is some decent volatility over the next 2 weeks as they move from data to central banks.
Are these two things aligned? Are politics and the data, do they tell the same story?
Not necessarily, right? And so, you would think, for example, in Euro area, you're getting negative growth, potential strikes in Germany and VW, but yet German rates may or may not, rally on that, and we're seeing the ECB. So the answer is maybe, but maybe not, and it depends on the day. I mean, it's been a brutal, 4 or 5 weeks in terms of the market's attention span.
It's pretty fascinating when you look. I just want to bring the focus to the Bank of England and to the UK, where yields across gilts above 4%, right? And then you compare that to the Italy 2.3% on the 2-year, 3.3% on the 10-year. The market's underestimating a BOE that may have to go further and faster, or is the BOE going to be more aligned with the Fed next year?
It's a great question. The problem with the UK and the BOE is that, and I'll be talking about this separately on Thursday. Unfortunately, with this budget, we may get all the sort of the negatives of austerity, but with inflation. So we're not going to get the inflation decline. So if you look at the OBR report, You look at the Bank of England forecast, we're getting that increase in inflation. Yet when we saw from the latest GDP report, growth is slowing in the UK. And so, how does the Bank of England react to a potentially stagflationary environment, which is tough? And my guess is they're going to probably fall down a little bit on the cautious cut side as opposed to the aggressive cut side.
So cautious cuts. That seems to be the message we've already heard from the Bank of England, doesn't it? Going cautiously, and that is justified then by the seemingly slightly stagflationary environment that we may find ourselves in.
Exactly. And so, we'll see that. Now, they could pivot at any time. And we'll have to sort of see how these inflation numbers play out. One of the things, too, that, I love using the Bloomberg, things, but you can, right? You can see that the inflation numbers in the UK are really driven by rents. It's almost as bad as the US. So if you look at the latest report, something like 57 or 58 basis points of the 2.4% headline comes from the rental number.
You say it's that similar to the US. Well, sometimes the gilt market is just similar to the US. And sometimes we're sitting here wondering, is the gilt market, is it always looking across the Atlantic? Is it sometimes looking across the Channel? Because those two stories are going to look very different in 2025.
Exactly. And one of our concerns all year has been the increase in correlation across accounts. And in particular, the gilt market, we wrote a piece a number of months ago, like, why do you even have UK economists? Just use your US one. So,
you could be a very unpopular man.
What happened to your Christmas card?
but yeah, I mean, no. The issue is those correlations in the gilt market's really been taken by a number of other markets.
Okay, let's wrap things up. We'll talk about the Christmas card list another time. We'll see what the UK economists respond to that. Tom, it's interesting. Yep. You've got France trading 86 over Germany this morning. Does that number increase if the French government falls a little bit? We get news of that falling later on this week. It's interesting that the CAC 40 is down sharply this morning. I can't quite work out whether it's down on French politics
or Stellantis. Called lower by more than 7%.
Kind of a combination of the two, I suspect.
Yeah. Top line is set for a pretty brutal session in the French equities. Robert, thank you very much indeed. Rob Dishner, Senior Portfolio Manager at Neuberger Berman. Coming up, we're going to speak to Fabrizio Bloisi, the CEO of Prosus, joining us in the studio. The business, of course, with that exposure over in China to Tencent, disposing of some assets in China, but also a successful IPO over in India, reporting first half profit as they come through with more than 2 billion customers worldwide. So we speak to the CEO of Prosus. That is coming up, and how they plan to position and drive revenues in the years ahead. Stay with us. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way. And I think where we've been successful is really
Like we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transaction.
A record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs not least. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back. Happy Monday. 30 minutes from the start of the opening trade. Let's check in on your futures, and you should be braced for a pretty bruising day when it comes to European markets, with equities here called lower by a full 1 percentage point. So an even tougher session is what is being lined up for you. CAC count futures currently pointing lower by 1. Stellantis, yes, is a drag that's called lower. The last time I checked, between 6-7%, but also, of course, French politics and the standoff there with Jordan Bardella talking about a miracle and the toppling of the government unless that miracle comes through. S&P futures stateside pointed lower by 0.2%. Let's check the bond markets then. Trading has started, cash trading, and we, of course, zero in on the benchmark 10-year over in France. Yields up 4 basis points, 293, so the spread is about 86 basis points versus the German equivalent, as you can see, 293 on the benchmark. A 10-year over in Italy, BTPs yielding 329, yields up just 1. So we keep a close eye on euro and on the yield story, of course, and the sell-off in terms of French debt.
When we talk to lots of equity analysts about politics, and we try to talk to them about the politics, they quickly try to pivot us back towards some of the corporate stories and some of the earnings stories. So let's do that ourselves now. Prosus has reported a first-half profit after selling stakes in online businesses. Group adjusted earnings before interest and taxes came in at 60 million, compared with a loss a year earlier. We're joined now by Prosus CEO Fabrizio Perazzi, who I'm very pleased to say has been globetrotting and has come back to us in London to talk to us once again. Fabrizio, very nice to see you. So looking at the underlying numbers that you've reported today, big jump in the EPS number, revenue just about where it was supposed to be. What's the overall message that you're communicating with these numbers this morning?
Hello, everyone. Very good to be here again. Big pleasure to be here. Look, we have very ambitious goals. We want to create $100 billion in value in Prosus as a European leader tech company. And I think we have a good start. We are growing very well in revenues, more than 26%. Our profit increased by 5 times. We just made an IPO of $30 billion in India. We just sold $2 billion in assets. So I think it's a good start, but more than that, the most important, we are innovating much more. We are moving faster. We have a culture of innovation and disruption, and that's what Europeans need. That's what the world needs in a moment of so much change. So I'm excited.
Okay, so you're excited. That's clear. You want to double the value of this business in just 4 years, I think. Fabrizio, are you on track? Given what we've seen today, you're on track for that?
I think we have a very good start. The numbers I just said keep me more confident than ever that we have an amazing opportunity. I believe there is so much investment happening today when you talk about disruption in US, but Prosus is positioned to invest in Europe, in India, in Africa, in Latin America. All these regions are going to need as much as innovation as US, as much as AI, as much as disruption. And we are very well positioned to explore that. So I think we are on track, and I'm going to keep coming back here to tell the good news.
Okay, good. Come when there's bad news too, though. That's fine.
Perfect. Good. Give us some specifics around how you plan to create that additional value, $100 billion additional value. What specifically are you looking to do? Where are you targeting those investments?
Good. Look, we have many businesses doing quite well. So today we're releasing the results of our business. We are very good in food delivery. We did the IPO in Spig. We are doing another IPO in Talaba together with Delivery Hero. Our iFood business is growing super fast. We announced that 2 months ago we got 200 million orders. I checked the numbers today morning. It's like 120 million orders we are getting now. So we are doing very good in food delivery. We are doing very good in classifieds in Europe, South Africa, Latin America. My big view is, first, we are in a moment of disruption where technology is going to change everything. We have 30,000 people outside the US investing in innovation, technology, artificial intelligence. There is trillions of dollars of value to be created on this area. Also, we are creating a really strong ecosystem. So again, we have ecosystem in China with Tencent, we have ecosystem in the US with Microsoft and Google, but we are creating an ecosystem that connects many countries that require innovation and investment, and we have the capacity in terms of people, innovation, technology, we have the capacity in terms of investments. So I'm quite confident.
How vulnerable are you to politics when you think about your Chinese investments?
Look, is the biggest market in the world in terms of internet. I just came back from there, and Tencent, our investment in China, has more than 1.3 billion customers in just WeChat.
But for that reason, the Trump administration could put a target on your back.
The Trump administration is going to focus in reducing bureaucracy in US. What I think it's great is going to focus on Musk participate, and I think it's great. So we are, and the market in US is very happy right now. But remember, the Chinese market is also the biggest market in terms of users, of growth. We just released Tencent numbers, and they are amazing, fast, very profitable. So I believe there is a space for a big US vibrant market, and there is a space for a big Chinese vibrant market. But actually, my focus is neither of those. My focus is how I'm going to create $100 billion additional in India, in Europe. I think there is more than space on this area. There is requirement, there is a demand for big investment areas, and we are ready for that.
What is Prosus? What is it going to become? You've come out of this period with a very complicated, you're trying to simplify it. What does the end result of that look like?
This is best. We simplify the structure substantially. We are an e-commerce internet company operating, investing and operating outside the US. We have one big investment in China, that is Tencent. But what we are doing, creating the best in class, the world-class companies outside US and China. And we are doing that in Europe, Africa, India, Latin America, with a very good track record. India, for example, we started investing 7 years ago. We did one IPO 2 weeks ago.
Yeah.
There is more 30 investments in India and many more IPOs coming.
Why don't I just invest in an Indian company that's a speciality in India? Why do I need to invest in a company that has all of these different footprints in all of these different jurisdictions? Why do I need that structure as an investor?
I think if you as investor can invest directly in one good company in India, please do it. We are not here just to do any random investment.
Why is your structure the right
structure?
What
we are doing to do is to share the ecosystem benefits. I have so many good people, technology. I have 30,000 people and a lot of investment capacity to not only invest in India, but share what I'm doing in iFood with India.
So the sum of the parts valuation is greater because you get that
the ecosystem
that
value.
ecosystem that exists. So the value is in the ecosystem.
It's amazing value in the ecosystem, and that's the biggest change of me joining the company. I think 6 months ago, the company was many investments. Now we are saying together, we are one of the biggest big tech companies in the world that can invest in India, Europe, Latin America better than anyone else because we know technology, culture, innovation, speeds, and that's what we are delivering. This is just the first result.
And Fabrizio, last time we spoke, you told me about AI and about how it's going to change your business completely.
Yes.
Can you give us an illustration of how quickly that change is manifesting itself?
Amazing. Last time I came here, I talk about how AI is already changing our business. For example, on how we do logistics or fraud management or personalization, or how we make the business run better, faster, and cheaper. And we even shared all our internal data with our investors because we want to give real cases of AI usage. What we are sharing today in the new results is that we started doing the companies better, but now we are doing the customer experiences better. So what we are doing now is what we call large commerce models, is to use our data, and we have billions of transactions of data to train models to understand what users want. How can we serve them better? So that's the next phase about what
better tailoring the advertising?
not the advertising, the experience, what he wants before he asks, what food he's going to ask before he asks. Because very few companies, again, outside the US, has so many data on e-commerce as Prosus, and we have not only the data of 2 billion customers, but also the investment capacity to take the best of the large language models and apply that to e-commerce. That's our big bet, and I believe if we succeed on that, then we will create a great competitive advantage.
Yeah, and you've talked about the cost cutting as well internally as a result of implementing AI. Can you put a dollar number on the internal efficiencies and maybe the market potential of some of these AI investments? Do you have a rough ballpark number that you and the team look at when potential?
We just publish numbers on many of our businesses because many people talk about AI, but let's say it's just like a buzzword, AI. We said, let's make our numbers public. So we said, we are saving 30% in advertising in iFood. Our fraud reduced from like 1 or 2% to 0.1% in the last 1.5 years because of AI. Our logistics is around 20% more efficient because of AI. In OLX, we are approving, I don't remember the number now, but let me say 1 million, more or less, new listings automatically. So you can just take a picture of something you want to sell, and it's approved 97% because of AI. So we are sharing this data, and I think.
Are you building your own large language models? Who are you using in terms of what is the basis of the software? Is it NVIDIA software that ultimately you're using for this? Does the AI experience become commoditized? I'm just wondering how everybody's very excited about this AI bubble right now. What's real, what's not real from your perspective of having to use it?
Perfect. We have a platform called Token that we connect all our employees to our AI system, but Token uses all the language models. It uses OpenAI. We have a very big partnership with them. It also uses Llama. So we use all the language models to serve our platform. I think you are right. There is a lot of, how can I say, buzzwords and people talking about AI and very few people really delivering. But don't lose the perspective to understand that this is a technology so important as industrial revolution. Everyone is talking about that because the impact is really big. In a few years, all companies, including the media companies and the e-commerce companies, are going to run different because of that.
But the internet was like that as well. But a lot of companies started off looking good and didn't end up being good. Which ones to you good and are doing it well? Who are going to be the winners in this? Like 2 or 3 names of the companies you're working with that you think are going to...
We work a lot of OpenAI, for example. We just released it a few days ago that we are using the voice services of OpenAI to talk with the driver to support them better without having to use the smartphone. So we are using today a customer experience. 70% of our customer experience is done by AI robots now. So we are using AI to really make our costs better and serve better our partners and serve better our customers. And this is just the start. You said internet. Many companies failed. Yeah, in AI, lots of companies are going to fail. But the best ones are going to be the leaders in 3 or 4 years. So we will be there.
Still haven't given me a name, but we'll see. We don't know yet. Fabrizio, great to see you. Thanks very much indeed. The CEO of Prosus. Coming up, headwinds for the banking sector, the European Banking Authority warning over geopolitical risk and, of course, sluggish growth. We are going to speak to the EBA chair, Jose Manuel Camper. The annual risk assessment report has just dropped. We'll bring you the details of that next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of such. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve. This is Bloomberg.
Here in Europe, it looks like French assets are going to be under pressure this morning, not only because of French politics, but also the fact that it looks like Stellantis is going to open sharply low within the auto sector as well. Before we get to the opening trade, let's talk about what is happening in more detail with the European banking sector. It has been a significant focus of late. The European Banking Authority is out with its risk assessment report this morning. It says the failure of many lenders within Europe to cover their cost of capital is one of the challenges that this industry faces. The EBA's newly released risk report also highlights the bank book values are still higher than market valuations, meaning as Citi reports suggest that EU banks' profitability seems to have peaked. All begging the question, is consolidation the answer for European banks? Joining us now, the chair of the EBA, Jose Manuel Campa. Jose, good morning. Let's talk about it. Despite maintaining double-digit ROE levels, a substantial number of EU banks currently fail to cover their cost of equity. The next paragraph in your summary talks about the lack of M&A activity. It remains subdued. Jose, does the European banking sector need consolidation to resolve some of the challenges that you highlight in your risk report?
Well, I think consolidation, first of all, good morning. And I think consolidation is one of the possible answers that the banks can pursue. More important, I think they need to enhance their business models going forward to make sure that they can obtain an adequate return on capital and sufficient return on capital so as to pay this cost of equity, as you highlighted. Consolidation is one of the ways, because one of the big challenges that the industry has, of course, is the investments that they need to confront with the digitalization and technological revolution that will require large investments from their side. So in that part, modernizing their business models through mergers and acquisition is a good way forward. But of course, it would depend on the project that's being put forward by the merging banks. It would have to be a better project than the existing project of the two banks that propose to merge. So it would all depend on the individual proposals.
The impression we get, and we watch what is happening, of course, with UniCredit with a great deal of interest, is that as soon as banking consolidation is proposed, either domestic or cross-border, European governments quickly come out and give a very firm no. How on earth do we get bigger, better, more stable banks in Europe if European politicians are not on board with the idea that consolidation needs to happen?
Well, I think that we need to make sure first that we convince the politicians. Actually, before the politicians, if I may, we need to make sure that we convince the market makers that going through mergers and acquisitions is a good way forward. And particularly for us being a European authority, cross-border mergers, so that we can consolidate the single market in Europe is a good alternative, because many of the mergers announcements that we have seen over the last few years have been mainly domestic consolidation, not international consolidation. So I think first the business case has to be there. Then we do have processes and procedures. We have supervisors, supranational supervisors in the case of the euro area, that need to assess this in a proper way. We have competition authorities that also need to assess them. And the role the government play is relatively minor. So we need to make sure that they know what that role is and that they play it accordingly.
Good morning to you, Jose. Can I ask you about the commercial real estate space? That has been an area of concern for you and for many who follow the banking sector in particular geographies specifically. On commercial real estate, you say in your report that we are seeing an increase in lending to that area, but a lot of that is to do with restructuring to existing customers. How sure can you be that banks are really valuing exposure to commercial real estate accurately at this point?
Yes, as you very rightly point out, this has been an area of focus for the last quarters. Commercial real estate has been going through an adjustment in prices. We think this is also subject to a structural adjustment due to new market practices around the world. So it's been an area of focus. Banks have been asked to be very careful in their assets they provide to commercial real estate entities, as well as the assessment of the collateral that exists supporting the existing loans. It is true that there's been an increase in lending to those sectors. Part of it that we think is refinancing loans that are becoming mature. I think that overall, that growth so far has not been very significant. It's been positive, but not very significant. And we do have the supervisors, and we highlight that in the report. We asked them to put a lot of emphasis on making sure that each loan, as well as I said before, each valuation of collateral behind those loans is properly assessed and regularly assessed, because the evolution of prices can change over time. On the good side, we have seen a little bit of stabilization of prices of commercial real estate over the last 2 quarters.
Okay, that's interesting. And Jose, can I ask you about non-performing loans and the geography of those? Because you report, your report today talks about an increase in non-performing loans and an expectation that that continues from here, in particular non-finance companies, SMEs, very much in focus. Is this a German story or is this a pan-European story?
No, it's not just a German story. It's a pan-European story, but let me qualify that in 2 dimensions. First, we're starting from a very low basis of non-performing loans. It's been the lowest it's been in the last 15 years. So the overall status of non-performing loans across the euro area is low. It's increasing, and it's increasing across all portfolio segments. It's increasing primarily on SMEs, as I said before, and commercial, as you said, and commercial real estate. But I would say that it's not only linked to Germany, it is linked to the economic cycle. So to the extent that the economic growth in Germany, for instance, is lower than in other parts of Europe, I'm thinking now of the Southern European countries, we do see a bigger increase on NPLs there. But it also depends on the structure of the loans, whether on a flexible rate or a fixed rate. So I will not only link it to a single country.
Okay, Jose, do you see that trend continuing into 2025, or is 2025 a year, even if you get lower rates from the ECB, where some chickens come home to roost on that front?
Yeah, I mean, 2025 it will depend on 2 aspects. First, as you say, on the interest rate evolution. If we see that interest rates are continue to drop like they've been doing over the last quarters, then we will expect that would put less pressure on loan lending. Therefore, NPLs will not increase as much. But of course, it will also depend on geopolitical tensions, which we highlight in our report as one of the key areas of concerns going forward, and how those geopolitical tensions materialize throughout the economic activity, and as well on the overall evolution of GDP for the euro area for next year, which at this stage is not very good, but not very bad. So if it continues there, we expect the NPLs to remain constant. If it gets worsened, we likely will see NPLs increase.
Okay, interesting. And you talk about geopolitics because for the first time you've kind of broken out and given some detail around exposure to geopolitical risks for some of these countries in terms of credit exposure. What are the risks at this point as we look to those potential Trump administration tariffs? How concerned are you?
Yeah, I mean, we do highlight in the report geopolitical risk as a major area of concern. We say clearly that it's not the direct exposure that European banks have to potentially, high-risk geopolitical countries, but it's more the indirect exposure they have mainly through the activity of European multinationals around the world. So therefore, as you said, tariffs will have a big impact there. Our biggest area of concern is credit risk at this stage, but I would say it's not only credit risk. We also think that market risk may increase significantly. We see turbulence in financial markets, and we're also putting a lot of emphasis in the report on operational risk coming out mainly through cyber risk. We have seen cybercrime increasing Cyber incidents also increasing throughout last year, so, which affects operational resilience. And if the geopolitical tensions increase, we should expect that cyber attacks and cyber war will become more prominent, and that will have an impact on the sector. So a lot of focus is on operational risk.
Do you think France is a credit risk? We talked a lot during the European crisis of the doom loop between sovereign and bank. Do you worry about what is happening in France? Do you think there's the possibility that we could see a revisiting of that risk?
Well, I do worry about what's happening in France because there's uncertainty about a very basic variable, which is obviously the stability of the government and the budget for next year. So that's an area of concern. Now, do I worry about potential link again between a sovereign crisis and a banking crisis? I hope not, because we have made a lot of progress with the banking union over the last 10 years. That link has weakened, still remains. There's still a strong home bias in the portfolio, in the sovereign portfolios of banks towards the domestic countries. So that's an area of focus that we've been highlighting over the years. But nevertheless, so far the situation, in France has been that the banks continue to be robust. We're seeing a little bit of turbulence around political incidents in the spring of last year, earlier last month in November, we also saw that, but so far has been smooth. So I hope that we continue to be robust. As I said before, the overall situation of the banks, including the French bank, of course, is robust. So that's a good starting point.
Great to catch up. Thank you very much indeed. Jose Manuel Camper of the European Banking Authority, where of course he is the chair. Thank you very much indeed. French stocks are lower going into the market open this morning. This is what the numbers look like. We'll be back with the details of the opening trade in just a moment. This is Bloomberg.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Monday morning, good morning. New month, new P&L for investment managers. Some things, though, stay the same. City continue to lose. Politics continues to dominate. That appears to be the theme right now going into this Monday morning session in terms of European equities. The lesson from Friday, I don't think is a particularly useful one. European stocks rallied. I think actually European futures are going to do very little this morning. However, throw in a bit of French politics, throw in a bit of Stellantis and Tom, things look a little bit more exciting.
Yeah, merci la France, because right now European futures pointing lower by a full percentage point after the gains that came through for European stocks last week. And this is the culprit. The CAC current pointing lower by 1.4%. Yes, Stellantis is part of the story, but also the standoff between the National Front, of course, and the current government over in France around the budget and increasing risks, it seems, that there will be a vote of no confidence. Here in the UK, FTSE 100 futures are currently flat. Anna.
Yes, let's have a look at some of the individual sectors and stocks that could be in focus then as a result of the French news flow and other corporate news flow as well. We focus in on those French banks. I've seen expectations that they will be down at the start of trade today because of the tension in the French politics. The finance minister saying they won't be blackmailed. They've moved a little on electricity, don't want to acquiesce to the other RN demands. So it does look as if, unless there's a miracle in the words of the RN, we head towards the fall of the government over in France. Stellantis in focus as they lose their CEO, push out the CEO. Still have all the same issues, and we could see substantial weakness at that particular business. No change in the guidance, but the uncertainty at the top is enough. Process in focus. Many more IPOs still to come for Process. So says the CEO of the technology investment business. He told us that here on this program, Guy.
Absolutely. The market open this morning is brought to you in French because I think that's going to be the focus. We are going to watch very carefully to see how long it takes the CAC 40 to get going this morning. So here we go. The opening trade, the FTSE 100, nothing happening there. Most markets today aren't going to do a great deal. I think that probably is the expectation. Clear steer. Got a busy week coming up, but there's no obvious kind of guidance for most markets. However, the French market is going to be different. So the stock 600 is barely moving this morning. Wait till France opens. You're going to see that number move a great deal more. The IBEX is down by 0.5%, so a little bit more movement when it comes to the Spanish market this morning. Could take a while to open the DAX. No, there we go. It's down by 0.2%. It doesn't have much news flow this morning. The CAC is now open though, and it is down, Tom, by 1.21%.
Okay, and go. We are laser focused as a result, of course, what is happening across the various sectors in the CAC 40. We keep an eye on autos as well, of course, given the change at the top at Stellantis with that stock called lower. Right now, in terms of your sectors then, broad picture, it's pretty mixed, given the top line is that European stocks are currently down 0.2% as we wait for other major indexes to open. Of course, the pressure coming through for the CAC 40 over in France. In terms of some of your biggest movers right now, just in the first few seconds then, just loading up the print for you as we get the numbers coming through. On the downside, you get the likes of SocGen over in France, so some of the French banks are under pressure. And again, the expectations, you get weak growth as well as the budget challenges and then lower rates from the ECB. The BNP Paribas is also down 2%. SocGen pointing lower, currently down 2.6%. What else are you seeing?
Everything in the French market is down. Everything in the French market is lower this morning. There's not a single stock in positive territory. Hermes, which is kind of the ultimate safety trade, is flat as we speak. But Schneider, this is points in terms of what's coming off the CAC 40. The order is Schneider, LVMH, Total, Stellantis, AXA, BNP. So the financials are in there, but it's interesting in terms of the points drop. It's actually led by LVMH this morning, which is down by 1.5%. So it's not. There is a focus on the French banks, but this is a broad French sell-off that we are seeing. Hermes is now in positive territory. So there's some split in the luxury sector.
Yes, and is that because anybody is focused on the Chinese data and the weakness in the Chinese consumer? Probably not. It's all a sentiment story around France, one assumes, today.
So is there an opportunity in there? Are there babies being thrown out with bathwater as the French market comes low?
In the pan-European context, when we've seen European stocks sold off versus US stocks because of the Mag 7, because of Trump, we've asked that many times of equity strategists, haven't we, about whether things, babies have been thrown out with bathwater.
Well, you're teeing him up very nicely, Anna, to bring in Sharon Bell, of course, standing by, Senior European Equity Strategist at Goldman Sachs. Sharon, thanks for joining us in the studio. Other opportunities in France, particularly around industrials, materials, businesses that have less exposure to the domestic economy of France, more exposure to the global economy, and have that valuation play. Are there opportunities in France?
Yeah, I think there will be opportunities out of this, but of course the risk premium has gone up. And I also have sympathy for the view that, I take an example, the UK, after Brexit, we argued there were lots of opportunities there. but it underperformed for a long time. So I think when the risk premium rises on it's not just the political uncertainty at the moment, it's also what the underlying cause of it, which is the deficit, which is not easy to correct.
You see
there is a couple of years, then we would have forecast or hoped at the time. We've got quite weak growth over this next year. So it's not just the fact that there's a deficit, it's also the fact that you don't have a picture of very strong growth that might help to cure these ills.
How much more bad news do you think we could get in Europe? Because it feels like there's an awful lot of bad news already priced in. If I look at the relationship, particularly with the United States.
Yeah, look, and I understand the US premium, as it were, the valuation premium of US is sky high at the moment.
Yeah.
So I can see the gap being extraordinarily large and arguably too large relative to the fundamentals, particularly given a lot of European companies, including some of the French ones you just mentioned, are very international, just like some of the US companies. So why should the European ones trade at such a big discount? Having said all that, I think it's the US at a very large, high valuation, rather than Europe in and of itself being super inexpensive. If I look at Europe's PE at the moment, it's 13.5 times forward earnings, next year earnings, which is about average. It's about 30 or 40 year average for Europe. It's the US that trades at a very high valuation.
You recently downgraded your outlook for Europe. Is that based on the expectation that news does get worse, or that it's just really hard to convince US investors to put money to work in Europe?
I mean, both really a little bit. I mean, we do expect, we do have growth below the consensus forecast for this next year. So we do expect a bit of worsening growth figures, but not a recession in Europe, I would say. And you could argue that some people are extremely bleak on Europe, and we're not in that camp. But we do expect the economic data to get, certainly not recover at the pace that the consensus expects, unfortunately.
Sharon, when it comes to European corporates and things that might have been overly sold as a result of, or before the French crisis, we were talking, or in amongst the French crisis, we were talking about US politics and what that does, the tariff story, for example. Are you looking for European companies that have exposure to the US and to that growth story there, and crucially produce in the US, and therefore are less likely to attract the ire of an incoming president? Are you looking for those particular names?
Companies? And look, you can find lots of them. We do like those, yes. So, we have a basket of companies, US exposure basket. The companies in that basket, they have almost 60% of their sales in the US, which sounds like bad news, because if they're selling to the US and there's going to be a load of tariffs, Tom, that doesn't sound particularly good. But they generally just own US businesses. They have US employees, US assets, and US sales. So in a way, they're US businesses embedded in the European stock market. Now, they do trade at a valuation premium to the European stock market, which I'd expect, given better US growth, not such a chance of higher taxes in Europe, in the US, etc. But they trade at a big discount to the US market, where their exposure is.
It does make you wonder whether they just see going to go and relist
in the United States, and have that valuation of the US pull up the rest of their European business. I don't know if that.
Yeah, I mean, we have lost some companies out of that particular basket because they have relisted over time. This basket is in some ways a bright basket for companies that might consider that. But there are other routes as well to closing this valuation gap. I mean, performance will be one of them, and they have outperformed recently, which is helpful. Also M&A, so US companies buying, or and you've seen an element of that. There's private bids for these types of companies as well. So there are other ways of closing the gaps.
One thing I was looking at over the weekend was, and I appreciate this is more of a US exceptionalism story than the European narrative, Sharon, but I was looking at I think it was SocGen putting out some research talking about how in Japan in the 1980s, everything looked exceptional and nobody expected that exceptionalism to end. And yet it does end.
It did, yeah.
It really did, and it does end. And I mean, I'm not saying there are direct parallels, but is the team thinking about the US exceptionalism in that way in any sense, or you just see it continuing?
Look, for this next year, yes, in the sense that we are overweight, the US and our sort of recommended asset allocation relative to places like Europe. But the valuation gap is huge at the moment between the US and Europe. A lot of its exceptionalism is already embedded in the price. And over the more medium term, my colleague David Coston, our US strategist, published saying that he thinks that returns on the S&P will be quite low in the medium term. 10-year return of 3% per annum. Not a huge bear market for the US, but something which is pretty low return, given the fact that you're embedding a lot of its future growth already in the current valuation.
So that's a long-term view on the S&P in terms of what you could see in terms of equity performance. In the near term, Is there a case to be made that maybe you want to be better earnings as orders are pulled through and pulled forward in anticipation of tariffs? Could you be looking at slightly better Q1, Q2 on that order story?
Yeah, it might be, and it's a little bit of that maybe, or maybe and some inflection in China as you get people's view that stimulus will help there. You may see a little bit of that, but the momentum in the economic data in Europe has still remained very, very weak. We had PMIs the week before last, and they were soft again. So my view is it's not completely obvious that you will see a big turn in economic data in the near term.
You have a buy British call in your note to us.
Yeah.
What is the underpinning?
What's the underpinning of that? It is in the context of Europe. So we are looking for Europe to underperform or underweight Europe, but within the context of Europe, we do like the UK. And the reason we like the UK is we believe the UK is exceptionally good value. And you can find a lot of these companies with huge amounts of international exposure in the UK with lots of dollar earnings. And we're expecting the dollar to remain reasonably strong. So given that, we quite like it's cheap, it's underpositioned in, it's got a lot of international earnings. Also, the economic data in the UK, I mean, it's been mixed recently. Some of the sentiment data has been weaker, but we think growth in the UK will be better next year than in Euro area.
Okay, Sharon. Thank you very much indeed. Sharon Bell joining us from Goldman Sachs, equity strategist. Let's talk a little bit about what is happening with the Core 6. I want to flag an error that I've certainly made and we may have made. LVMH is under a little bit of pressure this morning, and they're just flagging out, I think probably with the assistance of various other...
teammate and a viewer.
Yes, emailing in. LVMH has gone XD this morning, which is why we're seeing that stock maybe under as much pressure as it is relative to a French market that is down as well. But that's one of the reasons why you're seeing some of the losses maybe being greater, it appears, on the French market than maybe you would have thought, and why we're seeing the breadth of the losses maybe we are seeing in France. But nevertheless, the French market is under pressure. You are certainly seeing the auto sector firmly under pressure. Even Ferrari is giving back a little bit of ground this morning. But elsewhere, ASML is down. You've got Schneider down 1.36% as well. But some of the safety plays, look at that, the defensives in the form of the pharmaceuticals and Nestle doing a little bit better this morning in terms of their performance. But thank you for keeping us honest. We may have missed that one. Like ex-dividends that don't come on a Thursday always confuse me.
Yeah, very annoying.
To be brutally honest. Can't check all of them. And I do get a list, and maybe I don't always check the list as carefully as maybe I should. But LVMH is a big one to have missed. Let's talk about some of the details we're watching elsewhere. Joe Easton is here with those.
So Stellantis is one of the big decliners in the auto space, Guy. You mentioned the auto weakness. Stellantis coming down the most since September, following surprise news of the CEO stepping down. Now, Morgan Stanley analyst writing in a note that he was really well liked given his turnaround efforts and cost cutting. So it is a surprise for them, and they expected it to be taken negatively by the market. And that's what we're seeing. It was down around 7 or 8%, actually went into a halt, now down 5% for that one. Then in terms of the French lenders, we're seeing a lot of the losses concentrated in the French financials today. SocGen, Credit Ag and BNP all slipping around 1.4%. Strategists over at Otto writing that actually the uncertainty around the French budget probably not priced in yet. They're predicting 5% downside potentially in the CAC 40. Then in terms of Delivery Hero, an interesting one out of them, they are saying they're going to make all of their drivers in Spain, their Spanish unit Glovo, they are going to become employees rather than contractors, and they reckon that's going to cut their profit by around 100 million euros for the year. According to them, that's breaking on the terminal. A bit of a profit warning for that one. In terms of rating changes, we've got a decent one for Novo Nordisk. Now, Exane likes the CagriSema data. They reckon that could be a potential boost. We're waiting to come out over the next few weeks. It's the big new obesity drug for them. Exane reckons that will boost the stock on that one. In luxury, Swatch is downgraded to underweight over at JP Morgan alongside Kering. They've got a big note on the sector looking ahead to 2025 and don't see a turnaround at the watchmaker for a while. So that one's slipping at the moment. But there's also a contrarian call on Burberry, a bit of positivity. Finally, Deutsche Bank reckons that Burberry could be about to rebound following a 50% decline this year. It's the first time they've had a buy rating on that stock, according to our data, and Burberry edging very slightly higher this morning in London.
Joe, thank you very much. Joe Easton from our equities team with an update on all of those stocks this morning. We need to tell you what is going on with Stellantis. We'll do that shortly. Shares under pressure after the CEO stepped down. The stock is down by 6.5% this hour. They've not changed the guidance, but the uncertainty at the top is enough to drop the shares yet again this morning. More on the auto sector coming up. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
Watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 East on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Nearly 17 minutes into the new session, new month, new P&L, same stories, I would argue. The French market firmly in focus this morning, being dragged down by French politics, Stellantis and LVMH and Christian Dior going ex-dividend, which we missed earlier. So I'm just going to keep repeating the fact that we missed it. But that seems to be the basic story this morning that is driving the European narrative. Let's turn to one of those 2 stories in a bit more detail. The CEO of Stellantis, Carlos Tavares, has resigned. Did he resign? Was he pushed? Probably resigned, but with some pressure. A dispute over the board about how to reverse the weakening sales story, the stock slump that we've been seeing. Over in Germany, there's also issues. Workers at Volkswagen set to go on strike after talks between union leaders and management broke down. To track both of these stories, we turned this morning to Ollie Crook, who joins us from Berlin. Let's start first with major CEO. This is the 4th biggest car company in the world. Talk to us about how this came about. This felt like a sort of slow-burning fuse that seems to have accelerated a little bit over the last few days.
Yeah, Guy, it's one of those classic slowly at first and then suddenly moments for Stellantis and the CEO here, Carlos Tavares, who is now no longer, as of effective immediately, the CEO of the company. It really went very quickly from unanimous support from the board into basically creative differences, strategic differences, is what the board was talking about. And basically, there's been this sense, Guy, that ever since that profit warning back in September, that sort of already began speculation about a possible replacement for Carlos Tavares. He moved really quickly back then to sort of squash those rumors. He got rid of the CFO. He got rid of the COO for North America, replaced the brand heads for Alfa Romeo, and also for Maserati. All of that very swiftly to sort of quiet those conversations. That obviously sort of resurged. We got it from John Elkann, the chairman of the company now, basically saying that they are going to find a new CEO that they hope to have in place at the beginning of next year. They had started the CEO search at the time when this sort of profit warning was sort of issued, but there has been this sort of sense that this company has been sort of staggering forward ever since that. And we should say, I mean, the shares are down again another 6-7% today. This is the worst auto performer in Europe out of all of the companies, down almost 45% this year. So really sort of a really sort of important moment here. Carlos Tavares really basically presided over this business since it came into being back in 2021 with the combination of PSA and FCA Fiat Chrysler. But so really a sort of critical moment here. We wonder sort of how much is this for more to come across this industry that's really struggling to turn it around.
Yes, and that takes us on to how much of this is a Stellantis problem. And we've heard a lot about the tense relationships between this cost-cutter CEO and the dealers and the unions over in the United States. But how much of this is a wider industry problem? Because there are very few car makers that we are not talking about struggling at this point.
Yeah, so listen, and I mean, I think that for Stellantis, what is sort of interesting about them when you sort of contrast them to many of the German automakers is what they didn't have is the China problem. Their exposure to China was a lot smaller than all of these sort of players here in Germany, whether it's BMW, Mercedes, Volkswagen. What they did have is a U.S. problem. They had this huge bloated inventory, was just not moving off of the lots. And what Carlos Tavares was really known for, and it's funny, you talk to other executives in the industry who were observing basically what was going on at Stellantis. Some of them were really sort of with great incredulity at how much he had managed to cut costs through the years, really sort of gutting a lot of the brands. And as you can see on the chart there, you know, that really served Stellantis quite well for a number of years, particularly in the beginning of this year. But that has come to roost, sort of coming down really rapidly off the back of that, and coming sort of more in line with a lot of the other car dealers. And I think that part of the issue with some of the cost cuts, some of the critics of Carlos Tavares, that he basically sacrificed too much, and you could really feel it in the quality of the products, particularly in the United States, where they went from about 12% market share earlier last year to about 7% market share, where they're really struggling.
Yeah, that's a drop, isn't it? From 12 to 7% on the market share in the US. Look, you talk about the German automakers. There's been some cost cutting there as well, at least plans for cost cutting. And part of that could involve shuttering factories, striking then, at least strikes beginning, and this time focused on VW.
Yeah, that's right. I mean, this is going to be the first walkouts of what is probably going to be a fairly protracted process in these negotiations between the unions and the management over at Volkswagen, the Volkswagen brand. And let's remind people kind of where the starting point is for management here. They're talking about closing potentially 3 factories. We're talking the order of potentially tens of thousands of job cuts. We've been talking about a pay freeze through 2026, 10% pay cut across the board. Basically, we've heard from the brand CEO in the past saying that there is basically no way that they see to get to the cost cuts that they require without closing some of these factories. Where we are now is the unions basically submitted their proposal to cut 1.5 billion euros worth of costs. VW said that basically doesn't go far enough, and the arithmetic isn't quite there, that they basically need to do more cuts across the board. But where we are is at the very beginning of this process. We should say these are very controlled warning strikes. These are not the kinds of strikes that we saw last year with the UAW, but this could be basically the appetizer for that if there's no progress made between these two sides.
Okay, warning strikes taking place today in some parts of that VW ecosystem. Bloomberg's Oliver Crook with the details in terms of the big lines crossing around this auto sector with Stellantis in focus as well. Ollie, thank you. French financials, meanwhile, under pressure, as we've noticed, the banks being hit today on the back, of course, of the continued French budget tensions. Here to break down all the market reaction is Bloomberg equity reporter Julien Pontus, joins us from Paris. Julien, talk us through what is happening in the equity markets of France as investors adjust to the latest positioning around this budget. Some pretty tough lines coming through from the national rally.
Yes, they said it would take a miracle for them not to vote the government down. So on markets, we're seeing a lot more of the same that we saw in the previous weeks. Basically, the spread between France and Germany on bonds is widening a tad. Financials are under pressure. The CAC 40 is underperforming again. But it's not an extreme reaction. It's really more of the same. But when you add up all of this, you have the CAC 40 that's down roughly 5% this year, when the Stock 600 is up 5-6%. The 10-year, the French 10-year bond is trading at the same level as Greece. There's a lot of tension today. At the moment, we're seeing more of this, or more, more downside pressure. There's nothing dramatic at the moment, but I mean, given that the government could fall this week, there's more to come.
Julian, we were speaking to the head of the EBA a little bit earlier on, who described French banks as robust. How much concern is there regarding the link between OATs, the French bond market, and the French banking system? We have seen this risk in the past. Are people worried about this risk emerging again in the future, this connection between bank and sovereign?
I think you mean the doom loop, whereby the sovereign bonds can take the banks down. We're not there yet at all. I mean, in terms of panic on the bond market, it's a 3% yield. So it's still, when you look at the yield, you forget the spread with Germany, with other countries, and you just look in absolute terms. I think that at 3%, it's really not the end of the world. We're not in a position of stress. If you're an equity investor, it really doesn't look good in terms of should you invest in a French bank instead of a Spanish or an Italian bank? That's a real question. But I don't think there's a stress in the sense that, in terms of their solvability.
And Julian, where do we look to next? There are perils, there are dangers and clues that we might head towards confidence votes today, Wednesday, Friday. Could happen any day, I suppose.
Yeah. Yes. It's something in terms of volatility. A burst is expected, I guess, anytime next. You had Kevin Tozet from Carmignac a bit earlier on the program. And I was speaking to him a bit earlier as he came into our bureau, and he said it's basically very difficult to be bullish euro, bearish French CAC 40 this week. Anything could happen in the next 72 hours. So at the moment, with the national rally, having such a tough line, saying there's a 99.99% chance that they will vote the government down. There's a lot of room for things to get worse. But at the moment, as we speak, it's still a bit limited. I think people are still waiting to see whether this is really, this is a game of chicken, or are we really going to a clash?
Julian, thank you very much. Thank you for joining us. Julian Bonfils in Paris for us. And interesting, going back to Sharon Bell's, echoing some of what we heard from Sharon Bell a little earlier, there might very well be opportunities, but in the very short term, the risk premium has increased and there's concern about the deficit. And so it's difficult to make that positive case right now for French stocks.
You look at what happened in the UK. That was the point that she made. There were many babies thrown out with bathwaters at Brexit, but it took a long time for some of those kind of opportunities to emerge because the general market sentiment is so negative.
Coming up on the programme then, Joe Biden heads to Angola. We'll focus in on the US foreign policy front. The first US president to set foot on the continent since 2015, at the tail end of his administration, of course. What does that mean for the future? We'll get an update. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. European stocks are down by 0.2%. Doesn't tell the full story, though. It's what the seeing in terms of the action in France, with the CAC 40 lower by, as you can see, a little over 1% with Stellantis, Renault, and a number of the banks, including Soc Gen, Credit Agricole. All of the banks, in fact, in France, lower by between 2%. 8% drop is the print you're seeing on Stellantis right now. The politics of France, of course, in focus, and the anxiety around the budget. Here in the UK, though, FTSE 100 just off by 0.1% at 8,280. Now, US President Joe Biden will visit Angola in the first week of December, honouring his pledge to visit the continent of Africa, just weeks, of course, before he leaves office. The trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the US commitment to the continent. Bloomberg's Africa correspondent Jennifer Dabasaja is in Luanda, the Angolan capital. Jen, what can we expect then from this visit by Biden, and why is he doing it so late in his presidency?
That's a good question, Tom. I mean, he is doing it late, but I think we should acknowledge the fact that we haven't seen a sitting U.S. president visit the sub-Saharan African region since 2015. We haven't seen a sitting U.S. president actually visit Angola. And so for this U.S. administration, they say it is a good marker, especially when you think about the end of this president's term. And he is trying to fulfill that promise that he made very early on in his administration to strengthen relations globally, including here in sub-Saharan Africa. And so this trip is very much a part of the past, as it is about what they're hoping to be the future. So the past, when I talk about that, the Angola port here was a major for the transatlantic slave years ago. So there's a number of those in the diaspora who are hoping that is a part of the trip. We will see some of them on the trip with President Biden, but it's also about the future. And when I talk about the future, the U.S. is calling it high impact and economic opportunities that they see for this trip. The U.S. Pledged back in 2022 to invest $55 billion into sub-Saharan Africa. They say they're 80% of the way there. Angola was the fourth biggest trading partner with the U.S. in sub-Saharan Africa in 2023. So this is important for them. But really, the main part of the show really here is the Lobito corridor. This is this railway that is very critical to transporting minerals, and we've seen the U.S. increasingly invest into this railway. We will see the president make a trip there. And when we talk about the transition, this railway is very important for it, considering the abundance of copper and cobalt that is in this area. And from the Angolan perspective, they see this potentially as an opportunity for the U.S. to say that Angola is open for business. I think we should remember that Angola left OPEC not too long ago, and they've been struggling for a while to diversify their economy away from oil. And so the president has said potentially this gives investors the clear go-ahead that they can start to invest in other parts of their economy, hopefully to see it grow. So yes, you know, this is about two different sides, bilateral relationship, but also definitely a number of people who are going to be on the ground here, hoping to get something out of this trip.
Okay, so that's why the Angolans are pleased to see the Americans. The Americans have a reason to be there. The Americans perhaps also want to get in the way of some other investment streams that have been coming into Africa in huge force over recent decades, Jen, and that's from China. How does the US wish to reshape that flow?
Yeah, I mean, Anna, I think it is no secret that Angola has been one of the major countries in sub-Saharan Africa that has been indebted to China in particular. We've seen China invest billions of dollars across sub-Saharan Africa for infrastructure. And so Angola does share a close relationship, not just with China, but also with Russia. And so when you ask the U.S. officials about what this is about, they don't say that it is about having to ask a country to choose sides, but instead what they say is giving a country choice, and hopefully then they're offering or they're giving the opportunity then to a country like Angola to demand more. And yet still, Angola still sees this as an opportunity to work with all partners, and they need that when you think about this economy. But the U.S. really does need to present an option for this country that is different than what we've seen from China. President Biden has actually criticized China's previous initiative, the Belt and Road Initiative, as calling it a debt and noose agreement. And so hopefully we see a new administration, or this administration, excuse me, rethink what a partnership and what at least lending and investment actually looks like, different than what we've seen in the past. Anna?
Jen, I'll pick it up. Thanks very much indeed. Jennifer Sabazaja joining us from Angola as we await the arrival of President Biden. Looking forward to the coverage around that trip. Let's switch our attention now to what is happening with the wider trade story and how US President-elect Donald Trump is going to affect it. The debate, of course, is swirling over how far Trump will go and will follow through on his tariff pledges. The import levies are something he's been clear are a political policy proposal.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm. There are no tariffs. All you have to do is build your plant in the United States, and you don't have any tariffs.
Today's big take here at Bloomberg looks at the drama and the realities of Trump's tariff war. For more now, and the various scenarios we could be looking at here and how they're going to play out. Bloomberg's trade czar, Brendan Murray. Nice to see you, Brendan. Nice piece. How does Donald Trump deliver tariffs and not inflation?
Well, it's interesting what you've seen over the past week. Trump has threatened tariffs on countries that account for half the world's population. So that's a lot to digest. And so what we've done is we've taken the expertise of the Bloomberg economics with the reporting of Bloomberg News, and we've plotted out a plausible scenario toward tariffs that both deliver the campaign promises that the incoming president had laid out on the campaign trail, and doesn't wreck the economy. So it's a needle that could be threaded, but it's one that's a very careful line he has to walk.
What is the most likely scenario that you've been able to map out then?
It's one in which tariffs come in phases. They come in blocks, targeting certain products, and targeting, at least initially, products that are not consumer end products, but they're capital goods, machinery, parts, inputs that go into final products. So those conceivably, or at least that's what the economic team did, Trump's economic team did the first time around, they would target those first, so consumers aren't the ones that get hit, because of course he rode this election win on the back of an economy that voters were very worried about inflation.
So one example of where the tariff story gets quite nuanced, maybe. Let's take the example of Canada, and he's already threatened to put certain tariffs on Canada, hasn't he? This was to do with drug flows and migration. But he's threatened to put those on. But then instantly, a lot of people point out, well, what about all the energy imports from Canada? That's going to push up inflation and the cost of energy for American people. That's an example of perhaps where things will become more nuanced. It won't just be about, all imports from Canada.
Exactly. What we did the past week is that these threats that we've seen, these social media posts, are really the beginning point of negotiations. They're not where they'll end up eventually. It's as we saw, Justin Trudeau got on an airplane, flew down to Mar-a-Lago, pledged more border protections and that kind of things. Mexico took a different tact. They got a bit more on the offensive and said, yeah, well, if you put tariffs on us, we'll retaliate against you. And those tariffs that you impose on us, there are a lot of American companies that they're going to suffer because of it.
Yeah, and that reaction function is going to be really fascinating to watch, isn't it? What difference do the people around him make, if any, Brendan? What's our best assessment of whether they really get to influence where this goes? Scott Bessent and the like, and Howard Lutnick, or whether this is really just all going to be decided by Trump?
Well, the people will make a big difference, and what we've seen take shape of Trump's trade team is a mix of a balance of those who will try to make Wall Street feel not so worried that this is going to crash the economy. But then again, you have others. The USTR nominee, Jameson Greer, is an acolyte of Robert Lighthizer, who's the big Trump, the big China hawk. So we'll see an internal debate that'll be very interesting to see how it plays out over the first 6 months, to see if the China, if they're allowed to go big the way they want to go big with tariffs, balanced by someone like Scott Bessent, who will say, hang on a second here, we don't want to crash the stock market, we don't want the economy to slow. So that we'll see that internal debate play out, and as a result, as our plausible scenario and our big take today says, will be something other than the worst case scenario, but something that does have a big an impact too.
We don't want to crash the stock market. Could that be a way to argue your point with President-elect Trump? We've talked about that on this program. Maybe that is something that is firmly on his Bloomberg dashboard. Thank you very much to Brendan Murray, Bloomberg's Brendan Murray, with a take on trade, of course. Coming up on the program, the French government will not be blackmailed. French Finance Minister Antoine Hamon speaks exclusively to Bloomberg, to our colleague Caroline Conan, as his government heads into an impasse with the far right over the budget. French banks starting the week in the red, those stocks trading down. We'll get more on this. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit people. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We are 43 minutes into that opening trade here for European equity markets. And you can see that the French market is underperforming, off earlier lows, but still down by 0.9%. It's a wide range of stocks moving lower, but the French banking sector is certainly amongst them. We see weakness there. We also see the political story in France being compounded, at least from a stock market perspective, by the specifics around Stellantis. And that stock is also under pressure in its French listing, down by 8%. Let's stick to the politics in France, though. France's finance minister has rejected Marine Le Pen's ultimatum over a new budget law, even as the far-right leader continues to threaten to push for a vote of no confidence against the government. Bloomberg's Caroline Conan spoke exclusively with Antoine Armand.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, it's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
Very interesting. Bloomberg's Caroline Conan joins us now from Paris. Really fascinating conversation you're having there then, Caroline. So he says they're not open, they don't want to be blackmailed, but they are open to dialogue. He was making that point. There's already been dialogue. It's a co-construction, not just the brainchild of the existing government. But you were trying to push him on very specific concessions that the RN wants to see. What else did he have to add to whether there could be more? Because they've already made concessions around electricity.
Clearly, his goal here was to reassure international investors not giving Marine Le Pen any more concessions, because, as you heard, they've already made some concessions on prices of electricity, but not only, also, for example, on this reduction of some social contributions from small companies. And clearly, they're not open to really adding a lot to the deficit. Already, these concessions they already made are costing approximately 10 billion euros out of the 60 billion euros of spending cuts that they had already planned. So it remains to be seen. We know that time is running out because Marine Le Pen has set this deadline of 3 p.m. French time, 2 p.m. UK time today to see if she's going to back a vote of no confidence against the Prime Minister Michel Barnier this week. We heard from the president of the National Rally, Jordan Bardella, this morning saying it would take a miracle to change her mind. We also heard from another MP saying that Michel Barnier has to de-Macronize himself. So here we go, get away from Macron, that's a new verb. And perhaps also what I find interesting with the conversation with Antoine Armand is that he's also calling for the responsibility of the socialists, because the socialists, they have 70 MPs, so they can also move the needle and they can also change the outcome of this possible vote of no confidence.
Caroline, if the RN decides to back the motion of no confidence later on today, walk me through the rest of the week. Walk me through the political choreography of how this is going to work.
Then it all goes back to whether actually the socialists also back this vote of no confidence. Technically, the government needs 44 out of the 70 socialists in order to overthrow this government. Technically, the vote of no confidence will probably be presented by the far left as soon as today. The vote of no confidence could take place as early as Wednesday, but then they also have to vote on the finances of 2024, so backward looking, and that vote could take place as soon as Friday. So there's two possible votes of no confidence this week, and then if the Barnier government actually survives this week, then they will have to vote on the overall budget the week before Christmas, so potentially facing another vote of no confidence on December 20.
Okay, Bloomberg's Caroline Conan, thank you very much indeed with that exclusive interview and what to look ahead to in terms of how this could be choreographed in Paris in the hours and days ahead. Here's what else to be thinking about this week then. Later today, President Biden will be visiting Angola. It is the first trip to the continent of Africa for a number of years for a US president. On Tuesday, it's his first visit, of course, to the continent at all since he's been president. On Tuesday, NATO foreign ministers will be meeting in Brussels. Can they do anything else to support Ukraine? That will be in focus. On Wednesday, some details and some more color around the health of the US economy with the Fed Beige Book and the 2024 Monetary Policy Symposium. We'll be listening out, of course, for any comments from Jay Powell and whether or not he does lock in expectations from some in the markets that you get another cut later this month. And on Thursday is that OPEC Plus meeting, which was pushed back, of course, amid question marks about how far they can go in terms of returning some oil to the market. And on Friday, it is the jobs data. So non-farm payrolls with estimates of 200,000 for the month of November.
Will it ever end? Will it ever end? Black Friday apparently already happening. The first estimates are starting to come in, though, about how big a week it has been for the retailers. Last Friday, Thursday, Friday, into this week. And it looks like it's been a fairly positive one. We are potentially seeing US sales up on last year. It looks like the UK data is pointing us in a similar direction. It looks like this has been led by online. Bloomberg opinion columnist Andrea Felstead, though, is here with more detail. So what is it looking like?
It's looking okay. It's not shooting the lights out. It's looking okay. It's definitely been led by online.
Yep.
Footfall in the UK was okay for last week. US again, much more led by online than in store. So I think it'll be okay. I don't think it'll be an amazing Christmas either side of the Atlantic.
Okay, so keeping our expectations measured. Andrea, my sentiment around Black Friday was, I forgot it was Black Friday. I went to go to the shops, then I realised how busy it was, and I turned right round and went home again before I got anywhere near it. Do other people feel this way? Is it a victim of its own success?
Well,
at least physically.
I think in Europe, it should never have arrived in the first place. It's just bonkers. You know, in the US, there is a reason you traditionally went shopping the day after Thanksgiving. In Europe, there is no reason to have Black Friday. All you do is give away margin. You know, this should be it's called the golden quarter because retailers, receive a lot of their sales and profits in this quarter. So why are you giving it away on discount? You should be maximising your profits.
Well, how generous were those discounts this year? How far did they go?
I think they were pretty much on a par with last year. The beauty, there did seem to be quite a lot of deals, and that was borne out by some of the analysts that have looked at the data. The other area where there were deals was on coats, boots, that sort of thing, because we had quite a warm October in the UK. We had a good September, quite a warm October. The US had a very warm October, early November. So apparel did see a lot of discounting, mainly that sort of cold weather gear that they hadn't sold.
I think what we really want to know is what Guy Johnson was buying over the weekend. You've got a new wardrobe.
So I went to one of the big kind of retail parky places, basically to act as a kind of bag carrier, and they were putting up sort of railing and crowd control
because
stuff.
They knew you were going to be.
No, I was there the day before, so this was not for me, Tom. Thank you very much indeed. But they were clearly getting ready for a lot of footfall.
Well, the timing was very good this year because it did coincide with payday, so people would get paid, would go to the Black Friday sales to get their Christmas presents.
And so, give us the UK perspective on this. Then, I mean, you've already talked about how it shouldn't be here and all of that, and yes, and I clearly turned tail and went home and did the Cyber Friday thing instead of Cyber Monday. But
I too was in the West End on Saturday. It was very busy.
Yeah.
Lots of people out. Now the question is, does that continue? Have people bought on deal and they won't buy? We need to look at whether retailers now go back to full price. They will be trying to, but I think it will be very difficult, particularly in the UK, to
go back to full price before Christmas.
They
or do the
can
discounts
do.
Continue
They
for those of us who might miss
They
out?
do try to. What we tend to see is discounts continuing, and I think
so there you are. You're all right,
that.
Tom.
How much of what is on the shelves is bought specifically for Black Friday?
Quite a lot. Things like electronics, you will find those deals will be agreed, back in the summer, earlier, because they'll be shipping in the summer. They will be agreed. They will be, at a certain specification, a certain price.
Yeah.
They will be agreed. Things like the beauty gift sets, they will be bought in advance.
It takes a long time for things to get here these days with this, not using Suez. So the trade routes are longer. Andrea, thank you. Bloomberg opinion columnist Andrea Felstead helping to talk us through Black Friday. On to Cyber Monday. So as well as lots of cyber shopping, what else do we have to look forward to? Developments. We're obviously watching developments over in France to see what happens there. Mid-afternoon deadline from the RN to get some sort of concessions.
Will they, won't they? Will they, won't they? Having given such a strong indication that they're bringing the government down, to back off at this point?
But then, as Caroline said, then the focus goes to the socialists and what they're particularly looking for. So this might not all be down to the RN. But we're watching that. We're also watching, as the month goes on, what kind of stimulus we get out of China, Tom? That's a big question.
Yeah, I mean, that was actually a story that was relatively interesting today. So the data, as you said, was pretty mixed. On the private survey, manufacturing came in stronger, but it was the fact they held off on releasing this We're looking for another big meeting around the Politburo, but absolutely, investors are on tenterhooks about whether that additional stimulus comes through. The yield dropped through 2%, so there's money moving into Chinese
The French market is down, but I hear LVMH has gone ex-dividend.
It has. It was worth saying that for the millionth time. And as we're talking about China on a programming note, join the top conversation at the energy transition at the Bloomberg BNEF Summit. You can scan the QR code there. It kicks off in Shanghai on December the 3rd.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets.
Butter. NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
President Biden changes course and pardons his son Hunter just weeks before leaving office, claiming the case against him was politically triggered. Well, a new threat from France's far right to topple the government hours after the finance minister tells Bloomberg his administration will not be blackmailed. Plus, the Stellantis slumps after the chief executive, Carlos Tavares, quits after a dispute with the board over the struggling car maker's future. Now, good morning, everyone. There's quite a lot going on, but let's start it with the European markets map. As you heard it in the opening trade, we're seeing a bit of pressure on, of course, the CAC 40 over in France, but that's mainly to do with the LVMH that's actually gone ex-dividend. Now, a couple of the other things we're watching out for is, of course, what happens in France, French far right. Those threats to topple the Barnier government is definitely deepening, and that's showing up in some of the spreads. A couple of other things we're watching out for: dollar gaining, again, the dollar pushing higher amid weakness in the euro and the yen. Traders also, again, digesting some of the political tensions in France and a rebound in treasury yields. I'm also looking at Stellantis, those share down more than 5%. And then a couple of the other things we're watching out for: treasuries dipping, traders actually looking ahead to U.S. data that may help shape Fed policy and assess hawkish comments from the Bank of Japan. So for the conversations that matter and the insights you need, let's get started.
market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. President Joe Biden has signed a sweeping pardon for his son Hunter, reversing his previous stance that he would not use his executive power to do so. Now, for more, let's bring in Bloomberg's Brussels bureau chief, Kevin Whitelaw. Kevin, why did he reverse his position on the pardon?
Well, I think he basically was explaining it that he is worried about the political ramifications of a Trump administration and essentially the threats that he's heard from Trump and the people around him about continuing to go after Hunter Biden on various things. So he basically said he got a little too worried that there was going to be a politically motivated set of continued prosecution of his son and that he couldn't put him through that after all that he'd been through. But obviously, this is explosive in other ways, and a lot of Democrats were very, very upset when they heard about it because they were worried about losing sort of the moral high ground when it comes to the handling and the conduct of in the White House and the use of the pardon power.
So, what does this mean for the Democrats going forward and their approach to Trump?
Yeah, it's going to complicate it. I mean, I think that, we've already seen Trump had expanded the idea of the use of the presidential pardon in his first term, pardoning several aides and associates. And so it's not like this is, entirely new ground, but it is a family member in this case. And it just makes it that much harder for Democrats to try to sort of hold the line about how, what's appropriate, what's not appropriate. And this is a time where they've already been worried about the possibility the next administration is really going to take what had been much more nonpartisan Justice Department and legal process and potentially use it for more partisan purposes. And so as they try to guard against that, this is sort of a bit of a chink in the armor.
Thank you so much, Kevin. Bloomberg's Brussels bureau chief, Kevin Whitelaw. Now, the president of France's far-right national rally has vowed to sink the French government unless there is a miracle. That latest threat comes after the country's finance minister told our Caroline Conan that he refuses to accept Marine Le Pen's demands for budget changes, saying the government will not be blackmailed. Well, Antoine Armand spoke to Bloomberg exclusively.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Concessions the government is actually ready to make.
Francine, clearly, Armand was not talking to me to make more concessions to Marine Le Pen. He just wanted to be made, including on prices of electricity, on contributions of small companies. So clearly, this was a way for him to say that we need to pass this budget to make France stronger and especially to keep the deficit under control next year, despite all the new concessions, which are estimated to cost about 10 billion euros. Antoine Armand told me that he maintains his deficit target at 5% for next year. We'll see how that pans out. Clearly, time is running out for this government. Marine Le Pen's national rally has actually given a deadline of today around 2 p.m. UK time, 3 p.m. French time, to say officially whether she will support or not a vote of no confidence that could happen as soon as it's Wednesday and make the government of Michel Barnier collapse.
So what can we expect next, Caroline?
So today we'll see this vote of no confidence, whether it actually happens. And then we could also have another one as soon as the end of this week on the finances of 2024. So kind of validating the budget of last year. And in fact, this 2024 budget is interesting because if the government collapses and there is no time for a new budget, this 2024 budget is going to be rolled over into next year. which in itself will not provoke a shutdown in France, like we see, for example, in the US, but will definitely have a huge impact on deficit and clearly will not please Brussels. So that pans out, and there's another deadline coming the week before Christmas when the National Assembly has to vote on the overall budget. So even if Michel Barnier's government does survive this week, there is possibly another vote of no confidence the week before Christmas.
Caroline, thank you so much for all of the great work there on the ground in Paris. Caroline Conan. Now let's get market reactions from Freya Beamish, Chief Economist at TS Lombard, and Bloomberg MLive strategist Noor Alali. Noor, thank you for joining us. Freya, thank you as well for joining us. Freya, how much should we worry about what's going on in France and how that could affect and impact the rest of Europe?
Yeah, it's obviously incredibly messy. So far, the EC has accepted the Barnier proposal for a 1.9% reduction in the deficit. That then has to get passed by the Assemblée. It's not going to get passed by the Assemblée, in which case the government is relying on decree, which is possible under the Constitution. 49.3 of the Constitution says they can do that, but then it's back in the ball is back in the court of the Assemblée. In the sense of these no confidence votes. But to get the no confidence motion passed, in which case the deficit would sort of stagger on at this 6.6% of GDP, to get that no confidence motion passed, they have to have an absolute majority, as I understand it, which is 289. And that then requires the left and right, there's some cohesion there. So we have the right now very clearly saying that they are willing to bring down the government, but there are still the 66 members within the bloc, which is the left, which is the mainstream socialist party, and they could still abstain. So there's still kind of, as I understand it, there's still something to play for in that question of whether we'll see the reversion of the.
But Noor, I guess with all of that, what's the investment case for a market participant?
Well, look, it's really tough, right? Because we're in a festive time, Francine. December is typically a really good month for the euro, for European stocks. We're expecting bonds to rally with the ECB expected to cut rates. And now you've got all these fiscal concerns that are weighing so heavily on the euro area's second largest economy. So from an investment standpoint, perhaps those yields, those spreads going wider make sense. But as I note today, the spread didn't widen to the levels that we saw last week, right? It has widened by the most since June at the open, which, we keep spreading that size and scope more and more. So there's definitely a lot of concern. And that 2 p.m. deadline today for that no confidence vote that Caroline was talking about is something that's going to get a lot of traders stuck to their screens waiting to see if we're going to get more instability, more uncertainty, or some clarity at least.
Freya, where does the good news come from in Europe? We have elections in Germany. Again, a lot to go for, and you need this Franco-German axis maybe to counter the Trump tariffs.
Yeah, I'm actually quite positive about the fact that the election in Germany has been called. I think the constitutional debt brake is finally coming under the pressure that it deserves to come under. We've been a house that for many years now has suggested that there should be a greater understanding of the downsides of fiscal austerity that is imposed on Germany and therefore the European bloc by the constitutional debt brake. And the fact that we're having this election now on the heels of strong gains for the AfD in the most recent elections, this is a good thing to sort of force policymakers to sort of realize what needs to happen. With the threat of Trump 2.0, with the threat of the withdrawal of funding for Ukraine, that increase in defense spending as a percentage of GDP that has already happened will continue up towards the 2% and probably beyond the 2%. For Germany to really kind of get on board with that, we do need a higher degree of fiscal federalism, which is due, and I think would be positive for the rebalancing of the bloc. And that election coming at this stage really kind of pushes policymakers to say what their case is, to state their case, and hopefully that comes down on the side of allowing these kind of ways of coming around the constitutional debt brake and moving towards greater fiscal federalism.
Nor what if, again, the German election doesn't really give us a clear outcome? If you look at some of the risks out there, is there anyone that can take the place of France and Germany in a new axis that the markets would welcome?
Well, look, at some point last week, Francine, we had the across the curve here, the Greek debt issuances is actually within the French. So you can actually see that yields have been rising in France at levels that now we're comparing to Spain, we're comparing it to Greece, countries that are on the periphery that are notoriously known to having fiscal issues that generally keep markets uncomfortable. Now, we've been talking long about how bond vigilantes this year have been here. We've seen it back in 2022 in the UK. We've seen some semblances of it across treasuries, the UK gilt market again, and now in France. And so the concern here is that bond vigilantes are really not going to catch a break into the year end because there's just one too many risk events that are out there. You also have that concern of tariffs, how that's going to play out in Europe, the euro area. Its major trading partners beyond the region are in fact both China and the US. So really, whichever way you look at it, it's not looking pretty bright.
Freya, how would Europe actually deal with the Trump tariffs? Again, we don't know whether they're 10, 20%. We know that Europe says they're much more organized than the first time round. How much does that hit the economy?
So again, thinking about kind of core versus so-called periphery, the periphery is actually doing really well. And going back to the previous comments we were talking about, the watershed moment there was actually next generation EU. That's when we started to see those kind of synergies picking up. With regards to the reaction of Europe to the tariffs, I think it's going to happen very much on the business level. And there's pros and cons to that. I think that multinational corporations, there's actually quite a lot that multinational corporations have to offer Trump, and I think that's the level that he's going to work on. So we'll see businesses doing deals with Trump to make factories in the US. Some have a lot of space to do that because they don't employ that many. In some countries they don't employ that many workers in the US. There's some countries that really stand out as kind of likely to receive more kind of targeting of tariffs if that's the route that is taken, which is what we think. Germany is definitely one of those. Ireland is really high up there with a massive surplus with the US. So I think it's gonna end up being sort of more case by case, partly because of the US legal system, but also because I think businesses will have something to offer Trump, and I think he's going to want to go down that route of getting wins rather than imposing inflation on the US economy.
Freya, thanks so much. Freya Beamish from TS Lombard stays with us, and thank you as well, Noura Al-Ali from Bloomberg MLive Strategy. Coming up, we'll talk a lot more about Trump. We'll talk about inflation and immigration in the U.S. Stay with us for more market analysis. This is Bloomberg.
Welcome to the world of decentralized Bitcoin. Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Well, still with us, Freya Beamish, chief economist at TS Lombard. Freya, there's so much to talk about, given that we don't know much about Trump policies in concrete, but he talks a lot, about them a lot, saying that tariffs is also his favorite word. What do we know so far, and who do they hit first? China, Europe, or emerging markets?
Yeah, I think Europe has a lot more to offer. They are allies, so they have the option of sort of sweetening things by offering factories and to build factories in the US to create jobs in the US, in the same way that these types of trade talks decades ago happened with Japan. That was the route out. China doesn't have that option, and China also has the underlying economic imbalance, deleveraging, when the rest of the world has already deleveraged. So they have this natural tendency towards needing to rely on external demand. So I think there's going to continue to be sort of flashpoints there. It's going to come down to how many US airplanes is China willing to buy. And also this kind of deeper shift of moving towards domestic demand, which seems to be happening at the margin amongst Chinese policymakers over the past couple of months. They seem to be realizing that deflating their way out of a debt crisis is perhaps not the best thing for their own internal politics either. So there are some kind of good signs there as well.
Freya, when tariffs hit, and I don't know whether it's if or when, the market seems to be pretty complacent that actually this is a negotiating tool. I hear from economists and market participants that they're much more worried about it. But when they hit, is it automatically inflationary also for domestic US?
Yeah, I think markets have been focusing much more on the sort of demand side policies and not so much on the risks of these negative supply shocks, which are really serious risks. I think I'm still in the camp of suggesting that he's going to want to go down the route more of using it as a negotiating tool. That certainly seems to be how Besant views tariffs, and that could be a good thing for global demand for the US economy in terms of just that focus on demand side rather than injecting these negative supply shocks. But negative supply shocks can be incredibly serious for markets. In terms of whether they create inflation, there's certainly a one-off inflation shock if we look at 2018. But even if you look at the level of prices, not even just inflation, if you look at the prices of washing machines in 2018, they went right up at 100% 3-month annualized rate, which is eye-watering, but the level came all the way back down again. So in the first instance, these are sort of one-off inflation shocks. The way in which it translates into higher inflation on a systemic basis is if it actually does create deglobalization, in which case the US economy looks much more to US labor costs and the progression of US labor costs when it's generating its own CPI inflation. And we know that there's a structural tightening of the US labor market, particularly as immigration seems likely to decline.
Freya, thank you so much for all of those insights. Freya Beamish there, chief economist at TS Lombard. Now coming up, Stellantis shares under pressure after the chief executive steps down. More on the auto sector next, and this is Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Well, the Stellantis chief executive, Carlos Tavares, has resigned after a dispute with the board over how to reverse weakening sales and a stock slump. Bloomberg's Oliver Crook joins us from Berlin. So, Ollie, let's start with Stellantis. It seems that the European auto crisis has claimed its first chief executive.
Yeah, that's right, Francine. I mean, listen, there's a sort of sense at Stellantis that basically it never recovered from that profit war in September, and it's been sort of staggering forward ever since. And even at the time, there had been speculation that they might replace the CEO, Carlos Tavares, but he moved very fast in that moment to sort of quash all of those discussions. Rid of the CFO, he reorganized the entire structure of the business, a new COO for North America, replacing the heads of Maserati and Alfa Romeo, and really has been sort of staggering forward through time here, but basically it was not enough. What I think is interesting is that this all came to a head on Saturday, and it went fairly quickly from unanimous support of the board to so-called strategic differences. And I think that for many why is it better to have basically an interim CEO or no CEO for this period of time rather than just Tavares and just sort of accelerating the search for a new CEO, which was already sort of ongoing beginning back in September when we had already known that Tavares was going to leave basically at the end of 2026. That timeline has just sort of really ramped up very quickly, and we should say we can sort of understand some part of this because, of course, Stellantis, despite having outperformed a lot of the other automakers through the last few years, this year is the worst performer in Europe, down some 45%. That's being added to this morning by the strong sell-off.
But Ollie, how much of this is a Stellantis problem versus an industry problem?
Manufacturers like Volkswagen, who, by the way, is also not having its own issues, beginning strikes today because they could not get a resolution.
I just don't see how investors would be able to commit those finances to modernizing Ukrainian steel industry.
So it would have to be some kind of peace agreement with security guarantees, I guess, from the U.S.?
Well, at least security guarantees. I'm not sure what sort of peace agreement have to be in place, but the security guarantees will have to come from our allies, from our partners, from the U.S., from Europe, and they have to be serious enough to convince the investors that that this is the end of the war and Russia will not reattack a few months or few years later.
Yeah, how nervous overall are investors at the moment at this juncture in time?
The way I see it at the moment, the investors are just not investing. That's as simple as that. There are some investments that are being backed up by the governments of European countries or indeed some other countries around the globe. Those that are backed up by the state funds, they are going through. But the private investments, the just normal financial investments, they are on hold. They're waiting for the situation to clear.
Mr. Rinsenkopf, I think last time you spoke on Bloomberg, you also said that you were looking at possible M&A opportunities in neighboring countries. Can you elaborate on that and what kind of projects you're looking for?
We're still open. We're open to all sorts of projects that we can see the synergy with our resource base that we have in Ukraine. So we're looking at the possibilities to acquire and modernize the facilities that are not decarbonized green steel at the moment, but can be. And there are some facilities in the neighboring countries that qualify for that. I'm not going to tell you the names because that may the negotiations, but also we're looking at the distressed facilities that already kind of decarbonized steel assets and that we think we can turn around and bring back to life. So all of those assets are mainly located in the South and Eastern Europe, and that's our region of activities, and that's where we're looking for them.
And are you confident enough that there's sufficient demand given concerns about the world economy, but also that you find the sufficient projects that make sense for you to invest in?
Well, the demand is quite weak at the moment for the steel products, especially in Europe. In Europe, we are seeing struggling steel companies throughout, but steel is the most universal material in the world, and it's a very cyclical business. So yes, now we're in the down cycle, but we know that there's going to be an upside later on. So we're ready to invest now to see that upside.
Okay, thank you so much for joining us. Yuri Rinsenkopf there, the chief executive of Metinvest, with, of course, a very important conversation. Coming up, President Biden heads to Angola, the first U.S. president to set foot on the continent since 2015. We head to Luanda to bring you all of the details. That's next. And this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators.
Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onik, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
U.S. President Joe Biden is heading to Angola, honoring his pledge to visit the continent of Africa just weeks before leaving office. Now, the trip will be Biden's only visit to Africa during his time as he seeks to deepen the U.S. commitment to the continent. While Bloomberg's Africa correspondent Jennifer Zabazaja is in Luanda for us. Jen, good morning. So what can we expect visit? And honestly, why now?
Yeah, Fran, good morning to you. Listen, this was a promise that Biden made very early on in his presidency. As you mentioned, we have not seen a sitting U.S. president visit sub-Saharan Africa since 2015. We haven't seen a sitting U.S. president actually visit Angola. So for the Angolan people and the Angolan president, this is a significant trip, whether or not Biden has a few weeks left or not. But from the U.S. perspective, this is important because they say that they want to strengthen economic ties, but then also showcase what they say as opportunities for the future. So part of the trip is going to be focused on the past. Of course, the Angolan port was a major transatlantic slave port back years ago. But also for the future, it is seen as an economic hub and really a main artery for the future of mineral trade across the Lobido corridor. And so really, when we think about sort of the main focus of this trip, it really is this Lobido corridor. It's a multi-billion-dollar investment play by the U.S. to revive this railway, critical to copper and cobalt transportation. And of course, when you think about over the past few years, Angola in particular has relied on other countries for investment, hoping, though, that this is an opportunity for the U.S. to come in. And also, it's important to think about the position for Angola. For a number of years, they relied on exports of oil for their revenue, and they really have been told, especially by the IMF and others, that they need to diversify their economy. So what we have heard from President Lourenço is that potentially doesn't matter what U.S. president is coming, but the fact that a sitting president is coming gives of approval and a sign to investors that Angola is open for business and potentially the opportunity then to invest in other parts of the economy and hopefully see it grow. So we'll wait to see both presidents meeting for a bilateral meeting. They'll also visit the Lobido corridor, and we're anticipating some announcements coming throughout the next few days.
So Angola has key ties with China, Jen. How does the U.S. wish to reshape this, if at all?
Right. Fran, when some reporters were actually asking about this the other day, and we're saying the U.S. responded saying that it's not necessarily about making any countries choose. It's about countries having choices. And potentially then, if they do have choices between different partners, they're able to demand more. Angola, for a number of years, has, as you mentioned, had ties, very close ties with China, with Russia. China in particular has been investing billions of dollars into this country, into infrastructure, but has been criticized by many officials, nonetheless President Joe Biden, for their lending practices in the past. And so the U.S. says this is an opportunity then to potentially reshape the relationship, but then also attract different kinds of investment and different kinds of partnerships. So that is their hope. But from the Angolan perspective, the president of Angola again has said it doesn't matter which president is in office. They are looking for any and all partners. And so again, we will see the U.S. potentially then looking to use what will be very critical for the EV transition, this Lobido corridor, as really an anchor to the broader strategy that they see as future investment into this part of the world.
Jen, thank you so much. Bloomberg's Jennifer Zabazaja there in Angola. Now let's bring you some of the other Top stories today, and Georgia's president is defying the ruling party's plan to replace her as protesters rallied outside parliament in the capital, Tbilisi. Now, riot police fired tear gas and water cannons to disperse the demonstrators. The protests were sparked by the government's decision to delay talks on joining the European Union until 2028. In Romania, the ruling Social Democrats are on course to win parliamentary elections. According to preliminary results, the incumbents have about 24% of the vote, against about 18% for the far-right alliance for the unity of Romanians. Well, NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. Ireland is heading for a return to the coalition government led by the Prime Minister Simon Harris. Now, with two-thirds of results count announced, the main two parties are on track to get more than 80 seats, meaning they will need the support of a smaller party to get to the 88 needed for a majority. And the far-right National Rally has indicated in the strongest language yet that it could topple the French government as soon as this week. Now, the party president, Jordan Bardella, has vowed to sink the French government unless there is a miracle. His comments come hours after the finance minister, Antoine Armand, told Bloomberg exclusively that his administration would not be blackmailed.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. He said, France is at a critical time. We have the arguments. We have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's the political leaders in France that we have a common responsibility, and that this common responsibility includes adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because as you know...
But it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
Well, that was more from our exclusive interview with the French Finance Minister Antoine Armand, made by Caroline Conan. Coming up on Black Friday in the US, with a jump in online sales compared to last year. We'll have more on how consumers have been spending their money. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, retailers are continuing their Christmas sales push this Cyber Monday. Now, a first estimate from Black Friday suggests that U.S. sales grew compared to last year. Bloomberg opinion columnist Andrea Felstead joins us. Andrea, always good to speak to you. I mean, so there's Black Friday, and then there's Cyber Monday. I mean, when do we know how well they did?
I think we'll get a feel after today, really. I mean, Cyber Monday is not as important as it used to be. Cyber Monday was always the day you had to order for delivery for Christmas. Well, now you can get delivery right up until Christmas. So it's slightly pointless, but it's still another excuse for deals.
I mean, I kind of feel like they're often on sale. There's a lot of deals. I know this is the biggest, but does it somehow get lost because there was a deal in June or July, or is it still the big one?
This is still the big one. The deals have got earlier. They really start in October with that second Prime Day of the year, and then they really kick off in November. It has been interesting to see the deals progress. There have been bigger deals for this weekend. Beauty, lots of beauty deals about clothing as well. The US was very warm October, early November, cold weather items, they will likely find their way into the same here. We had a great September, it was cold, but October was quite warm. So, you were seeing, I was in the West End Saturday, you were seeing lots of up to 40% off, up to 50% off. It's likely to have been those cold weather items that they haven't sold that are going into the sales.
And this, I mean, it's also coming to the UK and other parts of the world, right? Is this going to be like a make or break moment for retailers the world over?
Oh, yes. I mean, Black Friday's been exported around the world. It should never have been. There is no reason to have Black Friday here. It's the biggest, act of self-sabotage retailers have ever done, because you want to sell at full price going into Christmas. Now, everyone waits for those deals. This year in the UK, it coincided with payday. So it looks like the footfall was up, quite a big weekend. People will get paid. They will be looking for the deals to mainly get presents, but also to treat themselves.
Andrea, thanks so much. As always, Bloomberg opinion columnist Andrea Felstead. Coming up, at Bloomberg Brief with Danny Berger and Manus Cranny in New York, and this is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big. 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes, I don't know why, but for some reason I love thinking about black swans, and at the office everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves things.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
King dollar marches higher. President-elect Trump demands BRICS commitment on using the dollar. Euro under pressure. France's far-right party threatens to sink the government amid budget concerns. And Stellantis craters as CEO Carlos Tavares quits early. Meanwhile, Tesla ramps up discounts in China. Good morning, Manus. Great to be back with you.
Good to have you back alongside me, Danny. Here we go. We're starting on the back foot. You went away with a spirited week last week, with the best week of the month, up 5.7. Sorry, the best month of 2024, I should say. And November was up just under 6%. But we start on the back foot this morning. By the way, small caps were the only people that didn't manage to make a new all-time high last week, even though $141 billion of money flew into U.S. equities. The best step back this morning. So up 4 basis points on the 10s. We both checked this morning. Last week, we dropped by 23 basis points. And Julian Emmanuel at Evercore says, apparently the bond vigilantes, they've gone on holidays. They've gone home for the holidays. We'll take a snapshot of the euro. This is the euro under pressure. French budget woes really are in focus. Will Marine Le Pen topple the government? The National Rally President Bardella said he'll sink the French government unless there's a miracle deal in terms of what's going on with the budget.
So here we are, France's bonds basically trading like Greece, which is apparently the ultimate insult for Europe. Chinese bonds are below that of Japan. Up is down, down is up. All of this world order is shifting, Manus, even before we have a Trump presidency and really understand the full thrust of what tariffs might mean.
And I think an example of that is you've got Justin Trudeau flying down to Mar-a-Lago over the weekend. You've got a message from Trump to the BRICS nations. What is this? It's about weakening the coalition. Perhaps it's about Tina. There is no alternative to the dollar. I want allegiance and I want near fealty to the dollar. What does that do to, strong dollar, weak dollar policy?
And we were both talking about Peter Scher this morning over the weekend, saying that the market consensus has shifted to just assuming that this is an opening salvo. For Peter Scher, that concerns him. I mean, anytime there's a big consensus in the market, fair to say that concerns a few people.
Yeah, well, you got to say when Trudeau gets on a plane, flies down to Mar-a-Lago, it's a smart chess piece to sort of be on side with President-elect. But one message came from President-elect Donald Trump over the weekend. It was this warning to the BRICS nations in case they were still considering uniting around an alternative currency to the ubiquitous US dollar. He posted on Truth Social over the weekend this: they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. Valentin Marinev is the head of FX strategy at Credit Agricole. He joins us now. So look, Valentin, good to have you with us. The dollar is bid this morning for multiple reasons. I want to get your take on this. Is this message from Donald Trump to the BRICS about destabilizing that alliance, or really affirming to the world, I want fealty to the US dollar?
Well, I guess you could perhaps really ask Trump to maybe explain, or President-elect Trump, for an explanation about that. But I guess my own interpretation of the remarks certainly highlight that Trump does want to have his cake and eat it too. Certainly, President-elect Trump would like the U.S. economy to be trading less with the rest of the world, therefore running less of a trade deficit. And equally, he also wants the rest of the world to continue to use the dollar as if nothing has happened. And I think one of the two things is, actually, they're quite incompatible. So one of the two things have to give over the longer term. Our best guess is that as Trump and his administration continue to try to reduce the trade of the world with the U.S. as they're trying to reduce the U.S. trade deficit, one of the consequences of that would be weaker dollar down the road. As a matter of fact, a weak dollar may be part of the solution if you want to reduce the U.S. Trade deficit. On the day, however, the comments are seen as potentially suggesting that Trump is a strong dollar politician who would be ultimately resisting any calls for currency weakness. To me, it's just adding to the overall inconsistency of the policies that the Trump administration will be pursuing next year. And clearly, to your point in your question, certainly encouraging other economies not to abandon the dollar just yet.
Valentin, how do you understand, though, whether this, as the market is interpreted, that Manus and I discussed, that Peter Scheer is saying, that it's an opening salvo? How do you understand that versus, the first move of the chess gambit versus believe Trump, he means what he says, and trade accordingly?
Well, I think Donald Trump is fully aware that really part of his policies, at least, is quite inconsistent. But it is the case that if he does want to reduce U.S. trade deficit at a time where he also wants to pursue a policy of aggressive fiscal stimulus, the administration has to make sure that the funding conditions for the U.S. from here are likely or should remain favorable. And a big part of that, indeed, is a stable, potentially stronger dollar. And I guess this is what the long game is for the Trump administration from here, really try to pursue a protectionist, really even mercantilist, while at the same time keep the dollar stable and potentially even allow slight appreciation there. So the game has just started, and I guess next year would be the time and place where we're really going to experience more of the same. But once again, I think the lack of compatibility between those two objectives could ultimately claim a victim, and that victim may indeed be the dollar itself.
Well, how do you play defense next year? If we're going into 2025, it looks like a number of central banks are going to have to be on the defense. Ground zero for currency wars 2025 is dollar yuan.
Yes, indeed. And I think that that is one of the key, really focal points, if you wish, for many investors. And I guess for quite discussing that with 2018 is a useful template when it comes to the impact of the Trump mix on the broader economy and I guess the broader FX markets. Back then, as investors like to highlight, dollar renminbi went from 620 to 720, almost 15-20% really depreciation for the currency. We think, however, this time around, there is far less appetite for yuan weakness, at least from the point of view of the Chinese officials. It is the case that 750 is a psychological level, which if broken could fuel financial stability concerns, and those considerations could actually mean that the PBOC, while a participant in a currency war of sorts next year, would be quite reluctant really to really participate in full. So therefore, we think that yes, the dollar may be slightly weaker from here, slightly stronger from here, but no repeat of the 2018 rally.
Perhaps ground zero then ends up being, Valentine, is the euro. It's not just Trump tariffs. It's an auto industry that's on its knees. It's political discord in France. What do you do with the euro? Can you buy it at any point? Is it parity and inevitability at this moment?
Well, I would like to think not, but impossible is nothing, as they say. The point is that it's a perfect storm for the euro at the moment on the economic, political, geopolitical front, and quite a few of our clients are quite bearish. You mentioned parity, and it's really the rallying cry of all the euro bears out there. They will not want rest until we get to that. It is the case, however, that my personal view would be that a lot of negatives are already in the price. However you look at it, really on the political, geopolitical, and economic side, really it does suggest that some, if not all, of the negatives are already in it. So from that point of view, where it does remain a sort of a pressure valve for all investor fears out there, I would be cautious in extrapolating the recent losses really from current levels. I mean, you mentioned France and the French political developments at the beginning. It is the case that they will actually matter for the euro when they start to matter for the ECB, when the French political uncertainty starts to weigh on the outlook in a meaningful way, and indeed it feels contagion to the rest of the EGB markets. So far, there seems to be fairly little evidence of any of that. So from that point of view, we also remain, we think that the ECB will disappoint the dovish market expectations that are in the market. And as a result, again, once again, I do struggle to see euro trend on a trend depreciation from current levels targeting parity.
Yeah, at the moment, euro at 105. Valentine, great to catch up with you this morning. Valentine Marinoff of Credit Agricole, thank you so much. Let's get to some of the other top stories trending on the terminal this morning. The Biden administration unveiled new restrictions on China's access to vital components for chips and AI. That all escalates a campaign to contain Beijing's technological ambitions. The U.S. announced 140 more Chinese entities that it accused of acting on Beijing's behalf, blacklisting them, though it didn't name them in an initial statement.
Well, the EV makers, including Tesla and BYD, are offering discounts and incentives in China. This is to meet their annual sales targets. Tesla is offering a 5-year 0% loan and a 10,000 yuan, that's $1,380 discount on its Model Y. And BYD is offering 1,000 yuan to 3,000 yuan off the same models.
BlackRock is nearing a deal to buy private credit manager HPS, beefing up its alternative asset offering. An agreement could be announced as early as the coming week. It would value HPS at $12 billion or more. BlackRock will pay for HPS with a mix of cash and stock, all of that according to people with knowledge of the matter.
Coming up on the show, French government on the edge. We'll bring you the very latest on the political turmoil from Paris.
And BlackRock's Amanda Lynham will join us later in the program as credit spreads still grind to record tights. All of that to come on your brief this morning.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Iliad is coming out right now.
We have take two numbers back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. We're back together again. Danny Berger and myself, Manus Kenny in New York. Pressure on the French assets this morning. The euro's dropping. The president of France's far-right National Rally has vowed to sink the French government unless there is a miracle budget for next year. Now, that pledge comes as the country's finance minister told Bloomberg he refuses to accept Marine Le Pen's demands for budget changes.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Karen, to see you. So this impasse, Marine Le Pen, she is the queen maker, to say the very least. What scale of miracle needs to happen to close the gap between her and Barnier?
More concessions from the government on the social security budget, more concessions on pensions. She wants pensions to be raised for everyone as soon as January, more concessions on drug reimbursement. She wants Barnier to abandon this plan he had in his budget to reduce the reimbursement for some medicine. Clearly, you heard from the finance minister, my exclusive interview with Antoine Armand yesterday in Paris. The government is not exactly ready to make additional concessions because they've already done some on prices of electricity, for example. And all these concessions they've already made is already costing the French budget as much as 10 billion euros out of the 60 billion euros they had planned of savings for next year. So the National Rally of Marine Le Pen has given Barnier's government until 2 p.m. UK, 3 p.m. French time, 9 a.m. New York time today as a deadline to say whether she will or not support a possible no confidence that could possibly make the French government collapse as soon as this week.
But no government official wants to be the one that invokes the ire of this market, where, of course, brought back to memories of Liz Truss. And Le Pen risks being that person by forcing this no confidence vote. So what are the thresholds that we need to keep mind of to see what could ignite the bond vigilantes?
That's right. And in fact, what Marine Le Pen really wants is for the government to actually say that they respect the far-right electorate, these 11 million French people who voted for the National Rally in the last elections, and that they have made some concessions thanks to the National Rally. But obviously, politically, that is not something that the Prime Minister Michel Barnier can say. So we'll see how this pans out this afternoon. Whether we actually have a vote of no confidence in the next few days. If it doesn't this week, then there is another deadline, which is the week before Christmas, where Michel Barnier has to pass the overall budget bill and potentially face another vote of no confidence by December 20.
Caroline, thanks so much for a fantastic interview over the weekend with the finance minister. Bloomberg's Caroline Conan. Let's stay in Europe because Stellantis shares dropping by more than 8% in Italy this morning. The CEO, Carlos Tavares, has stepped down after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump, which, again, continues this morning. Bloomberg's Oliver joins us from Berlin. Oliver, the auto industry in Europe, it's not just Stellantis. It is a problem for the country as a whole. So when we look at the CEO stepping down, how much of this is a Stellantis problem versus an industry problem?
Yeah, so Danny, we really have everything here on the menu for what's going on here at Stellantis. There is, of course, a industry-wide issue that is basically no one is spared from, whether it's in the United States, but particularly within Europe. And then you have some Stellantis specific issues. And listen, we went pretty quickly at Stellantis from unanimous support of the board to basically creative strategic differences between the board and the CEO, which ultimately led to his resignation pretty abruptly yesterday. This was not a total shock in the sense that there's been a sense that sort of Stellantis has been staggering forward ever since that profit warning back in September, really trying to right the ship. At the time, there were discussions of potentially that Tavares might not make it, but he quickly got rid of the CFO, he got rid of the COO, got rid of the brand heads at Maserati and Alfa Romeo, really to try to stem that conversation, but that has obviously come to a head. I think that for the analyst community and for traders today, there is a question as to why you have to do this right now when you already had a CEO on the way out. Could you have waited a little bit longer for this to be a slightly tidier transition? And also the fact that we can't ignore that investors also kind of like Carlos Tavares because he was very, very strict on cost cuts. He was really cutting costs to the bone. You talk to other people in the industry, other executives, they were sort of in awe about how much he was able to cut costs over at Stellantis, though, of course, his critics would say that that went sort of too far. And you had quality issues, and you saw that really represented in the main issue for Stellantis, where sort of Germany has a China problem, Stellantis had a U.S. problem. They had about 12% of market share in the U.S. market at the beginning of last year. They've fallen down to about 8%. The next CEO needs to deal with that.
Well, it's certainly taken a tumble this morning. I mean, the U.S. car dealers accused them of being reckless in their short-term decision-making. That's part of the argument with Carlos Tavares, is that great cost cutter, but did he have the major plan for the future? Oliver, thank you very much. Oliver Cook in Berlin on the latest on the auto industry in Europe. Coming up, Hunter is off the hook. President Biden pardons his son after previously stating he would not use his executive powers to aid his family. More on the story right here on Bloomberg Brief.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say it in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned executive.
And I'm Jason Key, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No one does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never.
Go. Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too sick? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manus Cranny together in New York. So President Biden has announced that he is pardoning his son Hunter after previously saying that he wouldn't use his executive powers to help him. The president wrote in a statement, quote, "I believe in the justice system, but as I have wrestled with this, I also believe raw politics has infected this process and it led to a miscarriage of justice." Joining us now is Bloomberg's Kevin Whitelaw. Kevin, it's usually a complaint you hear from Donald Trump that the Justice Department has been infected with politics. What does this turn mean to have President Biden pardoning his son, by the way, which is an incredibly sweeping pardon, and using the same justification?
Well, that's right. I mean, I think it has a lot of Democrats worried that it's going to make it that much harder for them to try to, keep the guardrails on a second Trump presidency. And indeed, it does sort of get to the idea that that you've heard from not just Trump, but a lot of the people around him, and including some of the folks he's naming to sensitive positions, that the Justice Department had been sort of weaponized in various ways. The irony, of course, here is it was Biden's own Justice Department prosecuting his son, which actually showed that there was up to now really some separation between the White House and the Justice Department in the traditional way that has been the case for a number of years in the United States. It's also very clear that Donald Trump has suggested to change that. He wants the Justice Department to serve the political aims and perhaps even go after some of Trump's own enemies. And that's where I think you had President Biden say that he had decided that he had to make a decision that he originally had ruled out.
Well, the breadth of this can't be underestimated. I think in Politico, they said they haven't seen a breadth of pardon like this since they saw in the wording of Nixon, and that was in 1974. Over the weekend, we saw Justin Trudeau get on a plane, come to Mar-a-Lago. I mean, this is a very big shift in terms of how to deal with your neighbor before he even sits in the White House. How much was discussed around tariffs, or what was the commitment that Trudeau has made perhaps to ward off the worst case scenario? This is about border patrol, isn't it?
Yeah, I mean, look, Donald Trump is trying to see whatever he can get and whatever kind of negotiation he has. And so, the Canadian Prime Minister went and basically did his best to try to say, hey, we're not part of the problem. We're going to do what you want. We're going to make sure that we're taking on the border more. It's not really clear that what's actually going to change, but a lot of this is for Trump being seen already making a difference. And so you already have an effect that the transition to the next administration is sort of accelerated because, Trump's already, having these state meetings, having these, sort of negotiations and claiming successes. He's done that with after a conversation with the Mexican president. He's essentially doing that as well with the Canadians.
Okay. Thank you so much, Kevin, for being with us. Summing the political machinations of the weekend, Kevin Whitelaw. A quick snapshot on currency. We know the euro is under pressure. We just had a conversation, Danny, with Valentin Marinov going, don't be just so dour on this because he sees a lack of contagion into the rest of the market. But it certainly looks like Marine Le Pen is the queen maker in Paris. She can choose whether to sink this government. But as you rightly said, does she really want to be famed as being the Liz Truss of France? If she calls that no confidence vote and goes through with it, that is like a sword of Damocles across politics.
Yeah, no politician wants to be that. Euro at 105 this morning. Again, Valentin saying that all the bad news is maybe already priced in. Coming up, we're going to catch up with BlackRock's Amanda Lynham. Talk a bit of Europe with her, too.
in 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
King dollar marches higher. President-elect Trump demands BRICS commitment on using the dollar. Euro under pressure. France's far-right party threatens to sink the government amid budget concerns. And Stellantis craters as the CEO Carlos Tavares quits early. Meanwhile, Tesla ramps up the discounts in China. Danny, good morning. Welcome back.
Thank you, Manus. The Thanksgiving break is over. You're greeted by equities selling off in the futures market. Russell 2000 unchanged, with both S&P and NASDAQ down 0.2%. That comes off the back of the strongest U.S. monthly performance of 2024, ending the week with another record high. For this bond market, it is a busy week. You get appearances from Powell, Lagarde, capped off by Jobs Day on Friday. Yields go higher by 4 basis points across the curve. The euro, meanwhile, falls, weakens by 0.6%. We're at 105, kneecapped by not just economic and auto issues, Manus, but also this morning, the latest drama playing out in France. The prime minister threatened with a no confidence vote by opposition lawmakers over the budget.
Yeah, and I think the point that you made this morning, which is, does Marine Le Pen, she may be the queen maker in terms of politics and fiscal probity in France at the moment, but does she really want to be the one that brings down the government and blows out German-French spreads beyond where they were in 2012? In 2012, it was Mario Draghi who?
It was his whatever it takes moment. Yeah. It's remarkable that we've come all the way back to that, and that France at the moment is contending with yields that look like Greece's. I mean, this is the ultimate insult for Europe, right? And so we're in this situation where there's concerns about European weakness. BlackRock's Amanda Lynham weighs in, writing this: elevated trade policy uncertainty has the potential to weigh on investment in the euro area, but the relatively resilient performance of euro credit, corporate credit rather, has not reflected a weaker growth backdrop. Amanda joins us now. She's the head of macro credit research at BlackRock. I mean, Amanda, it's like the storm of all storms for Europe. You have trade concerns, which you point out. You also have the economic weakness. You now have more political discord in France. At what point, if at any point, does this impact the corporate credit market?
Good morning. Thank you for having me. It's so interesting. The growth divergence, the political uncertainty, that has existed in Europe for a while. I think what's really, I think, important to watch is that just the idea of trade uncertainty, not necessarily implementation of trade tariffs, has the potential to weigh on euro area investment. There are a few things, though, that are keeping European credit holding in rather well. I would say, as you noted at the start, European credit hasn't underperformed the U.S., and within European credit, high yield has outperformed IG. So the European credit market is not sending you a signal that it is concerned about growth. We have a different rating skew within European high yield, a bit higher quality. It's a smaller market, so not a ton of bonds to go around. That's a technical tailwind. And then I think what's probably not discussed enough, but is still a very important consideration, the European Central Bank still owns a large chunk of the European IG market, even though the corporate securities purchase program has ended, and even though reinvestments have ended, they still own a fair amount of stock of bonds. And so what that is doing is that it's providing some technical support to the European credit market and possibly incentivizing investors to go down in quality, even though the ECB holds IG credit.
Well, then the Achilles heel in this, I mean, if you add insult to injury, if it's political woe, it's spread woe, you then have potential tariff woe to come. Now, you talk about that impact in the US, and we'll talk about that in a moment, but the tariff impact, the risk of tariff, how does
is no longer a one-time price level shock, but has the potential to kind of feed upon itself, especially if it's coupled with labor shortages, for example, that are pushing wage costs higher. And yeah, I think that second round effect becomes somewhat problematic in that scenario for two reasons. One is it may change the path of forward monetary policy. The second is there would be, in that case, a risk that corporates start to use layoffs to protect their margins. And think about where we are in the US right now. Corporates haven't been really laying off workers to that large extent. You've seen the layoff rate remain pretty low. That's really strong, and the consumer generates 2/3 of US GDP. So if you do have weakness in the corporate market such that they're focusing on layoffs, that has the potential to allow that weakness that is right now contained to the low-income consumer in the US to spread more broadly. And I think that's really where we become concerned at the macro level.
How do you understand how quickly that could happen?
I think really paying attention to the company level commentary is going to be really critical. Right now, companies are telling you that they actually don't have a lot of clarity on the go forward. I think that's fair, right? But I do think pandemic, when the companies were talking about their expectations for supply chain normalization, it was actually much longer than what the market was baking in. So I think we can look to micro level commentary over the next few quarters of tool if they need to protect their margins. That will really be critical again, because we need to keep the US consumer in aggregate resilient in order to contribute to the resilience of the overall economy. And going back to corporate spreads, which is where we began, really it's been growth, and especially in the US, that has allowed credit spreads to reach new cycle tights over the past few weeks. And that will be critical going forward in the US market. In Europe, it's a little bit different. As you know, that growth backdrop is a bit weaker.
What impact, I mean, Scott Bessent, 1 week ago, we had this sort of best and bounce. Danny was on vacation. We had the best and bounce. The bond market rallied, and there was a nice trickle-down effect. We saw this euphoria within credit, one could say. But if you look at his promises, 3% deficit, a deficit of 3%, 3% growth via deregulation, and 3 million barrels or the equivalent thereof in energy. Again, what is the trickle-down effect of that into credit? Because that gives you a very, very different US economic landscape.
3% growth would be welcomed by credit. That would be an above trend pace of growth.
Yep.
And that would be something that the credit market, I think, would view favorably because it would allow corporate credit to navigate structurally higher interest rates. Even though we see some scope for the Fed to cut in December, we're expecting a landing zone or a terminal rate that is above where we've been over the past 15 years. And so structurally higher rates coupled with above trend growth is a recipe that corporate credit can digest. I think in terms of lowering the deficit, that would also be welcomed by the bond market. One of the risks to corporate credit is a disorderly sell-off in treasury yields, as we've been saying.
Well, let's see what Doge and let's see what Besant actually manages to produce. Amanda, always great to get you take. Good to see you. That is Amanda Lynham there of BlackRock on the markets. Stellantis shares under pressure, to say the least. The CEO's surprise resignation. More on the auto sector coming up on Bloomberg Brief. Good morning from New York.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
In case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way. And I think we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It is Bloomberg Brief. I'm Manish Kani in New York alongside Danny Berger. President Biden has pardoned his son, Hunter Biden. This after previously saying he would not use the executive powers to do so. And the president wrote this: "I believe in the justice system, but I have wrestled with this. I also believe raw politics has been infected by this process, and it has led to a miscarriage of justice." Kevin Whitelaw is with us. Kevin, good morning to you. So this is a significant U-turn by Biden. It is the breadth of the pardon that is perhaps most in question this morning. Politico saying this is the broadest pardon that they've seen since Nixon was pardoned in the 70s.
Yeah, I mean, it's the breadth of the pardon, but it's also just the fact that obviously Biden had spent months saying he wasn't going to do this, that he was going to trust in the justice system. And now he's obviously changed his mind. And I think a lot of that is looking at the incoming Trump administration, the kind of people that are being appointed or nominated for key positions, the sort of loyalists, a number of whom have made it very clear that they want to use the machinery of government to go after their political enemies and go after people that they think wronged them. And so, you already have an administration, an incoming administration that's talked about what they see as the politicization of the Justice Department. They feel it was unfairly turned against Donald Trump. Here you have the sitting president also saying he felt that things got political. Ultimately, the concern, I think, from a lot of people is all of this is doing damage to the institution of just sort of law enforcement and the justice system and what are supposed to be career prosecutors who are independent from politics. That seems to be eroding very quickly.
Kevin, are you referring in any way to the FBI pick that we just got in Kash Patel, someone who had been critical of the plea deal that was reached with Hunter?
Yeah, I think you look at that. I think you even look at the aborted effort to appoint Matt Gaetz as Attorney General. But these are folks who have talked about using the weaponry, using the machinery of government, and have talked about wanting to go after people that they thought wronged Donald Trump or wronged Republicans. And so, I think Biden looked at that and had to say that this was, obviously just something that as a father, he was worried about sort of where his son was going to be left. Unfortunately, these Democrats, how do you talk about these institutions, rule of law, what their traditional separation is supposed to be between politics and the legal proceedings? How are you supposed to talk about all of that in a Trump administration in the backdrop of a pardon like this one?
Well, John Bolton had a few scathing remarks. He compared the appointment to almost like Joseph Stalin's secret police, and that it should be rejected. Very quickly, Justin Trudeau came to Mar-a-Lago over the weekend. What did he promise Trump, president-elect, that he would deliver?
Well, I think obviously he talked to the president about tightening border security, and then went back home and said that there's going to make some announcements about some significant enhancements, so what they called to the border. I think this is just very much an effort of everybody to be seen responding to Donald Trump and what he wants, to give him the kind of symbolic victories that he's looking for. Until we see the details, we're not going to really know what that means, and as to how much is actually going to change. And it's really unclear how much that even matters to Donald Trump. How is he looking for actual things on the ground, or is he happy to take the win and to already, have this impression that's going on of how the administration has almost already begun, even though the inauguration is still quite a ways away.
Okay, Kevin, we appreciate that update. That is Bloomberg's Kevin Whitelaw. I want to get you a check on Stellantis shares this morning, down by 7% in the Italian trade. It is off the lows, but still under pressure. The CEO, Carlos Tavares, resigning after a dispute with the board over how to reverse the car maker's weakening sales and a stock slump. Joining us now is Bloomberg's Oliver Crook. Oliver, this CEO had been someone who had thrown many things trying to reverse the fortune of Stellantis. What happened that he could no longer stay on board?
Yeah, and really someone that's been known to sort of turn around very difficult, complex companies. He's been CEO of Stellantis since basically Stellantis came into being back in 2021 with the merger of PSA, Peugeot, Citroën, and FCA, Fiat Chrysler. And he's been running the company, ever since, and has spent his entire career within this industry. He's really been known for sort of running a very, very tight ship in terms of costs. He was also paid a lot of money. People joke the kind of private equity approach to sort of running car companies. And many of the executives that even I spoke to in the German car industry, they were sort of in awe. They were a little bit incredulous as to how he was able to sort of cut costs all repeatedly. And, this is something that basically all of these companies are looking to do right now. There's perhaps also, Danny, a sense that he has pulled that lever. They shot the cost-cutting bullet, and that has been already sort of manifested around Stellantis. While these other car companies now still have that sort of dry powder of trying to bring those costs down, maybe they no longer have that over at Stellantis. What you also have for the other German car makers, you have the China problem. That is not what Stellantis has. What Stellantis now has is a U.S. problem. They had a huge bloated inventory. Part of the sort of criticism of Carlos Tavares was that he had cut too much, and that as a consequence, there was a lot of brand damage done to some of the key brands like Ram, like Jeep. And so you saw that in basically very bloated inventory over in the United States. And what the next CEO is going to have to deal with is looking at a picture where about a year and a half ago, you had about 12% of the U.S. Market share held by Stellantis. That has fallen down to about 8%. So these are some of the issues that are specific to Stellantis that are stacking up, and what has ultimately led to a CEO being, disagreement maybe pushed out early when he was supposed to leave at the beginning of 2026.
Well, a lot of the European autos are grappling, Oliver, with what to do with their electric vehicle. This transition, not just Stellantis, but you look at VW, and I'm looking at the history of strikes there. They're about to go on strike. national rally in terms of this fiscal argument in the budget.
A Freudian slip of who actually
Freudian slip.
Who actually controls the euro at this point? Is it Le Pen or is it Lagarde?
Yeah, to be fair, it was actually Christine Lagarde and Ursula von der Leyen who urged checkbook diplomacy. Christine Lagarde last week said, get your checkbook out. If you're going to deal with Donald Trump, get on side with his tariffs. And we saw this over the weekend,
But
didn't
this
we?
is the thing. What do you focus on? Do you focus on the stutter tariffs or do you focus on Friday when we get jobs data, the first jobs data since that negative imprint from private payrolls impacted by the weather? So we first have to get through a Fed decision before we can even contemplate what tariffs will change to the picture.
And all of the central banks have got to consider that. We had a conversation with Valentin Marinov this morning, and he basically said a lot of the bad news is already in the euro because there's no contagion to the rest of the bond markets. But the surveillance team, they can debate that for you over the next couple of hours.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
At the end of the day, the best fundamentals are still in U.S. large caps.
Everybody's on the same side of the boat, which makes the market vulnerable to volatility.
Everything seems to be going the way you want it to go. But I think there are significant amount of uncertainties.
You're going to get some good results. You're going to get some bad results. And that's going to kind of create volatility in the market.
Once we get a little dose of reality into 2025, I think that's when you want to start to take some risk off.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The last month of 2024, where did all of that go? From good morning for our audience worldwide. Bloomberg surveillance starts right now with equity futures on the S&P 500 shaping up as follows. Just a little bit lower. We're down by about 0.2% as we come into Monday at all-time highs on the S&P 500. The best month of the year so far on the S&P Bramo, going into payrolls on Friday.
And most of the time, December tends to be a good month because people are feeling good. They're going on vacation and it's coming off of Black Friday, which evidently was yet another success. Here's the real question. Do we get some kind of kink in the perfect picture here, given the fact that we do get payrolls, we do get sort of a check in the economy at a time where there still are people thinking maybe we could roll over?
The calendar stacks up as follows. You're all familiar with it. Payrolls on Friday, the estimate's something like 200K. Based on our survey. Then, Lisa, on to next week, CPI. The week after that, the Federal Reserve, December 18th. The take at the moment, the consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause on the 18th.
Yeah, but it's pretty high bar. That seems to be the case. It seems like they're going to cut rates this month and then maybe pause next month. I do think it's interesting that Jerome Powell was not supposed to speak. And then he was slated in to speak this Wednesday at the Deal Book Conference. There are a whole host of different Fed speakers coming out this week. And normally, what else is new? That's what they do. There is this question, though, about whether there is a new message that they're trying to get through in terms of, A, their independence from any sort of political process, and B, the path ahead and what the logic will be behind it.
Tariffs. Can they model tariffs now when they get together on December 18th? They've got no idea, but the market believes that they are just a threat, a negotiation tool. Talking of consensus, this came from Pittachi of Academy. Now the consensus has become that everything President-elect Trump does is just a start to his bargaining. I'm a little concerned that the market has become a little too complacent. The standout quote for me over the weekend, this from Axios. Trump has been telling friends he denied Robert Lighthizer, his pro-tariff China hawk, U.S. trade representative in his first term, a cabinet role because he's too scared to go big. I think we've got to pause.
Yeah.
If you're worried that Bob Lighthizer, Ambassador Lighthizer, is too scared to go big, just how serious are you about tariffs over the next 4 years?
You know, this to me is the ultimate question heading into year end. Last week, we saw the 10-year Treasury yield down some 23 basis points, in part because of Scott Bessent and his belief that ultimately the market would be the check to President-elect Donald Trump, and that essentially we would end up with someone who would be reined in by the fear of a market getting ahead of himself. Now the question is that truly the case? We are just seeing the opening salvos of something that promises to be bigly. And we see that pretty much on a broad scale. So at a certain point, we don't know. This is the euphoria. Can it last another month? Maybe. He's not even in the White House yet, although he is in White House South.
He's in the Winter White House.
Yes, correct. That's
in Mar-a-Lago. And he's already getting foreign dignitaries visiting him, including the Canadian Prime Minister.
Okay. What did you make of that?
Making promises.
Yeah, I mean, honestly, really, of course they're going to make promises. Although I love the sort of counter discussions from the Mexican president and Donald Trump and whether he actually did agree to anything. But all this just feels like it's kissing the ring ahead of what promises to be a moment of a lot of drama come next year, January 20th.
I enjoyed the group photo. Did you see the group photo with the child in the background making the moose face?
That's correct. It seems about how we all feel
enjoyed that as well over the weekend. From New York, welcome back. I hope you're having a wonderful Thanksgiving here stateside and a long weekend as well. Equity futures as we wake up Monday morning, just a little bit softer. We're down by almost 0.2%. In the bond market, Lisa was talking about yields. Yields are a little bit higher today, up by 4 basis points. The 10-year 421. 10. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth, expecting the rally to continue. Terry Haynes of Pangea Policy on Trump's warning to BRICS nations. And Tom Narayan of RBC as the CEO of Stellantis steps down. We begin this hour with stocks at record highs following the best month of 2024. Cameron Dawson of New Edge Wealth writing, can't fight the moonlight through the end of the year. Seasonality remains strong and the trade remains robust, supporting markets continuing to press higher through December. Cameron joins us now for more. Cameron, good morning.
Good morning.
And a belated happy Thanksgiving. It's good to see you.
Happy Thanksgiving.
How much momentum do we have going into year end?
Well, certainly the chase is on, and we can see that in how markets are trading with this strong resilience, still a very powerful uptrend. Now, that doesn't necessarily mean that it can continue this robustly going into 2025, but we know this seasonality just continues to drag people into markets. We have positioning that's in the about 85th percentile using the Deutsche Bank consolidated positioning, suggesting there's still more room to draw people in. Then you start to have to contemplate when you hit January, February, stretch positioning, stretch sentiment, stretch valuations, stretched earnings expectations, but that's probably a 2025 problem.
Not too stretched, though. based on what you've said and what we've seen so far. In November, the scores up 5% on the S&P, NASDAQ 100, similar move. The Russell up double digits, up almost 11%. Can that move continue? Maybe not at that pace, but can the outperformance, relatively speaking, on the small caps continue?
It has to be supported by earnings. Nowhere in this market is there a higher bar for earnings in 25 than small caps. You have 50% growth based on current consensus. So right now, this is all about a positioning chase, people being underweight small caps, having to show by the end of the year that you're at least neutral. The question is, once you get to neutral and you have seen those flows into small cap ETFs be aggressively strong, that does set you up with that high bar of earnings and you really have to deliver. Also note, small caps aren't that cheap. You see them trading at about 27 times forward on the Russell 2, which we know is skewed by unprofitable companies. But I think the point is you have to see the earnings deliver. But for now, we're in that moment of the suspension of disbelief.
Suspension of disbelief, which could potentially go through December because of the holiday spirit and the fact that December tends to be a good month. Did we learn anything about consumers over the past 4 days other than the American is still the ultimate consumer?
Well, we see this consumer being extraordinarily strong. I braved the outlets in Orlando on Black Friday and saw lines out the door, 100 people deep to get into luxury stores, which just suggested that the consumer still has this willingness to spend. Now, I think it's misleading to talk about the consumer in aggregate because we know that they are so bifurcated between the lower income and higher income consumers. But the higher income consumer simply punches above their weight. They make up double their weight in the overall path of consumption, which just is to say is that because that consumer still remains resilient, they're less sensitive to inflation, less sensitive to interest rates, they've been the one pulling this higher. The question is, can that momentum continue in 2025?
There's also this question about the Trump trade and whether it's the same this time around. John was asking about whether small caps can continue the outperformance. And I was looking at a study over the weekend showing that actually smaller businesses are more likely to be affected by tariffs negatively than some of the larger businesses because they don't have the heft to negotiate. So you have to wonder if the Trump trade is really going to have the same kind of contours as it did back in 2016, because we're at a very different starting point.
Unless we forget that yields are that much higher. And that is the key other part of the small cap trade, which is that there is an implicit expectation in small caps being strong of yields coming down because of refinancing, because of the degree of floating rate debt on those balance sheets. So if you are in a world where tariffs do keep inflation higher, at least for goods prices, then you are in a scenario where you have yields that remain higher for longer. The Fed maybe not cutting as much. And then you have to question, it's not just about the end date caps, it's about the balance sheets and the issues you could have with balance sheets if interest rates do stay higher.
So this gets us to CPI and the payrolls report as well. Let's start with inflation. Do you see good reason to continue to bet on moderating inflation through 2025?
If we look at the big buckets, at least today, of wages that continue to look like they are moderating, look at leading indicators like JOLTS, look at housing prices. Those in the active, the current rent indices don't suggest a reacceleration there. Then the wild card is energy prices. And energy prices falling have been the key boon for consumers over the last 2 years. You're out of the point where they're falling down 20% on a year-over-year basis. They're about flat. The question is, do they move higher? And that would be the key question mark going into next year, is that can you continue to see energy prices be a tailwind?
The key question going into December 18th is whether the dots in the dot plot move higher as well. Yeah. How does the SEP change in 2 weeks' time?
Well, we think the dot plot's going to be relatively hawkish because you have about 100 basis points of cuts marked down for 25 in the September dot plot. So we think that Powell and he says something different, or we hear from the Wall Street Journal and they say something different. But we do think that that dot plot will show fewer cuts. We're thinking 2 cuts likely over the course of 2025. And then the S&P raises the question of what do they do with growth? Growth has remained more resilient. There could be upside to the GDP forecast, and then likely see some stickiness within inflation as well. Because if you look at the S&P, they have 2% kind of going out over the course of the next few years. We're seeing inflation remain stickier, which just suggests that that has upside as well.
So no one's listening. Why do you think Jay Powell is actually speaking on Wednesday? Because this is sort of new, right? It kind of came out of the blue. They agreed to speak at the Deal Book conference. So what's he going to say?
I have no clue.
Oh, come on. Like, yeah, just come on, extrapolate out. I mean, honestly, there's sort of this slew of different Feds. I'm just wondering, okay, What are they going to speak? What are they going to talk about? I mean, they've been talking all this time, right? Waller, Williams, Goolsbee, Kugler, Powell, Musalem, Christine Lagarde also kind of getting in the mix. And I'm looking at Bowman, Goolsbee, Hammock, and Daly. They're all lined up. So what are they going to say?
I think that they are going to acknowledge that this need and urge to get down to a phantom neutral rate, whatever that rate may be, has a lot less urgency given where economic growth is and given where inflation is. When Goolsbee was talking about hundreds of basis points of cuts to get to neutral, in the face of economic conditions, financial conditions that remain near 2021 easy levels, we've been raising the question of why the urgency, why need to cut so much? So we think it'll be acknowledgement of the resilience and growth, but here's the plot twist. Economic surprises are actually starting to turn lower. That's the reason why yields are falling, we think. It's less about the narratives about fiscal prudence, but that economic surprises are starting to bring those yields lower. So it could be that they're saying everything is resilient just at the point that we start to see a slowdown in growth.
So that's what I wanted to pick up on. Is the Fed still driving the bus? Or is it sort of the economics, or is it the politics, right? We're in this sort of headline whack-a-mole. And it seems like the market's like, we got this game. We're going to ignore the headlines because that's what seems to work this time. And so people aren't taking things too seriously when things come out like 100% tariffs and you're dead to me. But there's this question going forward about what the focus is going to be for markets. Is it going to be the Fed? Is it going to be economic surprises? Or is it going to be some of these political headlines?
Well, we think that economic surprises is what's going to be whipsawing the long end of the curve and the short end of the curve, if that matter. When we got up to about 4.4% on the 2-year, you were effectively pricing out any interest rate cuts over the course of the next 2 years after December, which said to us that this was a market that was not pricing in or contemplating any chance of recession. And that then makes fixed income a very interesting hedge, because if you're not pricing in any chance of a slowdown in growth, it means that if you're trying to hedge against a slowdown in growth, that's a pretty good place to do it. So we would watch those economic surprises really closely. That likely matters more than these rather fleeting narratives about fiscal prudence and tariffs and all of these questions about what's going on in White House South.
Bond yield bouncing this morning at 4 basis points. White House South or Winter White House? What are we going with?
I don't know.
White House South?
I actually would like to see the equivalent of the Oval Office in
Mar-a-Lago.
Mar-a-Lago. And I was actually looking for someone to have done that research, but I couldn't find it. So if you have it, please send it.
Cameron, it's good to see you.
Good to see you.
Cameron Dawson there of New Edge Wealth. If you are just joining us, welcome to the program this Monday morning. Equity futures down by close to 0.2% with an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Joe Biden has signed a sweeping pardon for his son, Hunter Biden, reversing his previous stance that he would not use his executive powers to aid his son. The president wrote in a statement, quote, "The charges in his case came only after several of my political opponents in Congress instigated them to attack me and oppose my election. No reasonable person who looks at the facts of Hunter's cases can reach any other conclusion than Hunter was singled out because he is my son, and that is wrong." Stellantis shares lower in the Italian